balances at 1st October, $1,000 cash and 2,500 in the bank account. There are no balances on any other accounts. There are no balances on any other. She has the following transactions for the first week of October 1st. Jana put her own money into the business bank account. 8,000. Bought goods for resale on credit from Dev. Paid rent by debit card 1,000. Sales on credit to Yash. Cash sales 700. Paid cash into bank account 500. Paid Dev money owed by check after deducting a 5% cash discount. Paid stationery by cash 30 bucks. So prepare the necessary accounts and cash book to record the transactions. Balance the accounts at 7th October and bring down the balances. So first let us make out list of ledger accounts. Okay. So first let us prepare a list of ledger accounts. So Jana put her cash account. So obviously opening balance cash account.
We have to add on
bank account.
Whatever the amount is, we have to
or cash book we can say. So this will come in cash book. Okay. So this is
we have to enter in sales.
So even discount will come in this.
So sales journal is different.
But discount account also we have to prepare. Okay then. Jana put her own money into the business bank account capital.
Total amount we have to enter in sales returns account.
Bought goods for resale on credit from Dev, purchases and Dev.
Total.
Paid rent by debit card, rent account. Sales on credit to Yash, sales at Yash.
Sales account. Total amount.
Sales and Yash. Put cash into bank account contrast so that will go to cash book itself. Paid Dev money owed by check after deducting 5% cash discount. So you have paid, so you have received cash. So discount received.
Purchases.
Total discount
Will be entered in purchases
received account. So Dev and it is already paid for stationery by cash. Stationery.
Total amount.
So how many accounts we need to prepare? 1, 2,
We entered in
3,
purchase returns.
4, 5, 6, 7,
Total will be. So the supplier's name.
8.
Supplier's names. So the details.
And one cash book.
Suppose this is Mr. A.
So cash book, this is ledger account as well as
Post it to the respective ledger account.
So this is. So first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you have not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all those things. So you can focus on this and
corresponding entries.
you can get a clear picture of what has been done till now. So
Respectively. So
let us
separately
start.
we have to record. But total of sales we have to record to sales account. Only one. So
1st October cash
aggregate will be recorded in
1,000, 2,500. Bank 2,500.
so no in
1st October
not recorded
October 1
entries again in sales account.
cash
The total of sales journal will be recorded in sales account, whereas customers accounts will be
1,000 cash
independently
2,500.
recorded in the customers respective customers.
1,000
Same
cash
rule applies for even for sales returns.
2,500 in bank.
So remember,
So it is balance
sales
product.
journal is different, sales account is different, and total amount of sales or sales return, purchases return, only total is recorded in either sales account or sales returns account or
Yeah.
purchases account or purchase returns account. aggregate will be recorded.
Jana put her own money into the business bank account. Own money. Okay, own money is nothing but capital. Own money is nothing but capital. So Jana has put her own money into the bank account. So 8,000. So money is coming in bank. So money is coming in bank. So
very important.
And what did this is
So
first?
often asked in MCQs, so you have to be very clear. So then,
So it is
similarly,
on first itself.
sales register,
On first.
sales return.
So money is coming in bank, debit bank account.
So,
And who is the giver? Who is giving it? So it is capital.
so then, cash.
So complete the entry. We have right here. October 1.
We have discussed the sales register, sales return register, purchases register,
8,000.
purchases register. So when we receive and pay, we record in cash.
This is bank.
Cash and bank columns.
Yeah, received through bank.
Cash book. So the format
Next.
cash book we have to record in this
Bought goods for resale on credit from the 5,000.
parts. So debit part and credit part. So debit part date,
Purchases.
from whom the cash is being received, folio, ledger folio,
5,000.
number, discount. So there is one column for discount also. So when we receive money, we may allow some discount. So that discount will be recorded here.
Purchases.
We receive cash, we record here.
5,000.
We receive checks, we record it.
So what date?
Similarly, date,
Date is on 2nd, October 2nd.
discount. So when we make the payment, we may receive some
Okay.
discount. So we record the discount.
So
here.
purchases account
If
debit.
the cash, if we pay
They
cash,
account
we record
credit.
here.
They account
If
credit.
we pay by check, we write it in bank column.
Over.
So very important this
So
particular
again this
format.
year right there.
So very important question.
Again
So
this
often
year
asked
right.
in AS level exams, IGCSE also
So
this
that
question
is
is often asked. So cash book a very easy one. So
Next.
next you have to remember the format and just
Pay trend by debit
look
card.
at the figures. So
So
very easy.
debit card is obviously money will go from
Format is
bank.
very good. Right?
So debit card is linked to bank
This
account.
particular
So that's why money will go from bank. So we consider it as bank payments.
it's very important.
Rent.
So format oriented.
1,000.
So format is
Debit card, bank, rent and bank 1,000. What date it is? Second.
last general or general properties. So journal. So the format of journal is like this. So whatever is debited to it, whatever.
Second.
So this is also from here we just write it as for reference. From here we are recording
Money has gone out from bank.
ledger accounts.
Yes. So when the
Cash
amount,
also.
money has gone out from bank.
Record the entry. So
So it will
from
come
here we
here.
post it to.
So next. So we have to record it.
So
The opposite side in rent.
this so it's very simple
So rent account.
it's a simple lesson and but basically to understand accounts you have to do all this, you have to understand all this, otherwise understanding will be incomplete.
Second. So through bank we have made.
You can,
So rent account is in the
next class will
nominal account always is in
this. So we'll work out on practice exercise.
sales are paid to Yash.
Questions will be more
Sales and Yash.
because we just need
Sales
to
are
know how
paid
to
to
record
Yash.
it
Sales.
and how to post it.
What date?
So until then, bye-bye.
Fourth. Sales are paid to Yash. Sales are paid to Yash. What is the amount? 3,000. Credit. Sales is always credited. So Yash. So opposite side. Yash account will be debited. Why are we debiting it? Because we have sold the goods to him. Because Yash is the receiver, account that receives. Yash account receives. So debit the account that receives. Next. So cash sales 700. So what is happening? Sales is happening and cash is coming. What date? sales 700. Fourth, cash sales. Cash sales means money will come in cash account. Sales. So we are receiving money in cash through sales. So sales account will be credited on the opposite side. Sales account. So cash, how much? 700. So what did? 4,000. Paid cash into bank account 500. Paid cash into bank account 500. What date? 5th. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. What date? 5th. Cash is coming. Paid cash into bank means money is coming in bank, but going out from cash. So here it will come. So it is cash payment and bank receipt. So October 5th. Same date, same line. So against this, so money is going out from cash and coming in bank. So against this, your trade bank. So against this, your trade cash. Next. Paid the money owed by check after deducting 5% cash receipt. So whatever money you have to pay to the. So we have bought 5,000. Goods worth 5,000. And we have to pay after deducting a discount of 5%. On 6 we have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid there 250. Discount received is 250 and money is going out from bank 4,007. So to whom we have paid? We have paid to Dev. So to Dev when we have paid on October 6th.
So if business normally deals with persons,
How we have paid? We have paid
so
bank 4,550.
So either we receive from them or we pay.
Discount received.
Business will either receive or pay or give to the other business. So the rule is debit the account that receives or debit the receiver. Debit the receiver. So some others they write this way. So debit the account that receives.
We have to transfer to discount.
David Hopkins and all they use the
Received account.
that is debit the account that receives the right. So
Yeah,
some other authors they write
discount received.
similarly for credit items they write credit account that use
What date?
or credit the gift. So some others
Only
write
about
one day.
6th.
So the rule is ultimately the same.
October 6th.
It is ultimately the same. Real account.
Okay.
What is being received. So in case of real account, when we
So we
receive
have to write. So next.
so then debit what is being received or debit what comes in.
Paid for stationery by cash. 30.
Or paid what goes
Paid for stationery by cash. 30 is what?
So this is the rule for real accounts.
It is on 6th.
So you know what is real accounts. So when we deal with cash or accounts.
Paid for
So
stationery
nominal
by cash.
accounts, the rule is debit all expenses and losses, credit all incomes and losses. So nominal accounts and expenses and so it's all. So accounting So when we are recording accounting equation from the accounting point of view, we see from accounting equation point of view, assets normally have debit balances, liabilities and capital normally have credit balances. So remember, assets and expenses normally are debit balances. Liabilities and incomes are normally credit balances. So even if it is noteworthy that capital
cash, so money will go.
It means capital liabilities and incomes are normally credit balances.
Stand out and build in-demand Gen AI skills with Coursera. Reshape the way you work with AI and take your career to the next level. Explore more at Coursera.org.
Here, towards 6. So through cash, we have it stationary. Cash stationary account is always debit, and we have to credit cash. So because cash is going out, debit stationary with 30, cash. So now we have to balance. How do we balance?
Remember,
so what is the most important account here is the cash.
I train you to pass, to succeed, to clear your exam.
So basically what you have to do,
marks to excel in your studies.
you add all
So
this.
understand.
So 2500 plus 8000 plus 500 is
It's okay.
9 plus 10,000.
Non-one classes.
And this side it is
difficulties
1000
students.
plus 4750. It is 5750. 10,000 minus 5750. So what you have to do? You write down in pencil here. Write down
Understand how the students
what you do.
I feel their pulse and
You write down in pencil here. You write down in pencil. Here also you write down in pencil.
making the student understand the subject and
so if you write down, you will get 5,750. Here we get 10,000.
studies is my
So 10,000 minus 5,750. You have to subtract 1 from the rest. So 10,000
won't understand anything.
minus
Lot of
5,750
students
is
are pursuing online classes.
1,000
Lot of students who are taken distance learning classes
4,250.
face very
So what you have
difficulties
to
in
do?
understanding the
4,250. You have to write
So,
here.
they try to understand, but most of the
You
teachers
have to write here. So that total on both the sets becomes same.
have
So
different methodologies
this side is also 10,000.
and understand.
This side is also 10,000.
Myself,
And this is called balance carried on.
but having understood the subject as a common sense,
So balance carried on. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. You write down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530.
managerial
1,170. So you write down 1,170.
advanced management accounting,
You write down
financial management,
1,170. So that the total on both the sides become equal.
business
Okay. So this side is also same. This side is also. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts because they will be carried forward for the next accounting period. So cash capital 8,000, balance carried down is 8,000. So this will be carried down, two balance carried down. So will become by balance brought down. By balance brought down 8,000. So only the dates will change. So here it will be October 7th. Here it will be October 8th. Or October 7th. So balance brought down. So then. So purchases account 5,000. So there is no need to balance. This is 5,000 itself. You have to just this will directly go to the trial balance. So they will account here also 5,000. Here also 5,000. So there is no question of balancing here because the total on both the sides are same. Rent account. This will straight away go to trial balance. You have to write this as it is. Sales 3,700. This will go to sales account directly to trial balance. So if you want, you can just write the total. So this will go to trial balance. Yes, account. So balance carried down. Balance carried down is 3,000. So this will be brought down again. Balance brought down 3,000. So discount received is 250. This will straight away go to trial balance. Stationery is 330. 30 is straight away go to trial balance. So this is the end. This is over. What else we need to do in this? So balance the accounts at first and bring down the balances. Okay. Bring down the balances. This is how you have to do this balancing. Yes. So okay. So we'll catch up in the next class.
Cash transactions. So just compare your balance. So Paris started so what we are supposed to do here all the financial transactions for Paris. Remember the necessary ledger amounts and post the following financial transactions. All financial transactions. Revenue is nothing but sales minus sales return. So we are supposed to open the necessary ledger amounts and close the following financial transactions. So first what we'll do, we just make a note of all the amounts. So just the debit and credit minus purchase return plus carriage invoice. It becomes easier for you to prepare minus closing inventory. So that will be cost of sales. So when we subtract revenue, cost of sales from revenue, we get gross profit. To that gross profit we add. For this start business, then the income doesn't include that. So what is happening? So other income is like discount received, interest received, so rent receivable. So all other income which is not other than operating income. So from that we may subtract expenses. What are the expenses? Like expenses incurred, which are like salaries, wages, rent, postage and telephone, all those expenses are included. So that will be profit or loss.
बिछाना कान डाल ले इसका में डाल लो बिछाना रूम में कौन सा हमारे रूम में हम अम्मी मासी अम्मी खाला हॉल में सोते तो मैं भी मैं रूम में सोना करते तो वो वहाँ जगह 3 जन कैसा सोती है मैं भी जगह रूम में सोती हमारे रूम में हाँ सही तो नहीं होती ऐसा ऐसा ओके हाँ हाँ डब्बे ही ना आपको देखिए हाँ वो डब्बे ले लो कोई खरीदा नहीं है वैसे हाँ हाँ ले लो वैसे लेके क्या नहीं छोटा काम
So that's why you have to be very active. Okay, hyperactive. Otherwise, getting very good grades is not at all possible. Okay, so that is remember this. It's very important. So now let us continue. Sold some goods for 50,000. So what is just when we sell what happens? Income comes. So there are two items. So sales and sales returns. So that is what is the revenue. Sales is the revenue. Sales income, sales and sales returns. So how much it gets? So refund money to customer for goods return. So goods return, refund money to customer. Sales return. Sales return. Sales return is reverse of sales. Sales. So we have to pay. Oh. So return goods to supplier receives refund. So supplier they are refunding. So you need to write this. What is purchase returns? Purchase returns is the opposite of purchase. Purchase. So what is happening? They are getting refund. So money is coming back. So Faris takes 400 out of the bank account per person. So what is happening? It's lots. So now what we have to do? We have to prepare like that. So let us prepare. Okay. Ledger accounts, bank ledger account, cash. So let us do it in a proper way. Try to follow the same rule when you are writing. So let me just write it again. So always you have to write the note as a subject. So one presentation or consent. So all the steps should be as it is. All the steps should be very formal, very neat and clean, so that what is happened? Start and change everything. Please note to explain to the important thing. First of all, write that bank account is debited or credited. Bank account is debited. Bank account is debited. So what we have to do in lectures, we have to write this actually. Here it is not supported even if you are not given. So I am just writing here for your. This is the thing. Bank account is debited. So remember, sir, bank account. So what most of the students they get confused is something will be written here. They think this is debited. No. This bank account is debited. So bank account is debited and which account is credited? Which account is credited? Capital account is credited. So capital account is credited means capital account. So capital account is capital account is credited. This is the capital account is credited. See, bank account is debited, capital account is credited. So now here we have to write why, how, because of capital. Okay. So it's always multiplication of the same, always you write multiplication of the opposite. Cash is debited with capital. Bank account is debited with capital account. Capital account is credited with this will come here. This. So below the bank account is debited, you need to write with capital. Follow, understand, remember, whatever. Always this is completion of the indication of sequence. So when we write here, inventory at first April, we write here. Next, bank account debit completion. Again, bank account is debited. Once again, bank account. See, what I advise you is as soon as you see the question, you can try answering the question on your and then you can cross check with the solution here so that you can answer. You can be sure that whatever you have done is right. Visha's account will increase your confidence. So your confidence. Visha's account will help you prepare for
whatever we have paid. So capital account is always created. Capital account is created. 3409. So Prisha's ledger account. She has given loan, so her account is created. Equipment ledger account. It is an asset. It is debited. So we have paid by the hand. So it is complete. Entry is complete. So rent ledger account. Because rent is an expense. Wages ledger. So it is wages ledger account. Wages ledger. $600. So similarly, purchase ledger account debited with $2. Sales ledger account is debited with $50. So sales return ledger account is debited with 300. Purchase returns ledger account is debited with 500. That is how it is. So this is according to the entries whatever we have written. Entries whatever we have written. Because when you purchase, we get the result this. First we have to write what is then file, finish the complete. So this is how it is. So the final answer. So calculating the ledger amounts, the entries will be. Normally these are the line items. Normally, okay, purchases minus purchase returns, carrying inwards. So from that we need to subtract inventory on. Just check whether with your answer, whether everything is right. Inventory. If everything is right, your answer is correct. So very simple. You don't have to do couple of answers for this. It is very simple concept, but remembering the logic is very important, so that you don't commit mistakes in understanding the concepts. Okay. So we'll catch up in the next class. We'll do put it in brackets so that you don't mess up again. A lot of students they mess up doing calculations. If they don't, if you don't put the numbers minus or something like this, you will just make wrong calculations, or ultimately the figure will go up. So you know, very important. So dear friends, let's continue with activity 1.4. So this is David Hopkins' latest book. This is from David Hopkins' latest book. Yes, this is David Hopkins' latest book. So complete the entries for the following table with information taken from the accounts of a trader. So name of accounts to debit, name of accounts to credit. So what you do basically, you start with your own. You see the question and answer yourself. Then you can compare with the answers whether you understood or not. Okay, paid rent by check. So what is happening? Paid rent by check. Money is going out. So money is going out means credit what goes out. So credit what is given away. So it is bank. So money is given. So bank. So bank. So we have to write here bank. Paid rent. So rent is an expense, right? So rent is an expense. Debit all expenses and losses. Rent account. Rent account. Okay. So this is gross profit. So this is how it is. So to this we need to add other. So postage and stationery paid by check. Again, money is going out of bank. So postage and stationery is an expense. So debit. Postage and stationery only you can. So postage. Question for practice. Try to practice this. So here the line item. So every why? Because money is given. Wait, what goes? Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or whether it is given, whatever. So money will go out from the bank. So that you don't miss out any line item. So here it will be telephone. So that is another part, but this is the starting point. So always you have to start with this. Then so heating and lighting bill paid from the bank account by standing order. So heating and lighting. So heating and lighting expense. So practice this question. This is very good question because lot of line items are saved.
Paid wages by check. So what is happening? Wages account by bank. Why? Because money is going out to this bank. Rent received directly into the bank account. So what is happening? Your money is being received. So bank account will be debited because money is being received. Bank account will be debited. Rent received. So rent received. So you specify because rent can be paid. See here, rent is paid. So here rent is received. So or you can write rent expense account or rental income account you can write. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense. Paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So paid bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received we can interest received. So again interest can be received also and paid also. So that is why we have to specify whether it is received or okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening here. Drawings. So money is going out from bank, right? But out of bank account. So bank account. Loan received from a friend B. So what is happening? You are receiving loan from a friend. So all the transactions are assumed they are through bank. So you write money is being received in bank account. So but who is giving it? It is Lee who is giving. So credit the giver, credit the account that gives. So it is the Lee who is giving. So Lee account, bank account, Lee account. So money is coming in bank and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When we repay the loan, Lee will receive. So Lee account will be debited because debit the account that receives. Okay. So be specific, be clear which account will be debited, which account will be credited. You have to be very clear. So then purchased, purchases paid by debit card. So whether it is debit card or check or whatever, always it is money will go out from bank. So purchases upon debit to bank. Purchases upon bank account because money will go out when you pay out from bank. Debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank the take. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit all incomes and gains. Revenue. Return goods to supplier and bank the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank because money is given away to bank account. So refund money to customer by check. Oh, sorry. So see, return goods to supplier and bank the refund. Return goods to supplier means what is happening? You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no? Yes, but return goods to supplier and bank the refund. And bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns, correct? No, it is purchase return, not supplier. Okay, so this is not important. This is not relevant. It is purchase returns. Purchase returns. So refund money to customer by check for goods return. So it is, this is sales return. So when we have sold the goods, but we have received back. So it is exactly reverse of sales. Sales returns. Sales return, and you will credit bank because money will go out from here. So carriage inward paid by check, whether it is carriage inward or carriage outward, money always go from bank account. So carriage inward, we have to specify whether it is carriage inward or not. Carriage inward. So carriage outward. So carriage outward is also an expense. Whether it is carriage inward or outward, it is always an expense. So money will always go from bank. So we have taken all the 15 items. So that is how we have to check. Okay. So when we have to cross check, we have to put the things like that, and then we have to cross check. So here it will be refunded goods to supplier and bank the refund. So we have received the money, bank account will be debited, and purchase returns will be paid. Purchase returns are opposite of purchases. So purchases are debit, right? So purchase returns are always paid. Okay, purchase returns account. So this is how it is. So this is activity 1.2. So we'll continue in the next class. Dear students, welcome. So today we'll discuss practice questions from cash transactions. David Hopkins latest book. So before seeing this complete video, what you can do is you can just have a look at, you can try solving this question on your own. So which of the following financial transactions is most likely to require a debit entry? What is debit entry in the bank book? What is being received? So what you will receive when you purchase, you will not receive. When you rent receivable, obviously you will receive. So it will be debited. Sales returns, you don't receive. Wages, you don't receive. So this is the thing you receive. So this is the answer. Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? So money will go out. Obviously, money will go out. Create a bank account will be created. Money will not come in. So money will go out. So then, when you are selling, Amir got goods, bought goods. When you buy, you pay carriage inwards. So this is the one. So see the. A trader takes money from the business bank account for personal use. Which entries record this in his books? So money from business bank account for personal use, which entries record this in his books? So trial balance has been prepared for Samara for personal use drawings. So money will go out. So a seller of women's clothes at 30th April. So it cannot be we receive when we receive you debit bank. When when we receive a debit bank. So obviously when this cannot be the entry, so drawings will be the correct entry. So these are practice questions for David Hopkins latest book. Okay. So what you can do is you can just have a look at the next problem. So below are the financial transactions for Mira's new business. Open is necessary. Ledger accounts and post the following financial transaction to them. All transactions use the bank account. Mira commenced business by paying 20,000 into her bank account. Mira then had the following financial transactions: purchased machinery, paid rent, bought goods, so paid carriage inwards, sold goods, paid for heating and lighting, received rent, bought more machinery, bought more goods. So what you can do is you can try working out this question on your own, and suppose you have any doubt, or if you are unable to do it, so you can leave a comment in the description, in the comment section of the video. So you can, I will just help you work out. So I will work out the problem and I will upload. So till then, have a good day. Bye.
Dear friends, welcome to Shaisha's virtual class. So today we will discuss activity 2.1. So this is David Hopkins' latest book, book. So we'll start. So below are the financial transactions for Max business, personal transactions to the ledger accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So it would have found one part, the other part would have been easy. But here, it looks somewhat. It is somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So, basically, we need to know the personal account. The personal account. So, whether this account is receiving or giving. So, we need to know this. So, purchase goods from Tina that cost 2,000. So, when we purchase goods from Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So, what you can do is you can try working out this question on your own. So, then you can compare with the answer. So, first let us make a list of accounts that are necessary. So, we need to prepare Tina's account. So, we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So, purchase account, Tina account. So, then sold goods to Ali. So, sales account, Ali account, return goods to Tina. So, return goods to Tina means we return only those goods which we have purchased. So, it is purchase returns. Purchase returns. Then, purchase goods from Lim. purchase account is already there, so lim account. Sold goods to Homer account, because sales account is already there, Homer account. Return goods to Tina, purchase returns again. So Ali sold, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales returns. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 ledger accounts. Basically, we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be always date should come. Always date. Don't miss to put the date and the currency. Date and the currency. Always. Okay, write always the heading. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased? And it is on October 1st, 2000. October 1st, 2000. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So the thing that if they have debited there, no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit, this side is always credit, always date. You have to write always date, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused again here. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you written 2000, here also you written 2000. See, debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what one should be debited, the other account will be credited. So this is very important. So next time, coming to the next. Sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. Ali account. So how much? What is the value? What is the date? Always remember to put the date October 2nd, 300. October 2nd, it is always credit. This side is always debit. So, how much? 300. See, sales is a revenue. Sales is always created. Freight all incomes and gains. Sale is always created. Sale account is created by Ali's account. So, with a debit to Ali account. With a debit to Ali account. So, this is what it means. So now Ali account will be debited. So, what date? October 2nd. Ali account will be debited. So, Ali account will be debited. So, sales. So, now one more thing. What is it? So, now here we have to see what is Ali doing here. So, what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in rules and accounts. So, Ali receives. So, that is debit the account that receives, credit the account that gives. So, this is the main thing you should understand. So, very important. Yeah, very important. So, a lot of students they get confused with personal accounts. Rest of the accounts they do easily. So, nominal accounts expenses they write off as an expense. The income account they write off. A revenue account they also write. Assets account debit what comes in, credit what goes out. That also they write. But in personal account they miss. They get confused. They think from the point of view of max business, but they try to think what max is doing. What max is doing, whether max is giving, max is receiving, or something like that. No, actually, you have to see what Tina, what position is in Tina. So Tina gives, Ali receives. So this is what, this is very, very important. Okay, now what has been clear to you. So now it is everything is easy. So then the account, the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost 200. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited with 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200. On what date? On 4th October 4th. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open one account called purchase returns. This side is always debit. This side is always credit. Always in dollars. Always in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. We have to credit. So this is how you have to remember. There are so many ways of remembering things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns 200 with a debit to Tina. This is how you have to read and you have to understand. You have to understand accounts. Very important. So that the logical flow of concepts is very, very clear. Okay. So very, very clear. Logical flow of concepts is very, very clear. Now next. purchase goods from Lim that cost 2400. So Lim is another person. So again, what is Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim gives. So that's why we have to credit Lim. We have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases amount is already there. So we have to just write there. Purchases amount is already there. We have to write there 2400. What date? Date is very important. 8th. No, 8th.
Welcome back to Shasha's virtual classroom. So this is the step
From whom? From Lim, isn't it? Yes, Lim. So you have to write Lim. So purchase account is debited with Lim. Purchase account is debited with into Lim, and Lim account will be credited. It is Lim account. You have to prepare Lim account.
which of the following should not be recorded as a
Lim account. You have to
delivery cost is an expense discounted
so October.
So which of the following is included in the calculation of cost of sales? Carriage inwards is included, yes.
2400. So why are we crediting Lim? Because we purchased from Lim.
So the initial profit for the year is
Understood. This is how it is. This is how you have to understand the concepts. Very clear. Very clear. Now it should be crystal clear. Now let us move to forward. So then, sold goods to Homer for 1100. Sold goods to Homer. So when we sell, obviously Homer will receive. So Homer is the receiver. Account Homer receives. Homer receives. So Homer receives. So Homer account will be debited. Debit the account that receives, right? So Homer account will be debited and sales account will be credited. Sales account is already there. So we have to prepare Homer account and we have to write in sales account. So Homer account and sales account. Homer account. Homer account.
so discount received. Discount received is other income. So which increase
So Homer account will be debited. Why? Because he is receiving 1100. What date?
sales return. Sales return is reversed.
9th. October 9th. 1100. October 9th. 1100. Homer account is debited. Why? Because we have sold him. Sales. Sales. Homer account is debited with sales 1100. So now Homer account is debited. Sales account is already there. So a sales account we have to write now. We have to write it in sales. Homer account. October 8th. Homer account. 1100. Is it clear? So this is how it is. Yeah. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10th. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina. Where is Tina? Tina. Purchase returns Tina 100. So Why we have debited? Purchasing costs. So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, 11th, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver. He is the giver of elements. Why are we crediting? Because of sales returns. So now sales returns. One more account, sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount will be here and and it is on 11th, October 11th. And what is the amount? Sold to Ali 3. You have to write 300. Ali 300, sales returns 300. So there is no more. So he has returned everything. So sales returns amount 300. We have to debit. Sales return account will be debited with Ali's account 300. So this is how it is. Okay. So next, this is activity 2.1. So now what you can do, you can try working out activity 2.2. So below are the financial transactions for Penn's business. Post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods from team that cost 5,000 less trade discount of 15%. So the sold goods to leave for 1,000. So return goods costing 500 less discount to Ting. So purchase from V that cost 4,800 from trade discount before trade discount of 20%. Paid Ting all money owed. Paid V for goods bought on 15 November. Received full payment from V. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. You can read the book and you can understand most of it. But let me just explain to you in layman terms, like how you need to understand. Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2. Credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Peng or whatever. So business, post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Ting account, Ting account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return discount to Tinge. So again you are returning the goods. This is returned goods. So you are returning to Tinge. So who is Tinge? So it is he is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is a 45. So 45. 515 is a 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct now? 15 is a 45. So 55. 55. Okay. So purchase goods from V. So again purchases. Purchase account is already there. So V. So cost 4,800 less trade discount of 20%. So this should be recorded at 4,800 minus 20%. So 4,800 minus 20% is so 48. $3,840. So 3,840. So you have to record it at 3,840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you are paid to Tinge. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from Lay. So that will also be recorded in bank account. So how many accounts should we open? 1, 2, 3, 4, 5, 6, 7. We have to open 7 accounts. So first you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 40,250, 4,250, because purchases is an expense. So expense account is always debited 4,250. So date always you write the dollars. Amount we have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see, purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So
Suppose if it is a large company, small items may be written off as an expense. Small items may be written off. But because if it is a small company, then small items are also can be recorded as
account will be credited. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next. The entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases.
So you cannot postpone or prepone any expenses or incomes or assets or liabilities from one period to another period. Recording it from one period to another period. They should match.
So next. Sold goods to Lee for 1,000. Sold goods to Lee. Sales and Lee. Sales account.
What is prudence principle? The prudence principle says that all probable losses should be accounted. All probable or prospective.
Lee account.
Prospective losses should be accounted, whereas all probable
Sales account and Lee account. So how much is sales? Sold goods to Lee for 1,000 and November 5th. November 5th. 1,000.
So according to that, all probable or prospective items,
November 5th.
expenses
1,000.
or losses, they should
Credit to sales because sales is an income. So credit all incomes and gains. So 5th. So Lee, because Lee is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1,000. Why are we debiting Lee? Because we have sold him. Sales. So we have sold him. So debit, credit. Sales account will be credited because it's an income. Lee account will be debited because he is the receiver of the goods. Okay. Then comes next.
they run, they are intended, they have been started with an intention to continue forever. Okay. Very important concept.
Next. Return goods costing 500 less discount to Tinge. So we are returning the goods worth 500, but after discount it is 455. So return the goods means these are purchase returns. Tinge account is already there. Purchase returns, Tinge. So purchase returns. So purchase returns account. Purchase returns account.
From the day one, we consider them as assets and we record and we even charge the depreciation. So here, the legal form is that, legal substance is that the asset
So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to Tinge. We have returned to Tinge. So Tinge. So what we have to do? We have to debit Tinge. Now we have credited purchase returns. Now we have to debit Tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit Tinge. 450. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V, and it is on 15th. 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 November 15th. Purchases account will be debited 3840. 3840. So purchase account will be debited 3840. We have purchased from V. Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase, V would have given us the goods. So November 15th. November 15th. So 3840. So why we are crediting V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3840. So now coming back again, next entry. So always write the dates. Next entry. Paid Tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay Tinge, we have to pay V, and we have to receive from Lee. So received. 20th we have paid to Tinge and V. 20th we have to pay to Tinge and V. So bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to Tinge and V. Tinge. How much we have to pay to Tinge? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to Tinge. So we have paid 3795 to Tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to Tinge. We have paid 3795. So we have to pay to another person, we have to pay to V. We have to pay to V. So let us see, we have to pay to V. V, how much we have purchased? We have purchased 3,840. So obviously we have to pay him 3,840, and it is on November 20th. November 20th, we have to pay him. So 3,840 we have to pay. So what account will be debited? Bank account will be created. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away. 3,840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee. So we have received, what date we have received? We have received on November 25th. November 25th. We have received 1,000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee 1,000. 1,000 from Lee we have received. Over. That's all. So we have finished. What else is required? Below are the financial transactions for Peng's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself. Then you can compare checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account, we have paid everything. So there is no amount left over. Sales account is credited. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be created. Sale account will be created, Dia account will be debited. Why? Because sale is an income, credit or incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods, Dia account will be debited. Buy machinery for use by business on credit from Joints Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in, asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recording. Return goods bought on credit to Allen. Return goods bought on credit to Alan. So whatever goods we had purchased, we are returning it back. So these are all purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Alan will receive. So debit the receiver, debit the account that receives, Alan receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods return. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So who will receive? Joint limited will receive. Receive full payment from DIA less cash discount. So we have received payment from DIA. Receive full payment from DIA. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Alan for goods bought less cash discount. So here we have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So the amount we are not going to pay because of discount. So that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is the this is activity 2.3 David Hopkins, the latest book. So, okay. Dear friends, welcome back to Shasha's virtual classroom. This is a practice questions from David Hopkins, lesson number 2, credit transactions. So which of the following transactions, so before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with the solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid, money is credited. So bank account is credited because payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay. So money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So is a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase. But in Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a credit discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded, okay? So will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So to 882. So this is the entry, not this, not this, not this, not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books are books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 credit discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Quora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Quora cost 400 less 10% less trade discount. So Quora, so you are sold to Quora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 80, 320. So it will be recorded at 320. Purchase goods from Quora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Quora and Prem. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase journal. They record all purchases, individual purchases, and purchase returns journal. Purchase returns journal. They record all purchase returns and cash book. Cash book to record cash payments and discount. So cash book for payments and discount, cash discount. So 3 books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, 3 books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase returns journal, purchase returns account. So then Quora account, Prem account, discount received account, so these are the ledger accounts we need to prepare. 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we'll start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase returns journal. Okay. So let us first prepare purchase journal. Purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. Invoice number, amount in dollars. Okay. So first, what is the date? So we have purchased on 1st November. November 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always, trade discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from Prem. Again, purchase goods from Prem. So again, goods from Prem, that is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is 14,000. Next. Again, you have purchased goods from Cora for 16,000. So at a direct discount of 20%. Again from Cora. What date? It is on 5th November. You have purchased on 5th November from Cora. So how much? What is the amount? $12,800. So what is the total purchases? So 8 plus 14, 22, 22, 34,800. So these are the total purchases. This is purchase journal. Now we need to prepare purchase returns journal. Purchase returns journal. So what is the date again here? You have to write the date. You have to write. Name of the supplier. So and so what date? Return goods on 4th November. So November 4. So what is the amount? 320. So from to whom we have returned? Quora. Quora. And we have received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. See, very important. Okay, so this way you will remember this again. When you will remember when you are preparing control accounts, when you are reconciling control accounts, at that time you may need this knowledge. So this knowledge, because this is the logistics you have to understand. This is logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book, what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. And so this is discount column. This is discount. This is cash. Cash column. So it is in dollars, but this is also in dollars. So here, next, first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Quora and Frame. So we have paid to Quora and Frame. So we have paid to Quora and Frame. But here we need to calculate. So we need to calculate because Quora, what are the transactions you have done with Quora? Quora you have purchased, you have returned, again you have purchased, returned, purchased, returned. So 8,000 plus 12,800 minus how much you have returned? You have returned 320, worth 320. So this gives 8,000 plus 12,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount So discount 400. But you already pay, you have returned goods worth 320. So what is the discount you'll receive here in this case? In this case, the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 12,800, and there is a return of 320. So purchase, return. So net purchase is 20,480 and discount is 5%. So be careful, you have to see sometimes the rate of this case, here also it's 5% cash discount, here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to Prem, how much you have to pay? Prem, so the entire amount you have to pay. So Prem is 14,000. Discount is 280. Discount is 280. 14,000. Prem 14,000. Minus 280. 10,000. 13,720. So you have to pay 13,720. So this is the amount you have paid to Prem. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November 9th. So you have made the payment of November 9th. So this is the cash book. This is how you have to receive record. So discount column 1024, Prem 280. So cash and this. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts we need to prepare? So it's very simple. So you have to add whatever is there, you have to add, and whatever is there. Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10. So what is the date? What is the amount of purchases? Total purchases? We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. Purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800. So purchase journal. See, this logistics is very important. So when you're doing control accounts at this time, you will come to know. So you may have to reconcile so many. It's a very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but we enter it in purchases account. we record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10, purchase returns, journal. So what is it? 320. So now we have to prepare other accounts like Cora account. So we have purchased from Cora, so Cora's account will be credited. So always write the amount. Always write the amount. Cora account. So Cora account will be credited. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. First and 5th. So on 1st it is 8,000. On 5th it is 12,800. 12,800. So this is purchases. Purchase. This is purchase. Remember, you are writing purchase here, not purchase journal. Okay. Purchase. 8,000. Purchase 12,800. So here this side. So it will be. So this is number 1. Because purchase journal, it is a journal. Okay. So purchase journal. So this is our Cora ledger account. So now next, what is it? So what date you have written? You have written on 4th November. 4th. So how much? 320? Yes, 320. So next, frame account. So how much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Purchases 14,000. Okay. So now come to discount received. So again, discount received is again. So discount received is again. So it will be credited. So individually you have to write. Or you can write the total. So discount received is 1304, 13,004. So we have to record that discount received 13,004. So November 10th. So cash book. So we have to write here, that's all. So 1,304, not 13,004, 1,304. So that's also discount received. So what else is there? So So I told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and a book ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we will learn how to prepare point 2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying, having a look at my looking at this particular session, you can just try working out the a problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particularly, you have to write this in a particular format or particular what do you say in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between, so there should be one line. So again, similarly, this side also there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount received, one column, cash, one column, bank, one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit, this side is credit. So the date, whatever your particulars. So first you write this till here. So copy, you have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash sales 1000. April 1st, April 1st. Okay, so one more thing. So whatever we receive, we have to write here. So all that is received, we have to write here. And whatever we pay, we have to write here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account. So this is discount allowed. So this is discount allowed discount. So this is discount received. Sorry, this is received. So it's a credit. No, it is received. So this is discount allowed. Allowed discount. So allowed discount. So remember this is allowed. Okay. So this side, because when we pay at the time, we receive discount, no? We receive, so it's a credit. So, but when we receive, at that time we allow discount, so it's a loss. So we write here. So cash account sales 1000. Sales account 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, we have to write here. Whatever we pay, you have to write here. This is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. No, see, they are not writing whether it is receipt or paid. So here they are also discount received they are written. Okay, so discount allowed. So here they are not written whether it is received. So this is just for you to remember. So just for you, so that you understand, it is easy. Don't write. This is for you, just you, for you to remember. So don't write. Okay, so don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a, so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out. Electricity. How much? 100. Cash. Credit what goes out. Cash has gone out. Credit what goes out. So next. So we received, we have paid 100. So credit cash account will be credited and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on 3rd, 800. On 3rd, sales 800. We are receiving. When we sell, we receive, no? So receive. So 800. Next, banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Banked cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So banked cash means we are depositing cash into bank. Cash is going out. Cash is going out and money is coming in bank. Banked cash. So money is coming in bank. Banked. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4th. 4th. Banked cash. So remember, always you have to write like this. Okay. So my banked cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Banked cash and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here, contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere, but only affected in the cash book, and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful, okay? So a lot of students, they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple, that's all, okay? So then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So we drew 900 from bank for cash float. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank and coming in cash. Cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited, and bank account will be credited. So understand, this is very important. Lot of students commit mistake here also, so they get confused. Understand this. This is very, very important. We drew 900 from bank for cash float. Cash float means to keep in office. To keep in office for cash expenses. So that is the meaning, okay? To keep in office for cash expenses. So we have to record rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What date? 6th. On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from banks. This is payment, right? So money has gone out from bank. So against this, here you have to write cash, and this is called contra again. So again, this is where you have, here you have written in cash column. So here you have to write bank. So this is in cash column. In cash column. But you are here again this you have to write bank. So be careful. So again this you have to write again contra. Why? Because it is hitting cash on one account and bank on the on another account. Same. So very careful, okay? So lot of students commit mistake here. So this is very important. So this is very, very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in AS level. So because it's very important, often asked, okay? So very, very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay, so the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we are total here. So we total here. So whatever balance is there, balance, carry down. So this side here, cash, back. So balance carry down. So what is the balance? So here this side 1400, here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800, 1800 plus 900. So 19 plus 8, 27. 27 minus 1520. 2700 minus 1520 will be, okay, so this will be 1800, 2000, so it will be 1180. So here it will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. So crystal clear. Okay. So this is how it is. So 1180. If you add all this should be 2700. So in other words, when you are balancing, so both the sides should be same. Okay. So here balance brought down. So balance brought down. Whatever is carried down here, it will be brought down here. So 1180. So this will be 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So I will be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 14,000. This is very simple journal entry. So what is there in this? So first one, so we'll just write here. So first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay. So very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books, or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to PAL account. So we will debit motor vehicle and credit PAL. Why? Because debit, what comes in debit, asset is coming in. So Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they have not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative being purchase of motor vehicle for use in the business. Okay. Next. Purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing had been debited to purchases account. So office furniture you normally purchase to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error. Instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, you to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So what? How to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this. We have to credit and to bring this we have to debit. So what is the entry? Furniture account debit. Debit furniture. Debit furniture account. Credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out. So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next, third one. A new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit. Equipment. Debit. Furniture. Debit. Stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. The giver of all these things. So we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment, 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B Jones, a supplier, has been posted to C Jones account in error. So what is the right entry? Received from B Jones. So we have received credit note. So we have to debit B Jones, a supplier. Okay. So we have to debit B Jones. So what is the right entry? We have to debit B Jones. So to understand this again, you have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B Jones. Okay. Received from B Jones. So we have to credit B Jones. Credit note. We have to credit B Jones or debit B Jones. We have received, no. So we have received means we have to debit B Jones. We have to debit B Jones. Debit B Jones. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit, means you have to debit B Jones. Understood? You are getting credit. So you have to give, you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones. So how do you rectify this? Obviously you have to cancel this and you have to bring in this. So what you have to do? You have to debit B Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C Jones. So when you pass this entry will be offset. We already debited C Jones as a wrong entry. So when we credit C Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B Jones. So this is actually transfer entry, we can say. Okay. Transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. So this is also transfer entry only. because we are transferring from furniture purchases to furniture. Okay, that's all. So this is first one is error of principle. Second one is also error of principle. So this one is opening journal entry, and this is again error of principle. Instead of debiting one person, we have debited some other person. That's also. This is activity 3.4. This is the end. So it looks very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply, do a lot of hard work. So never try to never do that. So dear friends, welcome back. So this is practice questions from books of prime entry. So the books of prime entry. Okay. So books of prime entry practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross check with this, and you can compare, you can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know, we can discuss it. So, and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at a net of, so 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not in the time of sales. So what amount should be entered in her sales journal? So our sales journal will not be recording this. We will be recording net of trade discount 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Then Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800. So what will be debited? Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will it have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account debit to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because purchases is an expense. So Jaya is creditor. So supplier. So it should be credited. So we have not done this. So it is under added. So this is the correct answer. That's all. So simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then very concept is very clear. Then let us have a look. What is this? Deepak's transactions for May were as follows: bought goods, sold goods, bought goods, purchase, return goods, purchase. So basically, this is a books of question on books of prime entry. So you have to write various books of prime entry like purchase. Purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely discuss this question once you let me know. Okay. So till then, have a good day. Good night. Dear friends, welcome back to Shasha's webcam classroom. So this is the practice questions from balancing accounts. Balancing account. So we will discuss this. So before this, you can just try answering yourself and you can cross check with answer. Which of the following account is most likely to have a credit balance? So a capital account will have a credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. So it is a debit balance. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed. So balance. So we have to add it 234. So that is balance. See, balance is 234. So it will be carried down. But it will be carried forward straight away. It can be straight away carried forward to trial balance. So here we just put the total and carry forward to trial balance. Discount received. Discount received account. So 110 plus 130, 130. So balance carried down. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340 and this side there is total of 740. So what we have to do? So 1340. So this side to make it 1340. So it is 740. So 700. So if we put 700 here, so that will be balance carried out. Balance carried out. So 700. So the both the sides, the always total will match. So 1340. So if we write 700 here, so this will match. So it will become 700. So it will be 1340. Next, A and B limited. A and B limited account sales. So total sales. So we have sold to A and B limited, and we have not received any money from them. So just 700 plus 450 is 1150. So 1150. So it will be balance carried on. So 1150 will be the balance carried on. So both the sides it should be 1150, 1150.
Lot of students they just write everything and they will not write anything. Obviously, yes, the answer sheet, the question paper itself will have so many things.
So then this one, George account. So what is George account? So George account, we have sold for 2300 and we have received, we have settled. So he has paid. So everything is clear. So 2300 this side, 2300 this side. So there is no question of balancing account. Motor vehicle. So balance carried on, same amount. So that both the sides, it's the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be heavier. So 800 plus 100 is 900. So 900. This side it is 220, 45, 265. So 900 minus 265. 635.
So first we have to start with number 1. Then we have to
So balance carried on is 635. So the total, if you put balance, it will be.
then again you have to subtract 4.
So to actually practically do the problem how to balance, you can see cash book problem. So the previous question 4.1, activity 4.1, there we have I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavier. Since credit balance is heavier, see 5,300 and this side it is 3,500. So since it is credit balance is heavier, so it will be here this side balance carried on will be this side. So 5,300 minus 3,500. So 1,800. So balance carried on will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300.
So now let us discuss each and every point. So I will ask you certain questions also in the meantime.
So explain why trade receivables account have debit balances, why trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money, so owe business money. So whereas trade payable are liabilities. Dear friends, welcome back to Shasha's Workshop class. Today we will discuss activity 5.1. So before having a look at this solution, you can try working out the solution on your own and you can cross check with the solution here so that you are confident whether you understood the concept or not. Complete the table ticking the boxes that describe the given the concept of the business. The first one is completed for you. Daily vehicles is an asset. So what is before this? Let us discuss what is liability, what is revenue, what is expense. So asset is something we have. So it is a resource controlled by an enterprise from which future benefits are expected to flow. Something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe to some other person. So you have to pay to some other person. So that is known as liability. Revenue or other income is that part of those items which you keep getting and which you can use for your business, running the business operation. So it is income for you. So you can it is generated regularly or it is the main source of your operations. So expenses, the expenses which you incur like salary, rent, all those things. Okay. So rent is normally so rent is let's assume it's an expense because since they are not specified. So if you see other line item here, rent receivable. Here rent receivable is there, so this is income. So let us assume and presume things. So this is the rent paid or payable. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference. But normally it is taken as expense. So when nothing is specified, when it says rent, it is expense. Yeah. So loan is a liability which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposits. So you have got some money in bank, so you have earned interest on that, so that you can use it for your purpose. It is interest received. Interest paid is an expense, so it is an expense. So we require right here. So trade receivable is an asset. Why? Because we have sold on credit and that person has to pay. So these are customers' accounts. So trade receivables is also known as debtors, trade debtors, receivables, bills receivables. All together is known as trade receivables. Trade receivables is something which is owed to you. So which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount allowed is an expense because it's a loss. So once you allow a discount, you will not you have to your money will be waived off. So you will not be getting anything. So that is allowed. It is an expense. Postage is also an expense because postage is the money spent on sending the postage to courier or all those things, you know. So then next postage is done. Bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payables. So trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include trade creditors. They include bills payable. So all those money which are owed by you. So you got on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you are using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed is discount received is also other income because interest received is not main revenue from operations. Whatever is not from main revenue operations is considered as other income. Okay. So rent receivable also can be considered as other income. So all these are other income. So what are revenue, main revenue? So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts, so we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So and we can okay. So activity 5.2. In which ledger would you expect the following accounts? The first one is completed to you. So in which ledger? Okay. So which ledger? So what are the different ledgers? So there is general ledger. So there is customers ledger. There is suppliers ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So See, these are the list of ledgers, division of the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature and all are recorded there, and cash book for the bank and cash accounts. We use cash book. So, sales ledger to record sales, purchase ledger to record purchases, general, other items other than cash and bank. So private ledger, so other than which is not recorded normally, which is a confidential nature, and cash book. Cash book is for the bank and cash accounts, that is whatever is received, whatever is paid, all those are bank accounts. Okay, so capital is general ledger again. So customer who buys goods on credit, customer who buys goods on credit. So it is, we are selling the customer who buys goods on credit. So when you are selling, the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whoever it is purchase ledger. So but since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful, you have to ask yourself whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, you are it is not a merchandise, it is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger. So it will not be recorded in purchases ledger because it is not purchase of merchandise. Be careful. Okay. So bank account will be recorded in bank ledger itself. Bank or cash book we can say. Okay. So bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded in nominal ledger. So guys, okay, once again, sales ledger for the accounts of customers that buy on credit. Only credit customers. These are accounts. Receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though it mentions sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit because customers and credit are related. So purchase ledger. So even though it is purchase ledger, for the accounts of suppliers, it is not for the account of purchasers, it is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded in other income. So other income is like interest, all those things and all expenses. Expenses are again purchases. Okay, so all these things are recorded here. Private, so that has nothing to cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often asked in MCQs and all. So keep a note of this. So very important. Okay, so sales is general ledger. Okay, so general or nominal. It's called nominal also. Nominal. So general or nominal. Why? Because it is revenue. Wages is an expense. Okay, so be careful. So this is how we have to understand the concepts and so that the concepts accuracy as you proceed for A levels. If the concepts are not very clear, you will get hiccups. So you will struggle So you struggle in A levels to secure very good marks. So there is no shortcut. Please remember, there is no shortcut for success. You have to put in lot of efforts. So you have to practice a lot. Try to understand the concept. It's very important. Understanding the concept is very important. So this is the end of activity 5.2. So now let us continue with activity 5.3. So activity 5.3. So activity 5.3, complete the following sentences by inserting the correct word from the following list. So simple it is. So dash ledger contains the accounts of suppliers from whom the business buys on credit. So dash ledger contains the accounts of suppliers. Suppliers. Purchase ledger. Purchase ledger, no? Purchase ledger is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is stored in the dash ledger and is an example of dash account. So heating and account is stored in the general ledger. General ledger or nominal ledger and is an example of nominal account. Expense account. Okay. So expense account is here. So expense. So the goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again. Where do you record? It is non-current, expense, purchase, general, sales. So we have to choose from this, right? So purchase ledger contains the accounts of suppliers from whom the business buys credit, correct? So the heating and lighting account is stored in general ledger, correct? Example of expense account. This is also correct. This is lower. This is over. Then again here, what else is there? Sales. Is there anything related to sales? Good bought on credit are recorded in the? No, it's not in sales, not a sales. Non-current, no, non-current. So only three types of ledger are there. So only three ledgers. Okay, so when they say ledger, okay. So then, goods bought on credit are recorded in the general ledger. So then, a dash is a set what we use in the business for a long period, so non-current. So we have chosen this, nothing is related to sales. You just see the dash ledger contains the accounts of suppliers from whom the business buys on credit. So purchase ledger. The heating and lighting account is stored in the general ledger and is an example of expense account. So goods bought on credit are recorded in the general ledger. Okay, so then dash a non-current. So this is again purchase ledger, whatever. So general ledger. So a non-current asset is bought for use in the business for a long period of time. So it is non-current asset. So this is the end of activity 5.3. So very simple thing. So you may get confused. See again, the concept should be very clear. Okay. So dear friends, welcome back to Shasha's virtual class. So classification and division of ledger. So let us have a look at the practice questions today. So which account is most likely to be kept as interest received, rent, since what is very private? So obviously advance is very private. So how should the cash discounts be classified? So how should cash discounts be classified? Discount allowed is an asset. No, it is not an asset, it is an expense. So it is income, no, it is liability, no. Discount received is a liability, no. Discount received is an income, yes. Expense, no, asset, no. So B. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the accounts becomes easier. So discuss why a business may use more than one ledger. So again, for specialization, so we can have a group of people maintaining a specialized in particular group, and it will become easier also to verify and cross check and to keep mathematical accuracy. So this is the end of practical questions. So let us continue in the next class. Dear friends, welcome back to Shasha's virtual class. So today we will be discussing activity 6.1. So prepare a trial balance from the following balances that have been instructed in the books of small online retailer at 31st December. So they are given assets, liabilities, expenses, all these things, you know. So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this problem on your own. So basically, it's very easy and a very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare a trial balance from the following balances. Okay, so how will we do it? Trial balance extracted from small online retailer as on 31st December. Small online retailer as 31st December. As on alright 31st December. So we have to write it in a specific format. So basically we will have to write particulars or names of accounts. So here to the ledger folio. So debit. Credit. So then we'll have two columns. Debit column, credit column. So let us start. So before starting, so property Property, what is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles. Motor vehicles is an asset. Always it shows debit balance. So office furniture. So remember one thing. What is that? So when you are learning trial balance at that time, you have to remember assets and expenses have debit balances. Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities and income or revenue have credit balances. By default, okay, by default, they are always assets and expenses. Assets and expenses are always debit balances. Liabilities and incomes are always credit balances by default. Okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales written exactly reverse of sales, it is debit balance. Purchases is an expense debit balance. Purchase returns is exactly reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an expense debit balance. Office expenses is an expense debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance. So write down all the names of the accounts: property, motor vehicle, office furniture. Property, motor vehicle, office furniture. Property 100,000. So motor vehicle 18,000. Office furniture 14,000. Office furniture 14,000. Computer 2,000. Sales 40,000. Computer 2,000. Sales 40,000. Sales return 600. Purchases 6,000. Returns 500. Purchases 6,000. Return 500. Motor vehicle expenses 4,000. Advertising 1,600. Advertising 1,600. Office expenses 1,000. Office expenses 1,000. Stationery 400. Stationery 400. Cash 200. Cash 200. Bank 300 credit. Capital 110,000. Capital 110,000. Drawings 3,000. Drawings 3,000. So the total is, if you add both the sets, it is 150,800, 150,800. So it will match. So this is activity 6.1. So this is done. Okay, so this is over. So let's catch up in the next class. Till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. So let us discuss activity 6.2 today. State which of the type of errors each of the following represents. A customer's invoice has been omitted from the sales chain. So we need to mention the type of error So we need to write the type of error here. So before this, let us have a recap of what type of errors and what are the different types of errors. So basically there are 6 types of errors that can occur when debit and credit totals in the trial balance agree. They are as follows. So type of error of omission. What is error of omission? A financial transaction omitted completely from the books of omit. Okay, omission is nothing but omit. Omission is nothing but omit. So the name itself suggests, okay, so omit. So omission. So omitting means leaving out. So financial transaction omitted completely from the books results in there being neither a debit nor a credit entry. The transaction is not entered, not at all entered. Okay. So not entered. Itself is not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expense you incurred, we are not recorded. So that is what example is $100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash account. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out. Leaving out or skipping. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected. You have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both class-based expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you have put in some other account. Error of principle. What is error of principle? So you can so you don't know the accounts. Suppose someone doesn't know the accounting principles. Doesn't know the accounting principles. Ignore it. Ignore it. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he will record it as an asset or something like that. For example, a financial transaction is posted with the correct amount to the correct side of a wrong class. It is wrong class. For example, they have see payment for fuel for a vehicle has been debited to the motor vehicle. So fuel for vehicle is a nominal account debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure might have been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classed as expenses, while the motor vehicles are non-current assets. Okay, so it is wrong class. Ignore it. So what has happened? The person doesn't know how well to record. Instead of recording in fuel for vehicle, he has recorded as motor vehicle itself. So that is wrong. So ignore it. Means he is not followed the accounting principle. Has not followed the accounting rules. Rules are not followed. This is same class. Okay, next. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you are written it wrong. So wrong amount is entered in the book of prime entry for a financial transaction. A purchase invoice is entered on the purchase journal as 10. See, it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first time recording itself is wrong. So next, complete reversal. Complete reversal of entries. Complete reversal means instead of debiting, they have created. Instead of creating, they have debited, something like that. Okay. An account that should have been debited has been created, and the account that should have been created has been debited. So a payment made to Sam is debited to the bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should be debited to Sam account. Because it is paid. See here the accounting principles. So whatever we have learned in first lesson, so cash transactions and credit transactions, you have to apply here. So if you are not understood there, here also you will not understand. So be careful. Okay, so your concept, logical flow of concepts. It should be logical flow of concepts. So if you understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try to try shortcuts in learning. Never learn shortcuts. So a payment made to Sam is debited to the bank account and exactly reverse, complete reverse. It is complete reverse. Yeah, it is complete reverse. Instead of debiting, you have credited. Instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will offset. So and then net off. So the compensating errors. So compensating means one will offset the other so that there is no proof at all. So compensate. They compensate one another. So two or more accounts that cancel each other out. An invoice of 1200 in sales journal is posted to the customer account as 1000, and the same amount the sales journal is underadded to low by 200. The debit balance on the customer's account and the credit balance on sales account will both be underadded by 200. See what has happened? 1000, instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written it. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all evident. Okay, error is not disclosed. Error not disclosed. In trial balance, they offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other out. Okay. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss here. Okay, customer's invoice has been omitted from the sales journal. Omitted. Error of omission. Simple. A purchase of goods for 100 has been entered in the purchase journal. So purchase journal, original entry. Because first as soon as we purchase, we are recording purchase journal. So original entry. Purchase of goods has been entered in the purchase journal. So it is error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? They have received the discount and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. Now what has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have given credit, you have given debit to Maya instead of Mari. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct, no? So because money will go from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Entries were 100 too high overhead on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense overhead means expense has increased. So sales account, income also sales account. So income also has increased overhead. Okay, both are overhead. Sales is credit. So what will happen in this case? This is overhead. This is also. So debit is also increased. Credit is also increased. So it will offset. So it is compensating error. Compensating error. So next, entries 250 were too high. Overhead on the heating and lighting. So expense. So overhead to the heating and lighting. So expense has increased. Debit. And 52 low under added. So expense, again it is expense. It has been under added. So it has under added and it is credit. That is also debit. So that is also debit. So this is also debit, that is also debit. Instead of instead of adding it to heating and lighting, it has been added to rent payable account. Both are expenses. So instead of adding one to another, it has happened. So it is compensating because both are compensating. The net effect is nil. Expense will increase, expense will come down. Instead of adding this account, it has been added to this account. That's all. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principal. That's all. So this is end of activity 6.2. So this is a very important topic. So you have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students, they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be zero. So never do that. Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance of 31st December 2021. It does not balance. Rewrite the trial balance. Rewrite the correct trial balance and correct the errors. So basically, we need to rewrite the trial balance. If there is any mistake, we have to do it. So you know, all expenses, all assets and expenses are debits. All incomes, all liabilities and revenue or incomes are credits. So they are credit balances. Okay, remember? So this is the basic rule for trial balance. Remember this. All expenses and again all assets and expenses are debits by default. All liabilities and revenue or incomes are credit by default. Okay, by default. Normally by default. Very important rule. So before learn this, by heart this, whatever. So before starting this question, so try to answer yourself and then you can have a look. So plant and machinery is a debit balance, so this is correct. Loan from debit. Loan from debit is a liability, so it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense. Rent and rates are expenses. If they are not credit, this is wrong. So 3000 rent and rates, you are right here. So cash is normally a debit balance. It is an asset. So it is normally debit balance. It is never a credit balance because cash can never be overdraft. So general expenses debit because they are expenses. Normally they are debit balances. Sales, yes, they are always credit because they are all revenue. Purchases, expenses, correct. Discount allowed is always a debit balance because it is an expense, it's a loss. So not here, so it should come here. And discount received is a revenue, which is again other income. So it should not come here, it should come here. So bank, debit balance, normally trade receivables, asset, always debit balance. Trade payables, yes, credit balance is a liability. Purchase returns are exactly reverse of purchases. So purchases are debit, so purchase returns are always credits. So sales is always a credit. Sales returns is exactly reverse of that, it is always a debit. So rent receivable is an income, it is revenue, it's a gain, so it is always credit, it is not a debit. Capital is always a liability, always it is correct. And drawings is exactly reverse of capital. Exactly reverse of capital. Drawings will always come here. So now you redraw the trial balance, cross check, so it should be perfect and it should be matched. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, this is very simple, very simple, very simple. So just do it and enjoy. So let's. So this is activity 6.3. Let's continue in the next class. Till then, have a good day. Dear friends, welcome back. So this is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received 100. Discount received has been posted to the discount allowed. Has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income. But so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance? So too little debit. No, this is wrong. And 100 too much credit. This is wrong. 100 too much debit. Correct. So it can be 100 too much debit. Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the trial balance. No, this is the right answer. Because a credit has been affected as debit, so it will have too much debit because you have debited. Discount received is a credit, so you have debited. So it is debited, and you are not credited to discount received. So you have not done this. So it is too less credit. So this is correct. Next. Which of the following is not a reason to prepare a trial balance? To check that the total of debit balance is equal to total of credit balances. To help find errors in the accounts, which is not a reason. Okay. So this is the reason. This is the reason to increase the sales of a business. That's also, it's not a reason. Okay. To prepare monthly reports for managers. So this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from lease books. So you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit, so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset, debit. So trade payables, liability, credit. Loan from Ting, liability, credit. Drawings is a debit. So balancing figure is, so capital, so basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay. So difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye. Dear friends, welcome back to Shasha's virtual classroom. So today we'll be doing practice exercises from credit transactions. And this is from David Hopkins. Suppose the following transactions in the books of Gerard. Okay, so if it helps, write down the names of accounts. So if it helps, write down the names. These are tips. Okay, so these are the tips. So write down the names of accounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct accounts. So first, let us calculate the amounts. So trade discount, purchase goods from car which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is $2,700. So then sold goods to lie $600, it will be like that only. So return goods which had cost Berod 200 less discount to car. So 200 less discount. So it was you had sold here, right? So car. So you had sold here. Now so it is being returned. So 20,000 less 200 less 10% is $180. 200 minus 10% is 180. So purchase goods on which cost 200 before trade discount of 10%. So before trade discount of 10% means so again it will be $2,800 minus 10%. 2,800 minus 10% is minus 280. 2,800 minus 10%, 2520. So it's 2520. So trade discount is never recorded. Remember that. So trade discount is never recorded. So it is 2520. Sold goods switch in for 1,300. So no discount here. Lal return goods which had cost him $200 less. So this is lie. We are sold for 600. Lie return goods which cost him $200 less discount. We did give lie any discount. So have you given any discount? Lie? No. So then this will be as it is. So $200. So there is no discount. It was not given. So it will not be given again. So it will never be given. So even though the question says like that, but we are not supposed to suppose because here they are not mentioned whether we have given them any trade discount. Or it may be that there is a mistake, printing mistake. So if that is the case, then less, because everywhere it's 10% trade discount. So let us consider it's 10% trade discount. It will be $540. $540. So we should record. So here it will be lie return which it cost 200. So minus 10% will be $180. Okay, then Gerard paid car and limb the amount due to them after deducting 5% cash discount. See, so many big calculations are there. Lai and Chin paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So wait, let us see how to calculate. So there is space here, so we'll write down. So Gerard, okay, so Gerard. These are the books of Gerard only, right? These are the books of Gerard. Gerard paid car. So we are paying to car. So remember, whose books? Gerard books. Gerard will never come. So car and look. Okay, car how much we have to pay? Car we have sold 2,700 minus we have returned. He has returned 2,780. So 2,700 minus 180 is equal to 2520 we have to pay minus 5% cash discount. So this will be recorded. So this is cash discount. We recorded. So that will be how much? Minus 5%. 2394. 23. What is cash discount? Cash discount is 2520 5%. 5%. 2520 minus 196 is equal to 23. Now 4 is over. So now lie. Sold goods to lie 600. Sold goods to lie. Car and limb. So limb again here limb. Car and limb you are paying. So limb you write here. Lie you write here. And the other one chin. Lie 600. How much has been returned? Lie 200. So 540 minus 180. Minus yes, 360 minus 5%. 5% is cash discount again. Cash discount. So that is equal to 360 minus 18. 18 is cash discount. So the net amount payable will be 340. Okay, then core and lie and chin paid their own. Lie and chin. Okay, so now limb. So limb. Where is limb? Core over, lie over, core over, limb. Limb is 2800. That is 2520. So are we returning anything? Rim. Is limb returning anything? Are we returning anything to limb? No, we are not returning. So 2520 minus 5%. So that is equal to 2520 into 5%. 126. 520 minus 26, which is cash discount again. Cash discount. So that is equal to 239. 394. Again same. Chin. So now Chin. Where is Chin? Chin is here. Sold goods to Chin. So Chin has not returned any goods. Okay, Chin has not returned any goods. Only Lai returned. Only there are purchase returns. We have returned to Mr. Gerard has returned to CA. Returned goods. Okay, so here you can see. Return goods which are Gerard rupees, Gerard $200. Lai returned goods which had cost 200. Lai we are purchasing. Okay, so there is one sales return and one is purchase. Chin. There is no return by Chin. Sold goods to Chin. There is no return by Chin. So 1300 minus 5%. So that is nothing but 1300 minus minus 5%. $65. 1, 2, 3. See, these are the calculations. So that is why it is advised that first you work out the trade and cash discounts before you post them to their correct accounts. So first, these are so many calculations. See, so many different calculations were there. Though this looks simple, some students make mistakes even in calculating this. So be careful. So then now we'll come to the main part. So which account will be debited by how much and which account will be credited by how much. So debit. Okay, so purchase goods from car which cost 300 less trade discount 100. So we are purchasing from car. So Gerard is purchasing from car. So purchases account will be debited. Account will be debited. Car account will be credited. Car account. So why car account will be credited? Because car is giving the goods. He is the person who is giving. Okay. So when we purchase, when Gerard purchased, car gave the goods. He is the person who is giving. This is the account that is giving the goods. Okay. So that's why his account will be credited. So amount will be 2700. Amount will be 2700. Same line. Okay. So now sold goods to Lai for $600 less 10% trade discount. Trade discount. So 540. So sold goods. So sales account. Sales is an income always. And who is receiving the goods? Lai is receiving the goods. So Lai account, because he is receiving. Lai account will be receiving. So that is why his account will be debited and sales account will be credited. Sales account will be credited. Return goods which had cost Gerard 200 less discount to her. So return goods which had cost Gerard. So So this is who is returning? Gerard is returning. So it is purchase return. So obviously when he returns, it will be purchase returns. So purchase returns will be exactly reverse of purchases. So purchase returns. Purchase returns. So how much? It is returned to Khar. So Khar is receiving the goods. No? When you are returning back the goods, Khar is receiving the goods. So he is receiving it. Khar account should be debited. So then, purchase goods from Lim which had cost 2800 before trade discount of 10%. So purchase goods from Lim. So purchase goods from Lim means purchase. Again, purchases is always purchases. Purchases account. Purchases are always purchases. So purchase account. So who is giving the goods? So Lim is giving the goods. So Lim account is created because Lim is giving the goods. Okay. Sold goods to Chin for $1300. Sold goods to Chin for $1300. Sold goods to Chin. So Chin is receiving the goods. Chin is receiving the goods. Chin account debited. Sales account credit for this. So Lai returned goods which had cost him $200 less discount. Lai returned means this is you have sold to Lai. No? Just here we have sold to Lai and is returning the goods. Maybe they are defective. That's why Lai is returning. So Lai is giving. So you have to give, you have to credit whoever gives, right? So Lai account will be credited. And it is sales return. Sales return is reverse of sales. So it is debit. Sales return account. So then this is also done. Then now, so this is also over. So this is for this. Gerard paid Khar and Lim the amount due to them after deducting 5% cash discount. So when you are making, when Gerard is making the payment, who will receive? Khar will receive. So Khar will receive, Khar account, and Lim also will receive, Lim account, Khar account, debit, and credit to bank account. Bank account. But one more thing is there. What is that? Discount account is also there. Gerard paid Khar. So when Gerard is paying Khar, he is not paying certain amount, so which is cash discount. So it is discount received. So it's an income. So discount received will be credited. For Khar it will be 126. Okay. Khar it will be 126. And Lim it will be, again here also discount will come. Discount received will come. So here also it's 126. Both for Khar and Lim, discount received is 126. So bank account will be how much? Bank account will be 2394. What will be the amount? 2520. 2520 here also. 2520 here also. Khar and Lim. Khar and Lim. Or how much we have to do? or you have to debit 2700. What is the discount? No, correct one. 2520. So this is trade discount. Trade discount will never be recorded. Okay. Trade discount will never be recorded. So it will be recorded with this. This will be recorded with this. Then lie and chin paid. So lie and chin paid means obviously money will come into bank account will be debited. Bank account will be debited. So lie pays how much? Lie pays 342. Lie pays 342. We receive 342. So lie account. And when we pay, when we are receiving lesser the amount. So here there is no discount for limb. Limb. Lie returned. Goods which had cost 200 less. Trade discount. Lie. 342 we are receiving. So bank and discount received. Discount received is, it's not discount received, it's discount allowance, expense. So when you pay short, it is expense. Discount allowed is like 18. So here it is 360. Live. So bank account. So here in this case it is 1235. So discount allowed is 65. Discount allowed is 65. So chin will be created with this plus this. So that is 13. So now you have to prepare ledger accounts and post the accounts. Prepare ledger accounts and post the accounts. So start doing this. So it's very simple. So we already done this. So you can do the rest of the part. So if required, you can do it in the next class. So dear friends, last class I had given this assignment to you. This is assignment from David Hopkins. So this is very challenging because in this your concept of accounts of particular person is very much important. So accounts of one particular person. Post the following transactions in the books of both Brian and Ken. See what is if for Brian the transactions will be different. For Ken the transactions will be different. Because if he is buyer, he is a seller, and if he is a seller, he is a buyer. So here it has been asked name of accounts to be debited, name of accounts to be credited. So you should not get confused. You should not get get it wrong. So you are not so see if you write so, but here the question is you have to post the transaction in the books of both Brian and Ken. But here they have asked you to write name of account to be debited, name of account to be credited. But whose books? Is this are whatever you are writing here, are these related to Brian or are these related to Ken? So, what is the best remedy? Let us, for the time being, we will consider this as the books of Brian. So then, so goes to again. So sales account. And for Ken, we will write separately. Return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Okay, books of Brian. So what is Brian doing? We have to see from the point of view. So Brian sold goods. He is selling the goods. So it is sales for him. For Brian it sales, and for Ken it is purchases. So who will receive? Who is receiving? Ken is receiving. Ken is receiving. And when Ken is purchasing, who is giving? Brian is giving. So basically we need to prepare. So this concept should be very clear. Now, Ken sold goods to Brian. So sold goods to Brian. So sold goods to Brian means what is Brian doing? Brian is purchasing. Brian is purchasing. So it is purchases because these are the books of Brian, right? So you have to write it in the books of Brian. So it is purchases for. So if Brian is purchasing, who is giving the goods? Ken is giving. So always the measure should be. If for Brian if it is purchases, then for Ken it is sales. So always date should come. Always date. And the other side, it is Brian. And the currency. So the understanding should be very clear, crystal clear. So don't get confused. Don't get confused. Brian sold goods to Ken. Again, sales. Sales. So again, it is Ken. So it is receiving. So if it is sales for him, it is purchases for this. So here it is Brian. Then Ken sold goods to Brian means Brian has purchased. This is what it means. So a lot of students what they get confused. So then Ken. If it is purchases for him it will be sales. So if it is sales this side, then who is receiving? Brian. Ken paid Brian for the goods he bought on. Ken paid Brian. So Brian is receiving money. He is receiving cash. And he is allowing discount because it is a loss. He is receiving less. Then who is giving? So obviously Ken is giving. When Brian is receiving, Ken is giving. So now Ken paid, no, simply that's all. So cash. Cash is going. So what is the amount? So Tina and he's paying less. So if it pays less, it is discounted received. So it is an income. So Tina amount is credited. So a lot of students they get confused. And to whom? To Brian. It is credited on October 1st. Because of purchase. Brian paid Ken for the goods he had bought on 2nd April, let's say cash. So now Ben is paying. Brian is paid. Brian has paid. Brian has paid. So cash. So he has paid less. Discount. So it is Can this created. So here if it is discount received for it, here it will be cash and discount alone. And here it will be. So after doing this, you have to prepare the ledger accounts. Ledger accounts of brand separately and Ken separately. So purchase account, how many ledger accounts will there? Purchase account, sales account, Ken account, discount received, cash account. All these accounts will come in this, and in this, so many accounts will. So we'll prepare the ledger accounts. Shall we prepare the ledger accounts? I will give it as an assignment to you, so you can try on your own. So let me see, and I will discuss. Dear friends, last class we had discussed this problem. So you can see still on the screen. So it is as it is. So we will now enter the following. Enter this. Prepare ledger accounts for dispose the following transactions. We'll post the entries to ledger accounts of brand and credit. So how to do? So we'll post. So books of brand. Okay, so books of brand. So first we'll complete books of brand. So Ken will be debited with sales. First entry, Ken will be debited with sales. Ken will be debited with sales. Ken will be debited with sales. So sales. Ken will be debited with sales. So what is the amount we can see? So the amount is 15. And date is included. So now it's next one, credit Ken with purchases. Credit Ken with purchases. Credit Ken. Credit Ken with purchases. So what is the amount? So the amount is 500 less trade discount of 200. So 500 plus 400. And that is on April 2nd. April 2nd. So purchases will be debited with Ken. So now next. Brand Ken debit
can with sales.
So purchase returns.
So 800 plus 25 is equal to
So purchase returns
this
is
is
exactly because of the it is always
debit can
So
with sales.
what is the amount? 200, right? 200.
Debit can
We have to credit.
with sales.
This is how you there are so many ways of developing things. So why? Because it is an October
600
and investment. Investment. We
So
have to
rate
credit purchase returns 200 with a debit to Tina. This is how you have to read and you have to understand how to
third
understand accounts.
Second.
Very important. So that the flow, logical flow of concepts is very, very clear. Okay. So very, very clear. Logical flow of concepts. Now next. Purchase
So
the cost.
can you debited so what about sales? So sales
So
are
what is the value?
you have to according to
Purchase from link obviously in
credit sales.
when you purchase from link gives. So that's why we have to credit link. We have to credit link and purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there.
Okay, next.
What date? Date is very important.
Again, credit can with purchases. Again, credit can with purchases. Again, credit can with purchases.
From whom? From giving.
So what is the date?
So you have to
Amount
So
900
is debited with
20%.
purchase account is debited
60.
into link and demo account will be credited. It is demo account.
60.
You have to prepare your account.
900
So October. So why are we crediting link? Because we purchased from. Understood. This is how you have to understand the concepts. Very clear. Very clear. Now crystal clear. Now let us move forward. So then sold goods to Homer for 11. Sold goods to Homer. So when we sell, obviously Homer will receive. So Homer is the receiver. Account Homer
purchases. You have to debit again.
So Homer receives. So Homer account will be debited. Debit the amount that receives, right? So Homer account will be debited and sales account will be credited. Sales account is already there. So we have to prepare Homer account and we have to write in sales. So Homer account and sales. Homer account. Homer account.
Now,
So Homer account will be debited. Why?
calculate Brian for the goods bought on 1st April less in cash discount of
What
1%.
date?
So, credit can with cash and discount. Credit can with cash and discount. Credit can
Homer account is debited. Why? Because we have sold sales. Sales. Homer account is debited with sales.
cash.
So now Homer account is debited, sales account is already there. So in sales account we have to write now. We have to write it in sales. Homer account, October 8.
Cash and discount.
Homer account.
So, credit can with cash and discount.
Is it clear? So this is how it is. Okay. So
How much? For goods bought on
cost.
1st April.
So we have returned
He bought for 1500.
to
So, he got a discount of 3%. So, 15 3 is 45. So, discount alone is 45.
modify and rest is paid.
So when she receives her account will be debited. So Tina receives. Return goods to Tina. So it is again we have a return. So it is purchase returns. Purchase returns to Tina and
Rest is
so it is on 10.
1, 4, 5.
Purchase returns Tina and purchase returns.
So what date is it?
Tina
On 10th.
purchase returns Tina. Tina where is Tina?
So this
Purchase returns Tina. Why we have debited? Purchase returns.
so cash has to come.
Ali have been returned. So all goods sold to Ali have been returned. So we have sold them. So when we get back, so it is now
was
sales
paid.
returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali
How
has
much?
returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives.
Discount along with the loss.
Ali gives us back.
From this side.
We have sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali sales returns and
What is that?
sales returns.
What is the date?
So we have to credit him. So we have to credit Ali because in the
Next.
giver, it is the giver. Credit the giver is the giver of the goods.
Priyan paid Ken for the goods he had bought on second April. So debit Ken with cash and discount receipt. Debit Ken with cash and discounts. Ken with cash and discounts. Ken. Cash.
So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount will be
So what is the date?
and it is on
What date?
11 October.
So
And what is the
12.
sold to Ali? Rate. No, you are correct.
So now, what is the amount? The amount is for the goods that bought, let's say cash discount.
So
On second April.
so we can return it.
Second April we bought for 400 minus 5%. 20.
So sales returns
Discount received is 20. Balance is cash.
sales return upon
Discount received is
his account.
23.
So this is how it is.
Balance is cash.
So next, this is activity 2. So now what you can do, you can try working out activity 2.2. So below all the financial transaction for Friends business, what was the transactions to the ledger account? All goods are bought and sold on credit.
This is how it is.
Accounting that cost 5,000 less trade is.
So these are the books of
So
Priyan.
sold goods to only for.
This is how you have to record.
So return goods cost
Similarly,
less discount to
so now you can see
purchase from B that cost
how it looks.
discount. Before the discount of 20%.
So you can just
Paid normal note.
put it down,
Paid bill for goods bought on
or you can just have a look.
received full
So discount received.
So what you
Discount
can
received.
try working on this question on this.
Discount received.
And in the next class,
Cash.
you can cross check reconciliation.
Cash also. So here we are doing. We have to complete the activity.
So till then,
So if you do it, so Ken
transactions
It is
for credit transactions, and this is the David Hopkins latest book. So below the financial transactions for Peng's business. So these are the books of
what is
Peng,
also say.
Peng's business. Peng or Peng whatever. So
Okay, so I would like to mention that all these things are very simple
to the ledger account.
but very basic and very important. Unless these concepts are clear,
All goods are bought.
going ahead you will get confused in a lot of other concepts. Lot of students they
All goods are bought.
ignore these topics. They take it for granted, like in just engineering, economy, this was important. But afterwards, they will get some concepts now.
Purchases account, renting account,
Teachers are not used to teach you unnecessary things. They are
account,
teaching with a purpose. The books are not written just to fill up the pages, but with a purpose. So please follow it strictly, do it sincerely, study sincerely. So now, books of Ken,
no, never.
I will
So we should
leave it
never
to you.
create trade
If
discount,
you
and
want me
cost
to
trade
do
discount is never shown, but the transaction is shown.
even that part, please
So 5,000 minus 50,
make a comment
5,000
in the comment section of the
5,000 of 5,000 is
video. I will do it.
750.
Otherwise, I am not going to do that.
The
It is
transaction
assumed that you have understood it.
4
So till
4,000.
then, bye bye. I will.
So purchases account, tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to tinge. So again you are returning the goods. This is return goods. So you are returning to tinge. So who is tinge? So it is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is a 45. So 45. 515 is a 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct now? 5, 15 the 45. So 55. 55. Okay. So purchase goods from B. So again purchases. Purchase account is already there. So B. So cost 4,800 less trade discount of 20%. So this should be recorded at 4,800 minus 20%. So 4,800 minus 20% is so 48. 3,840. So 3,840. So you have to record it at 3,840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to T. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from Lee. So that will also be recorded in bank account. So how many accounts should we open? 1, 2, 3, 4, 5, 6, 7. We have to open 7 accounts. So
Dear friends,
you bought.
welcome to Shasha's virtual classroom.
So today we will work out problems from books of primary. So in this lesson we will learn how we record books of primary, how to prepare books of primary. So this is a problem from David Hopkins. So Mrugatayat had the following transactions all on March. So purchase goods from Piccolo for $10,000 less trade discount of 20%. Piccolo allowed him 5% cash discount. Sold goods from Snyman for $1,200 less trade discount of 10%. He allowed Snyman 4% cash discount. Purchase goods from Walters rupees 8,000 less trade discount of 10%. Walters allowed Mrugatayat 5% cash discount. Sold goods to Car for $1,200 less trade discount of 10%. He allowed 4% cash discount. Snyman returned goods which had cost him $200. Returned 400 to out to Piccolo. Purchase goods from Burger for 7,000 less trade discount of 25%. Burger allowed him cash discount of 4%. Sold goods to Corsair for $3,000 less trade discount of 10%. They allowed 45% cash discount. Purchase goods from Piccolo for $6,000 less trade discount of 20%. Piccolo allowed him 5% cash discount. Car get return goods which had cost him 300. Return to Burger goods which had cost $1,000. Sold goods to Simon for $1,800 less trade discount of 10%. Mrugatayat allowed Simon 5% cash discount. Received checks from Simon, Garg and Coates respectively in full settlement of their accounts. So accounts receivable are B and send checks in full settlement of their account to Piccolo, Walters and Burger. So then enter the transactions for March in Mrugatayat books of primary and post them in good form to the proper account. The transactions should be dated, however, for the purpose of activity. Ignore the dates and post the transactions to the correct books, the correct journal, and therefore and the correct ledger accounts. So we should record this in the books of primary. So where should we record this? So what are the books of primary? Purchase goods, purchase register. Sold goods, sales register. Purchase goods, purchase register. Sold goods, we have to record in sales register. Snyman return goods. So Snyman, who is Snyman? Obviously customer. So sales return. Return goods which had cost to Piccolo. So return goods to Piccolo, purchase return. Purchase goods from this is purchases goods. Purchase register. Sold goods to Corsair. Sales register. Purchase goods from Piccolo. Purchase register. Car return goods which are costing 300. Car return. Who is car? Car is so obviously it will be customer only. So sales return. Return to Burger. So purchase return. Sold goods to Simon. Sales register. So receive checks from Simon, Car and Corsair. So we have to record in high for the payment and for the amount received and for the amount we have paid. So now we have to record it. So how do we record it? The first entry. So we'll record entry wise. So first entry, purchase goods from Piccolo for 10,000 less trade discount of 20%. So we don't record trade discount. So we never record trade discount. We have to record the transaction at net amount. So that is at 80,000. So 10,000 20% is 2,000. 10,000 minus 2,000 is 8,000. 8,000 we record it in purchase register. So purchase register Piccolo 8,000. Purchase register Piccolo 8,000. Okay. So similarly, next. Sold goods to Simon for 1,200 less trade discount of 10%. So sold goods to Simon. So we have to enter in sales register. So 1,200 trade discount of 10%. So sales register Simon. So date particulars it is Simon. Simon Sold goods to Simon for 1200 less than trade discount of 10%.
500 less discount to 10. So we are returning the goods worth 500, but after discount it is 455. So return the goods means these are purchase returns. Pinch account is already
1080.
purchase returns.
So we have to record like this. So everything we have to record in each and every book respectively. So sales register will look like this. So Snyman 1080, Carg 2250, Odza 2700, Snyman 1620. So you can see. So it is Snyman sold goods to Carg,
455.
sold goods to Kodze,
Purchases
sold goods to Snyman again.
So it is always
So these are there. So we have to record it in this particular
400.
style we have to.
So
So this is known as format or whatever. So we have to record in this particular way. So the transaction should be recorded in this particular format. So format is important. So then the next one we have to record in purchases. So we have done purchase entry. So purchases will look like this. So we have purchased from Piccolo, Walters, Burger, and again from Piccolo 4800. So we have to enter in purchase journal like this. So take some time to write down, write it down. Then we have to enter in sales return register also. So sales return register, what do we write? So whatever sales we have returned, all those entries. So what is it? Let us see what is the sales return. So Snyman return. Snyman we had sold to Simon. So Snyman return, which had cost him 200. No, 200. So Snyman 200.
Purchase and we, and it is on 15. 15. 15th. Number 15th.
So like this, similarly we have to record all the sales returns. Snyman return.
So purchase account will be debited 3000.
Car also return. Car also return. So Snyman and car we have to enter. So the entries will look like this. Snyman 200, car 200. So similarly, purchases also we have to record. Purchase returns also we have to record. So what are the purchase returns? Purchase returns are return goods which have cost 400 to Ticolo. 400 to Ticolo means obviously Ticolo has given 20% trade discount. So which had cost him 400 means that is the net discount before discount. Which had cost $400 to Ticolo. So that is before discount.
Because we have purchase discount, we have to credit V with purchases 3840.
So we have to take after discount and we have to record it after discount. So returns, purchase returns we have to record after discount. So it's not 400. So it is $320 and burger is 1000. So we have to record it net of discount. So we have to record in sales register, sales journal, purchase journal, sales return journal, purchase return journal. So we have to record in all the journals. Then ultimately we have to record in cash book for the payments made and received. So what are the payments that are made?
How much we have to pay to
So after doing all these entries we have passed. Purchase goods. So purchase goods from Ticolo we have passed. All these entries have been made. All these entries have been passed. So now last entry receipt from check, receipt checks. So we have to consider the discount also, the discount part, everything we have to consider. So let us make the working. So here it is.
So we have to pay 3795 to teach. So we have paid
So Snyman,
teach. Complete the entry. Complete the entry. How
we have sold
So we have
to Snyman worth
bank account.
this one. These are the returns. Total
November 20. So we have paid to teach.
again we had purchased. Again we had sold worth this one. So total amount is 2500. So totally 2500. He has given a discount of, we have allowed him discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving from. So
And it is on November 20th.
so I made all the amounts, list of amounts. So these are all sales or purchases. So these are all sales. This is also sale. These are all sales returns. These are all purchases. These are all purchase returns. Again, these are purchases. These are the cash discount. This is cash discount. This is cash discount. So after this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming here. So we have to do like this. So first we calculate.
So we have to receive 1000 from me. So we have received one date we have received. We have received on November 25th. November 25th. We have received 1000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption.
So this is the amount, net amount. These are the amounts that are received, and these are the amounts that are discount. So we have to write it. So where do we write? So all these three guys have paid. Three guys have paid.
1020. So we have finished. What else is required?
So how much they have paid and what is the discount?
Transactions for business post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So we can
we have allowed them a discount. This is the discount we have allowed.
Then you can compare checking the answer here so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account we have paid everything. So there is no amount left over. Sales account is created. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account we have purchased, we have paid. So bank account we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table.
This is the amount we have received.
Name of account to credit.
So all these amounts we have received.
Dia on credit. So sale account will be credited. Sale account will be credited. Dia account will be debited. Why? Because sale is an income, credit on income side means, and Dia is the receiver of the goods. When we sell,
and we have paid.
So Dia is the receiver of the goods.
These three people. These three people we have paid.
So on credit from George Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account debit on
we have purchased goods on credit from Alan. So whether it is cash purchase or credit purchase, the purchases are always purchases. So you can write purchases, and we have taken Alan is the keeper of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recording. Return goods bought on credit to Alan. And we have got discount. These are the discount values. We had purchased, we are returning it back. So these are what purchase returns. So purchase returns are exactly reverse of purchases means purchase returns. So when we return the goods, Alan will receive. So debit the receiver, debit the account that receives, Alan receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So ultimately the payment, we have sold goods to Dia. The amount we have paid. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the goods. So this is how the cash book will look like. The amounts we have received from accounts receivable, the discount we have allowed, the cash we have received, the discount we have received, the cash we have paid. So this is what is cash book, and cash book will look like this. So this we have to record, and that is also done. So now, so because of purchase returns we have received money. What all we did? So we entered, we recorded, we prepared sales register, we prepared sales register, we prepared purchase journal, we prepared sales journal or sales register, sales journal we prepared, prepared purchase journal, we prepared sales return journal, we prepared purchase return journal, and we have prepared cash book also. We have prepared cash book also. So now what is left? So now we have to prepare ledger accounts. So what are the ledger accounts? Money will go. So we will receive joint limited bills. We have to prepare all the ledger accounts of all the parties. So we have received. So sales account. Sales account is always a credit balance. So we are not supposed to record each and every entry. We have to record the total. We have to record the total in sales account. So sales account we have to record the total. So first let us do the total. We have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go from bank, and the discount received is again. So this is the total of sales because of discount. So that is gain. Total of purchases. So these are the entries. So what you can do normally. So this is the total of purchases, sales returns. 2.3 David Hopkins, the latest book. So, okay. Dear friends, welcome back to Shasha's virtual classroom. This is practical sales returns, purchase returns, from David Hopkins, lesson number 2, credit transactions. So which of the following transactions? So before attempting this, before having a look at these answers, try answering. So how do we record? So come to ledger. So Sales always is a credit balance by sales
So which of the following transactions is most likely
journal
to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry?
we have to record here. So how much is it?
Cash discount will not come because money doesn't go or come in.
We have to
Cash
record this
sales, money
here.
doesn't go or come
So then sales return. Sales return.
to a customer.
Sales return is reverse
Obviously, money is paid,
of sales
money is credited. So
to
bank account is credited because
sales.
payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay.
Journal.
So money goes out.
So sales return journal.
This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods
Purchases
from
return.
Maria. So Joe's bought goods on credit from Maria.
Purchases is always debit. So two
Joe's bought goods on
purchases
from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded
journal.
170. Which entries record this transaction in the Joe's books? So for Joe's,
So total amount.
Joe's has
Purchases
bought,
journal.
so it is a purchase for Joe's.
This is the total amount. We have to record here. So remember, we should never record individual entries in purchases account. So we have to record the total. Then purchase return. Purchase return is reverse.
In Maria's
So
books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come.
journal.
It will
Purchase
never be
return journal.
recorded at cost 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account.
So we have to record like this. Now we have to record entries related to Piccolo. So how do we record entries related to Piccolo? So who is Piccolo? Piccolo is a customer.
Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara. On credit to Zara on 1st July. The goods are
Piccolo is a supplier. His accounts payable. So we have to credit him.
so they will be
So
recorded at 900.
purchase.
Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded. This will be recorded. She pays within 7 days.
Purchase we have to
So
record.
now which entries record his
Piccolo.
transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold. Sales entry will be recorded. Sales entry will be
So how much?
okay. So
Piccolo
will be recorded at 900.
8,000
Yes.
4800.
Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this. It cannot be this. It cannot.
So purchase return is also there.
So three things will be affected. So 882. So this is the entry, not this, not this, not
What is purchase return?
these are exam style questions, and this type of questions will come in AS.
Purchase return is
so try to
pay
understand,
20.
be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Most all the transactions for the major accounts, all goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below the
320.
video.
So
So
purchase return is
we'll catch up in the next class
320.
with the
So then
new lesson. So
we have paid.
have a good day.
So we have got some discount. Discount received is
Welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books are books of prime entry. So these are known as books of
24. So amount we have paid. Amount we have paid is cash. How much we have paid? So you can see the cash book.
Following trade purchases and purchase returns.
11856.
Purchase returns during the first 10 days
So,
of November. So first November
we have to see here and then
trade discount.
So 11856. Now let us just check.
From Cora for 10,000.
So now if we add all this,
trade discount of 20%. So this will be recorded
so that will be okay. So finally we have paid everything. So this is how the each and every account will look like. So we have to do the posting. So then accordingly we have to prepare all the ledger accounts. So now we'll prepare ledger accounts. So we have to see the transactions and then accordingly we have to prepare. So Piccolo we have purchased.
And cash discount.
We have purchased from Piccolo and there was purchase return of 320 and we have received a discount and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side very carefully. Then Piccolo's account is over. Now we have to prepare Snyman's account. So Snyman is a customer. We have sold goods to him. So we have sold. We have returned also. So we have allowed a discount and we have paid. So what are the amounts? Sales return. So the discount allowed, cash. So Snyman's account is also done. So now Walter's account. Walter is a supplier, is a accounts payable. We have purchased from him. So these are the purchases. We have received discount and we have paid cash also. So the discount we have received is 360 and cash we have paid is 6,840. So we can see from the cash book. Then again burger also we have purchased from burger. So 5,000 to 550. So there are purchase returns as well. So we have paid cash to burger. So what is the discount? Is there no discount? There is a discount, so we'll just see. Then let us first finish this. So remember burger account, we have to record purchases. So then cards, card. So we have sold goods to card. So we have to enter sales. We have to prepare card account. We have even made the sales return to him. So we are loading discount. So we have to record that. And we have paid. We have received cash. So even that we have to record. Then cards account. He is a customer. We have sold him. So 2,700. And we have allowed some discount. And we have received the balance amount from him.
So purchase account. Remember purchase.
So done. So what is left? Burger account. We didn't give discount. Let us check whether we give discount. We received discount from burger or no. Burger. Yes, 170. We paid in 4,080. Burger. We received discount of 170. We received discount of 170. 170.
So
cash we have paid.
very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see future.
So this is the amount of cash we have paid. Burger.
So unless the understanding.
Then which account is left? We have to prepare discount allowed and discount received.
Future concepts.
We have to enter discount allowed and discount received. So discount allowed we have received. So let us see. Discount allowed. We have allowed discount to these three people. Receivables. We allow discount to account receivables only, right? So we allow discount to receivables only. So we allow discount to these three people.
Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we will start with this. So if you have already learned.
And discount allowed is always a loss expense. And what is the amount? Amount also we can just
more than from there.
That is the amount.
So first we need to prepare purchase journal, purchase return journal. Okay. So let us first prepare purchase journal.
These are the amounts. These are discount that we have allowed. So and we have received discount from accounts payable. We have received discount. So we have to record here. So it is an income. So we will credit it. So who are the payables? Who are the accounts payables?
So what all will come?
These three are accounts payable. Ticolo, Walter, and Berger. Ticolo, Walter, and Berger are three are accounts payables. So we have discount from them. So the amount is
invoice number.
This. So the amount is this, and this. Okay. So this is how we have to see this. The chapter is very simple. That unless otherwise you do all these things, unless you do all these steps, your understanding will not be clear. Your understanding of the subject will not be clear, and ultimately will get stuck in accounts receivables, accounts payables, even the advanced entries, whatever are required. At that time, you get stuck. So they look very simple. So at least 1 or 2 problems you have to do. So kindly ensure that you do this problem without fail. So then this is done. So what I do is I will give this problem as assignment to you. So this is also from David Hopkins. So you can just try this problem on your own. So then, if you have any doubt, you can let me know in the comments. I will help you work out. I think you can do it on your own. So I am 100% sure. So please try and finish it. So we can move on to the next lesson. So this is very simple. So 1 or 2 problems are more than sufficient. So if you want, you can do this. So if you let me know as a comment in the comment section, I will definitely do it. Otherwise, I will assume that you have understood and it's very simple. So we'll move on to the next lesson. So next lesson is how to balance the accounts. How to balance the accounts. That is what we are going to learn in the next lesson. So till then, bye bye. Dear friends, so we'll continue with books of primentary. So this is another column which is there in David Hopkins. So prepare journal entries with suitable narratives to record the following. So prepare journal entries only to ledger accounts, never to other books of primentary. See here, journal entries with suitable narratives to prepare journal entries only to ledger accounts, never to other books of primentary. Received from Mumtaz, invoice number 506, dated 3rd March, 10,000. This was in respect of the purchase on a machine on credit. So this is the purchase of machine on credit. Okay, so it is purchase of machine. Machine is an asset. So it is not purchases. So it will not be recorded in purchases account because it is not purchase of merchandise. So it will be recorded in journal. So the entry will be recorded as machine account debit to Mumtaz. We are purchasing from Mumtaz. Okay, we are purchasing machine from Mumtaz. So the entry will be machine account debit to Mumtaz account.
Return goods on 4th November. So number 4. So what is the
Account debit.
So from whom we are
Mumtaz account credit. So the amount will be, so what is the date? Date they are not mentioned. So they have mentioned just A. Okay, invoice number 506. Purchase of machine on credit. What is the amount? Amount is 10,000.
See, remember one thing. So when we are writing the purchase journal, we are recording individual.
10,000.
We are recording individual entries.
10,000. So you have to write the narrations.
Very important. Okay, so this way you will remember this again. When you remember when you are preparing control accounts, when you are reconciling control accounts, at this time, at that time you may need this knowledge. So at that time you may need this knowledge because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay. So
that's all. So we have to record it. So it will not go to purchase account. So no subsidy. Books of primary entry, book of primary entry. So we have to record it in journal. Journal proper.
So we have to prepare cash book. So cash book order will.
So next. Invoice number 495 dated 6th March. Sold to Wayne. Oops. Sold to Wayne. The invoice has been entered twice in the sales journal. So has been entered twice, has already been entered, but it is entered twice. So we have to pass rectification entry. So what is the entry when we make the sale? When we make the sale, the entry will be Wayne to sales. So now you have to reverse the entry. Wayne to sales.
So this side is always credit. This side is always debit.
Now it will be sales account.
This is discount column.
To Wayne's account.
This is cash.
So the amount is 675.
So it is in dollars. This is also in dollars. So here, next first, what is happening here? So we have
Sales.
no cash transaction, no cash transaction, no cash transaction, no cash transaction.
Recorded.
Send checks in full settlement of their account to Cora and
Twice.
So we have paid to
Now
Cora and Frame.
reversed.
So we have paid to
And
Cora. Cora
recti.
But here we need to calculate.
So this is also done. Next one. So then we'll see what is the next entry. Invoice number 998 dated 7th March for 4,250 in respect of delivery van purchased on credit from Yunus and paid by check. So delivery van purchased on credit from Yunus. Delivery van purchased on credit from Yunus. So
what is the discount? So
40 to 50.
discount
4,000 to 4,000 to 50.
so discount 400
But
but
you see, what is the entry? What is the question? Invoice number 998 dated 7th March 2000 respect of delivery and purchase on rate from units and paid for by check. So there is a check payment also, but we should never record check payment because check payment will be recorded in cash. So only first part, which is purchase on credit from units, only that will be recorded. So remember, if you record, if you write payment entry, then it is wrong. Very well. So never do. Okay. So accordingly, you have to be very careful when writing the entries. So all these entries, which never come in any of the other books, will always come in journal proper or general journal. So this is general journal where we are recording because none of these entries are capable of being recorded in any of the prime, neither in the sales book nor in purchase book, neither in sales return nor in purchase return nor in cash. So other than that, whatever is there that should be recorded in journal proper. So next, credit note number 103 dated 10th March 1 for $190 sent to Brownie but omitted from the sales return journal. So you have given credit note but you have not recorded in sales return journal. Now you record it. That's all. So sales return journal. So how do you record it? So what will be the entry? The entry will be you have to write down in sales return journal and then the next step is you have to write down the journal entry that is you have to record the entry. So how do you record? Sales returns account debit to Brownie account credit. So you have to credit Brownie. Sales return account debit account debit
13,720.
to
So you have to pay
Brownie account
700. So this is the amount you have paid to trade. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November 9. So you have made the payment on November 9th. So this is the cash. This is how you have to receive record. So discount column.
What is the amount? 190. Yes, 190.
So this is done.
So you can write the entry full narration. So 190. So it's narrative. So you can write down full narrative. Sales returns. Now recorded.
Now we have to prepare ledger accounts. So purchase account is the first.
Sales
So
returns.
first we prepare purchase
Now
account.
recorded.
So we have to
Sales returns.
post all the transactions
Next.
at 10th November. So what we have to do 10th November. So November. So what is the date?
Invoice number 854 dated 15th March 1300 for goods purchased from Sandra. The the invoice has been posted to Geeta's account in error. So what has happened? It has been posted to Geeta's account. It is entered in purchases account, but the posting has been done wrong. The posting is wrong. So instead of posting to Sandra, posting has been made to Geeta. So it is purchased from Sandra. So you should have credited Sandra. Instead of crediting Sandra, you have credited Geeta. So what you have to do? You have to credit Sandra and debit Geeta. So the entry will be Sandra account debit to Geeta account debit. So the entry will be Geeta account debit to Sandra's account debit. Geeta account debit. Amount wrongly credited to Geeta. No rectified. So now rectified. So this is how you have to pass the rectification entries. So here you can write. See, it should be in debit column. This should be in credit column. Machine account debit, to Mumtaz account credit, sales account debit, Ryan's account credit, delivery van account debit, Yunus account credit, sales returns account debit, Brownie account credit, Geeta's account debit, Sandra's account credit. What is the amount? So the amount is 1300. So all these are rectification entries. So if you observe, all these are rectification entries. None of these entries will come neither of the books of prime entry, neither in sales register, sales this one journal, nor in purchase journal, nor in sales return journal, nor in purchase return journal, nor in cash book. Neither of the books that will come in the residual book, that is journal proper. So carefully you have to do this. So this is how we have to record. So this very important aspect. So entire chapter is based on this suspense account, rectification, suspense account. Lot of questions are asked in AS level. IGCSE also a lot of questions have been asked. So you have to be very thorough in this aspect. The debit and credit aspect you have to be very thorough. So we'll catch up in the next class. Till then, bye bye. Dear friends, these are exam practice questions from books of prime entry. So this is again from David Hopkins. So let us discuss this. So exam practice questions. So this is basically number 1. So now come to discount receipt. So again discount receipt is again. So discount receipt is again. So it will be created. So individually you have to write. Tanya purchase goods for 1000 less 25% trade discount. So trade discount is never recorded, but should be considered. So that is 1000 minus 25% is 250. She was allowed a cash discount of 10%. So cash discount will be considered at the time of payment. So entry will also be passed. Enter in her purchase journal. Purchase journal she has to record 750. So discount is never recorded at the time of purchase entry. Trade discount is recorded. Trade discount is recorded, but cash discount is not recorded at the time of in the purchase journal. It is not recorded in purchase journal. Next, Lara purchased goods costing 1800 less trade discount of 30%. So 1800 minus 30%. So that is equal to.
So I told six ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry
Minus
and
30%. It's
ledger also.
1260.
Both book of prime entry
So that is
and ledger. So no more, it is not required since we
okay,
have
so
already prepared.
she was allowed a cash discount of 5%.
Write down this.
She was allowed a cash discount of 5%
One
means
question.
she has to pay less. So how much she has to pay less? She has to pay 63
Post it to the ledger.
plus
Understanding
5%, no?
various
5% of this.
understanding various
So
concepts
63
is
less.
very very important.
So
Prerequisite for you
this
to
one.
score
This should be how much should Lara have to pay for the goods? It is 1194. So when we subtract this and this,
Welcome back to
it is
Shasha's virtual class.
1194.
So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of
See, these are exam style questions. So similar questions have been asked in the AS level examination. So these are not A level questions, but AS level. So but IGCSE also they have been asked. So then coming to this, Cora sent an invoice to Maria for 2000 less 20% trade discount. So Cora sent an invoice to Maria for 2000 less 20% trade discount. So okay, so 20,000, 2000 less 20% trade discount is 2 to the 4, 1600. So 1600. So trade discount will be considered, but never recorded. So we have to take the net amount. So 1600, it should be recorded at 1600. Cora has omitted to enter. She has omitted. So Cora has omitted. So has sent an invoice means she has sold. To enter in a sales journal. She has not entered in the sales journal. So obviously what will happen? Sales account will be understated by 1600, not 2000, because the trade discount will be recorded. So even Maria's account also will be understated by 1600. The answer is. So then come this one. Chiung has received a check of $1540 from Raju in full settlement of a debt of 1700. How should this be recorded in Chiung's account? So what has happened? Chung has received a check. So he has received a check of 1540 from Raju in full settlement of 1700. So there is a discount factor. There is a discount factor of 1700 minus 1540 is 160. So this should be recorded. Discount allowed should be recorded, and it should be recorded. How should this be recorded in Chung? So nowhere this should be recorded. Bank account this should be recorded. And this should be recorded. We have to consider as if we have received two money from this. So the entry will be this. This one will be. So accordingly, the debit and credit aspect should be very very clear. So practice these questions again and again. Often more and more questions you have to practice. So maybe a lot of MCQs we can discuss in the meantime. But before that, let us go through the entire syllabus so that the concepts are clear. Otherwise, just by solving the question papers or just by working out the question papers near the exam is not sufficient. Remember, slow and steady wins the race. So never ever think of shortcuts. Never resort to shortcuts. Start studying from day one. So start studying from the day one. So let's catch up in the next class. Basically, the next class is how to find the account. Till then, bye. Dear friends, Welcome back to Shasha's virtual classroom. So this is balancing of accounts.
So allowed discount. So remember this is allowed. Okay, so this side because when we pay at the time we receive discount, no? We receive, so it's credit. So but when we receive at that time we allow discount. So it's a loss. So we write here. So cash account sales 1000.
So this is a question from David Hopkins.
1000. So we write
So basically, it's a very small question. So, but
we receive we have to write
in
here.
this lesson, we'll learn
This is just for
how to balance an account. So balancing is nothing but
remember.
totaling up all the values and then
Let us see if they are writing.
finding the difference and putting it on the right place. So that is what is balancing of accounts. So
So here they are
this is the last step
received debit.
before preparation of trial balance.
So here
After this, we'll be preparing trial balance.
so this is
So before that, you should know how to balance
just for you.
the ledger accounts
Understand.
because trial balance is
Okay, so don't
prepared on the basis of balances of ledger balance. Balances of ledger. So in this question, this is a small question. So first, let us make a list of debits and credits so that
Electricity paid in cash.
our
So credit what goes out. So
writing ledger entries will become easier. So let's classify and write which account will be debited, which account will be credited in each case. So paid into savings, paid is savings into business bank account 10,000. So bank account, money is coming in bank account and capital.
credit what goes out, cash has gone out. Credit what goes out.
So bought goods for resale on credit from Joe. Bought goods, so purchases.
So we received, we have paid 100. So credit cash, cash account will be credited and electricity charge.
Paid rent of a shop by check. Rent.
Cash sales 800. So we are receiving cash again. So what date it is? It is on third 800.
Sold goods to Barney on credit. Sales. Barney.
We are receiving. When we sell, we receive. No, so receive. So 800. Next.
Made cash sales of goods. The money was used to set up cash flow.
Storing your bank the cash. We are taking out cash.
Made
and
cash
putting to bank.
sales of goods. Cash.
So the entry when we bank cash. So very important. Okay, so this students often get
Return faulty goods to Joe.
students often get confused.
Returns.
For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Bank the cash means you are depositing money in bank. So bank account will be
Returns
debited.
to Joe.
Bank account will be debited. Cash account will be credited.
Joe paid by check for the goods he had bought after deducting a cash discount. So Joe has paid means
We are depositing.
paid Joe by check. So we have paid to Joe
Cash is going out.
and
Cash is going out.
we will receive a cash discount.
Money is coming in bank. Bank the cash. So money is
So
coming in
this is discount received.
bank.
So then by check means obviously it's bank.
So money is coming in bank.
Then paid for postage by cash.
So money is
So postage.
So how much? 1400. 1400. So money is coming.
So now we have to prepare all these accounts. Bank account,
Cash will go out. So cash will go out.
capital account, purchases account, Joe account.
What date?
So
4.
ledger accounts, prepare necessary ledger accounts. 3-column cash book. 3-column cash book.
So remember,
Record the transaction.
you have to write like this.
So most of the entries will come in cash book also.
Remember, don't get
So and some entries will come in ledger accounts. So
and cash account will be created.
then balance the accounts 31st March and bring down the
Is this what
balance.
you have to do? Here you have to write
So we have to balance also.
this you have to write
So then what we'll do?
This is called contract.
So we'll start preparing all the accounts
It is affecting
one by one.
both the cash account and bank account on the
Okay.
opposite side.
So
So this entry will go where
capital account,
but only a
purchases account,
and
new account,
the cash account and bank
rent account,
account. It's called contra entry. Contra entry means cash
barney account, postage account,
to bank. So remember when here when you write
sales account, purchase returns account,
cash. So see here bank
and discount received account. So all these accounts we have to open.
so similarly here also
So now
it is cash column.
what is the first entry? Paid his savings into bank, business bank account,
So a lot of students they
10,000.
get confused with this.
So that is on March 1st.
Here. So understand
So March 1st,
what is happening. So cash is going out,
bank account
money is coming in banks.
should be debited with capital,
So then
and capital account should be credited with
stationery paid in cash.
bank account,
So stationery paid in cash.
10,000. March
We are
1st.
making the payment stationery. What date? It is on 5th. 5th. Stationery.
Capital account
How much?
should be debited with
20.
bank,
So
10,000. 10,000. So then credited, capital account will be credited. So capital account will be credited on March 1st.
So we drew 900 from bank for cash
First.
So we are taking out money
So
from
bank account,
bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in
10,000.
cash. This is exactly
Then
opposite of this. So we drew 900 from
first
bank.
entry is
So money is
completed.
going out from bank.
Bought goods for resale on credit
So
from
the
Joe.
entry is exactly
Bought goods for resale on credit from Joe.
money is going
So that is on March 2nd. Purchases to Joe. March 2nd.
and coming in cash.
Purchases
Cash. Cash is increasing. Money is decreasing in bank account. So remember, okay, cash account will be debited. Cash account will be debited and bank account will be
purchases.
credited. So understand this is very important. A lot of students
Purchases account will be debited with
they get
Joe.
confused. Understand this. This is very very important. We do 900 from bank for cash flow. Cash flow means to keep in
And Joe's account should be
keep
credited.
in office for cash expenses. So that is the meaning. Okay, to keep in office for cash expenses. So we have to record rupees we do 900 from bank for cash. So
what is the amount?
from bank
Amount is
cash. So money will go from
4,000.
bank. Okay, how much? 900. What date? 6th. On 6th. What is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important.
4,000.
So then again this. So what is happening? Money has gone out from bank. This is payment rate. So money
Then
has gone out from bank. So
what is the next
this
entry?
here you write cash.
Paid rent of shop by check. Paid rent of shop by check
So
on the
again,
same day.
this is where you have
Paid rent of shop by check.
cash column. So here you write.
So March 2nd.
So this is in cash column.
Rent account.
Cash column. But you are here again this your rent bank. So be careful. So again this your rent again contra. Why? Because it is hitting cash on
March 2nd.
bank on the on another account. Same. So very careful. Okay.
By check
So
means
a lot of students
bank
get
account.
mistake here. So this is very important. Important contra entries are very important.
The amount is
Lot of students
1,000.
mistake here. And cash book problem is very important in AS level.
So the entry is complete. So now come to the next.
So at least in tests, internal tests and all, it is
Sold goods to Barney on credit.
this. So even
Sold goods to Barney on credit.
is based on this. So that's why the concept should be very crystal clear for you.
Sold goods to Barney
Concept should be very clear.
on credit.
So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So your total here. So we total here. So whatever balance is there,
Sold goods to Barney on credit.
carry down. So this side here cash
Yes.
bank. So balance carry down.
Barney.
So what is the balance? So here this side was 1400. Here it is 900. So 1400
What date?
900 is
So it's on
500.
3rd March.
Here 500. So here
On 3rd March.
1800, 1800 plus 900. So 19 plus 8, 27. 27 minus
3rd March.
27 minus 1500.
So you know why it is debited, why it is credited, right? So this all these aspects are clearly explained in chapter 1 and chapter 2. So if you have any doubts, you can just revert back to chapter 1 and 2 to see which accounts will be debited and why and all the things, so that the concept is clear. So don't presume without with half knowledge. Don't try to do the problem. So be sure, 100% sure before passing the entries. So don't commit any mistakes, so that the concepts are clear. So if the concepts are not clear now, then everything will go wrong. So the amount is 2000.
Total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. Crystal
So
clear.
everything will go wrong. So be careful. Then, so the entry is complete. Sales entry is also complete. Made cash sales of goods. The money was used to set up cash store. So you are receiving cash on selling of goods, cash sales. So cash sales are happening.
This should be done as
So
100.
sales are always sales, whether they are cash sales or credit sales.
So both
Or if you want, you can write it separately,
balance
credit sales and cash sales separately. So this, since this is a simple problem, it's okay. You can write both merged together. So cash you are receiving. How much you are receiving cash? It is 550 bucks. So 550 you are receiving cash. So when is it?
let's catch up in
It
the
is
next
on
class. Till then, I
3rd March. 3rd March.
so dear friends,
So March
welcome back to
3rd.
Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following
So
items.
cash.
So what you can do is you can
So or otherwise you can write sales also.
look at this
It's
solution,
not
you
an
can
issue.
just try
It is
working
not
out
wrong to
the
write
question on your
sales.
own.
And
you
in
can
cash column you
write
write. So
solution. So
what is the meaning
if you
of
have any doubts, if you have any
cash note?
you
To
can
keep
just
it
leave a
handy.
message
To
in
keep
the
it handy. Cash to keep it handy. They have sold some goods
so
and they have kept money. So
will be
sales,
glad to help you. Okay, so prepare journal entries for each of the
the
following
same
items.
date.
So first one, purchase motor vehicle for use in the business
Cash account
from Paul, which cost 40,000. This is very simple journal entry. So what is there in this?
550.
So first one,
Okay, now
so we'll just write
coming
here.
to the next part.
So first one,
Returned faulty goods to Joe.
So what is
Returned
happening here?
faulty goods to Joe
We
means
are purchasing motor vehicle for use in the business.
from Joe
So
we had purchased. So it is purchase returns 200.
Suppose we
Fifth.
purchase motor vehicle
On
for
fifth
sale
there is
for
purchase
use
returns.
as merchandise in the business.
On fifth there
Then
is
it becomes
purchase
purchase. But
returns
when we use motor
to Joe.
vehicle, it will be recorded as an asset. because this entry will not go to any of the subsidiary books. Any of the subsidiary books or books of prime entry. So these entries, either of these entries will not go to
How much?
books of prime entry. It will not go to books of
200. 200.
So they will not go to books of prime entry. Why?
Don't forget to
Purchase motor
mention
vehicle
the
for use in the business.
currency.
What if it was purchase motor vehicle for
So
as a
to whom
merchant
we have
written
Joe we have written.
for
Where
sale.
is Joe's account?
Then this would have gone to
Joe's account is here.
purchase.
So
It would have gone to purchase register
March 5th.
or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business. Okay, for use in the business, it will be recorded in general journal. So it will be recorded in
What is the value? 200. 200.
So what are the various journals? Purchase journal, sales
200.
journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in journal.
200.
General.
So the sum entry is complete.
Entry here. So
now come to
motor vehicle account debit.
paid Joe by check.
So
The goods
motor vehicle
we had bought after deducting 5% cash discount. So
and credit
cash discount. So we have to calculate how much
debit
you are paying.
what comes in debit.
So 4,000.
Asset is coming in.
4,000 is
All
the
is the giver of motor
the purchase,
So that is why this will be debited.
and 200 is the return. So 3,800. 3,800.
So
we have to
pay.
pay 5% cash discount. You have to deduct and pay 3,800 minus 5%. 3,800 minus 5%. You have to deduct and pay.
Purchase of office furniture for business costing. Purchase of office
190 is the discount. 190 is the discount. 190 is the discount.
Office furniture for the business costing had been
you are paying
to purchases.
Joe.
So office furniture normally purchased to keep it in the office.
So 190 is the discount.
It has been debited to purchase.
How much you are paying?
So what to do?
3610. 3610. Yeah. Okay. So when you are paying this, you are paying this on 7th.
First, to understand this, you should know what is the right entry.
So you are paying this on
then
7th.
we have to understand what is the rectification entry. So okay. So what is the right entry? What is the right entry?
7th.
Right entry is debit.
So you are paying this on March 7th. What is the amount of rent you have paid?
Furniture.
Rent you have paid 1,000.
What is the wrong entry? Wrong entry is debit purchase.
Rent you have paid 1,000 and you have paid it by check.
Debit purchase. So the right entry is debit purchase.
So this is also done.
Now, so how to do it? What to do? We have to cancel out this and we have to bring in this. So
cash discount over. Paid for postage by cash 20.
We have to cancel
Paid for postage by cash.
and to bring this we have to debit. So what is the entry? Furniture account debit.
Paid for postage by cash. What date?
Debit furniture.
7th.
Furniture account. Credit.
Postage.
Purchase.
Postage account.
So what happens when we credit purchase? The purchase
By
which
cash.
will cancel out. So it will go off. There should be a debit for credit.
So postage account you have to enter in.
Debit furniture.
Postage
Because
account.
that is the right entry.
So you have to enter in postage account.
Purchase. So the entry will be rectified automatically. So okay, this is the entry. So next.
opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid
Cash.
for with 10,000 capital.
20
So 6,000 equipment, 3,000
7th
furniture,
March.
stationery.
March.
Equipment, furniture, stationery.
So dollars.
Debit.
Joe, you have paid, right? Where is the entry related to Joe's spending? You have paid to Joe.
Furniture.
How much you have paid to Joe?
Debit. Stationery. How much? So this is 6,000.
We have received cash discount received also. Discount received
6,000, 3,000, 1,000.
and you have paid
We have to credit what? Credit capital.
money to bank account.
Capital.
So bank account is 3610.
Owner is the giver of all these things. So we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is
190 is the
so capital is the
discount
giver. So
received.
capital is the investment 10,000.
So discount received also should be entered. Discount received is again.
Credit
So
note
Joe has
for 170 received
Joe
from B Jones, a supplier, has been
so
posted to C Jones
190.
account. So what is the right entry? Received from B Jones. So we have received credit note.
So the entries are over. So all the entries have been made. So please cross check whether all the entries have been done. So you can cross check, I am sure, but you also cross check. Then now
we have to debit B Jones.
Now
Understand this again. You have to analyze the
prepare the necessary ledger accounts and 3-column cash book. So we have prepared 3-column cash book. Balance the accounts at 7th March and bring down the balance. Now we have to balance and bring down the balance. Now this part is remaining. So we have to learn how to balance the account. So this we are going to learn. This is the main thing we will be learning in this lesson. So come to cash book. So cash book, what we have to do? Has everything been entered in cash book? Cross check once if everything has been entered. So then what you have to do? You total it up. So you total it up like this.
So this is the right entry.
So when you total it up, obviously
credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B Jones. Understood? You are getting credit. So you have to give, you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones.
okay. So you see, in the cash column there is a total of 550 on the debit side. Bank column there is a total of 10,000 on the debit side. Discount column there is nil. Here discount column there is 190. Cash column 20 is in credit side. Bank column there is 4610. So how we have to balance is, this side is heavier, this side is heavier, this side is heavier. So this minus this side minus this side, this minus this.
So we have to debit from B Jones. So this
So
is
basically
actually transfer entry, we can say. Okay.
balance carry down your right work.
Transfer entry. We are transferring from
Balance
C to B. That's all simple.
carry down.
So this is also transfer.
You have to write. Then what you have to do? You have to find the difference of this value and this value. You have to find the difference of this value and this value. So whatever comes, that you have to write. So
purchases to furniture. Okay. That's one. So
is equal to
this is first one is
10,000
principal
minus
second
4610. So
this one is open
5390. See, when you put this value, this both will become equal. So the total should be such that whatever amount you put, the total will be
activity 3.4. This is the
same. See, this should be same.
but
So
understand
to find that, we have to put that balancing figure.
similar question.
This is the balancing figure. That's why it's called balance
Be
curve.
careful to understand.
Similarly, here it is 550, here it is 20. So what you have to do here also 550 minus 20,
Shortcut is
530, so that even this
apply
both the total becomes 550.
so never try to resort for any shortcuts. Never do that.
And what about discount column? No, never. Discount column should never be balanced because it is just it is not part of double entry. We are just posting it. So we should not. We have to write this
So books of priority practice question.
directly to the ledger account. So it is discount received.
So
We have to write as it is. We should never balance this. Remember, we should never balance discount column. Never balance discount column. If you balance discount column, it's wrong. So when you are doing cash book problems in AS level and IGCSE, you may be asked one or two cash book problems. So never balance the discount column. Should never balance the discount.
in the comment section.
Then here, capital account should be balanced. So now I'm coming to here. This is the cash book is over. Cash book is done. So this is known as both book of prime entry and book of secondary entry also. It is ledger also because cash, it is cash ledger and bank ledger. So it is cash ledger, bank ledger. So that's why we never record. We never prepare ledger account for cash and bank. This is both. So it is both primary and secondary book. So now we have left out with the other accounts. What are the other accounts? Capital account. So capital account this side is 10,000. So this will become
760. So this is the answer.
balance. Carry down.
Sai received an invoice from Goya for 2000 less 10%
10,000.
discount.
So that both the sides are equal. So this is how did you get this? This is 10,000
Sai received an
minus 0 because nothing was there on the debit side. So the same value will come. So here the amount is same. So this will become balance carried down will become balance got down. When is this? This is March
So what effect will they have on size?
7.
So what is the entry? What is the entry for purchase?
So
Purchase account debit to Sai.
total
Purchase account debit. Purchase account debit.
10,000.
Jaya's account.
10,000. So balance brought down will be again 10,000. Balance
Purchases is an expense.
brought
So Jaya is creator. So supplier. So
okay.
it should be credited.
So normally nominal accounts like purchase account and sales account, they are not balanced. Why they are not balanced? They are directly taken into trial balance. They are just total and taken into trial balance. So rent account is not balanced. So you have to just total it up and take it directly to trial balance. So Joe's account. So if you see,
So basically, this is the books of question on books of prime entry. Books of prime entry like purchase journal, sales journal, purchase return journal, sales return journal.
both the sets are matched. So both the sets are same. So there is no question of balancing at all. So both they are already balanced. There is no balance brought down or carried on. So there is no difference. So that's why you should not do anything.
So I will definitely
Then rent account is a nominal account, expense account, so it is not balanced. So just we have to total and take it to the trial balance directly. Barney account. Barney is a customer, so accounts receivable. So we have to balance it. So it should be balanced on March 7. It should be written as balance carried down. So that will be same amount 2000. So again, the total is same 2000. Total should be same on both the sides. Remember, both the sides total should be same. So these are the totals. So what happens is 8th March 8th, they become opening balances. March 8th, they become opening balances. They become balance brought down. We have to bring down the balance. So that is 2000. So postage account is not balanced. It is a nominal account directly transferred to this one trial balance. Sales account directly taken into sales account directly to trial balance. There is no question of balancing. Purchase returns you should not do. So you should just directly take it to the thing trial balance. So discount received Joe account directly taken to trial balance. So what should be balanced is only the personal and real accounts and the assets and liabilities. That's all. Always assets and liabilities should be balanced. So whether they are non-current assets, current assets, non-current liabilities, only they should be balanced. In other words, the balance sheet items. So they are called the items of balance sheet. So these are assets. No, cash is an asset, bank is an asset. So it is something which we always keep. So it will always be running. So that is why. So see here, balance carried down will become balance brought down in the next year. So it was balanced on 31st March. On 7th March, the balance was 530 rupees. $530 and $5,390. So which became opening balance on 8th March, that is $530 and $5,390. So this is how we have to balance. So this is done. Goodbye. Have a good day. Hello, dear friends. This is one simple lesson with the classification of counts and division of the ledger. So we have seen in part 1, we have already everything complete. So this is a simple practice exercise, just to question up. So we can just discuss this. Complete the following table to indicate whether or not following statement is worth. The purchase of motor vehicle, motor car is revenue expenditure. It's false. It's not good because it is capital expenditure. It's false. So then the payment of wages to employees is revenue expenditure. True. The account of customer are kept in sales ledger. The accounts for customers are kept in sales ledger. No. It's false. The repairs of the office windows is an example of capital expenditure. False. It's revenue expenditure. It's not capital expenditure. The purchase of stationery is revenue expenditure. True. The sales account is a nominal account. The figure and fittings account is a real account. Fixtures and fittings account is a real account. Suppliers accounts are kept in nominal ledger. False. They are not kept in nominal ledger. Specific suppliers account payable ledger. The day-to-day cost of running the business are an example of this. Revenue expenditure. So complete the following sentences by inserting the correct word from the following list. The sales account records the dash of the business and example of dash account.
700 plus 450 is 1150. So 1000
Complete the following sentences by inserting the correct word from the following list. The sales account records the
minus
revenue is an example of
so
nominal
after
account.
putting into the balance,
Revenue,
carry out. So both the sides it should be 1150, 1150.
nominal account. The purchase of new machine is an example of capital expenditure.
So then
Non-current.
this one, George account. So what is George account? So George account, we have sold for 2300
Non-current expenditure and the account is an example of
so he has paid it. So everything is clear. So 2300 is sent,
real account.
2300 is sent. So there is no question of balancing account. Motor vehicle.
Small item expenses expenditure recorded in petty cash.
So that both the sides is the same. Cash account.
A dash asset is what to keep the business for a long period of time.
Debit balance means debit side will be everything. So 800 plus 100 is 900.
Non-current asset again.
This side it is 220, 45, 265. So 900 minus 265.
So here it's not non-current.
So
It's
balance
capital account.
is 65. So the total will be total balance will be
Capital expenditure. Okay.
so
Very simple problem. So we'll wind it up and
as you can see
we'll continue in the next class.
cash book problem. So the previous
Dear friends,
question 4.1 activity
welcome to
4.1
Shasha's
there we have I have clearly
virtual
discussed
classroom.
how to balance how to
So today we'll be discussing
so
trial
here
balance.
trial balance again. So here credit balance is here. Since credit balance is here, see if I have 5300 and this
How
side
to
is
prepare a trial balance
3500.
and
So since it is credit balance is here, so it will be here this side balance.
so here you can see there is a
Balance
practice
category will
exercise.
be
This
this
is
side.
from
So
again from David Hopkins.
5300
So
minus
you can see
3000 back. So
they are
1800
given all these things, all the details, sales, returns, purchases, and all they
balance
are given.
category will be 1800.
And
So this side total it is 5300. So this side also it becomes 5300.
prepare a trial balance as at 31st March, 31st December 2015 from the balance extracted
So
from
explain
active
why trade receivables are
books
not
and calculate the balance on its capital. So we are
trade
supposed to
receivables is normally an asset
prepare the trial balance.
from which
So how do you prepare the trial balance?
so they are always
So
shown
the
as
trial
because
balance,
they have received
the format of trial
again
balance
is
is
money, so own business money. So whereas trade
something like
payable
this.
are liabilities.
So trial balance as on 31st December 2025, particulars, debit, credit.
Dear friends,
So it is a statement, okay? So it is a statement. That's why it is trial balance as on 31st December
so
2015.
before
So
we look at this
you have to just plug in the figures.
and
So they would have given the details. We have to just plug in the figures. What will come in debit and what will come in credit. Sales. Sales will always come in credit. Sales return is opposite of sales. Sales always come in debit. Purchases always debit. Purchase return always credit. So you have to understand this. Whatever you have learned till now, you have to apply and then you have to prepare the trial. So coming to the question again here, see the question is here.
so what is liability? Liability is something you owe some other person.
So
So you have
remember
to
one
pay
thing.
some other person.
Before preparing trial balance, just remember one thing.
Assets
Assets
which you keep getting and which you can use for your
and expenses
business running the
or all debit balance. Okay, assets, real account assets. Assets means uh, plant and machinery, delivery van, bank. So all these are assets. So all these are expenses. So purchases, wages, heating and lighting, all these are expenses. Are all debit balance. They should be all be debits. So this will always be debit balances and they should appear on the debit side. Okay. So remember this, learn this by heart. So this is very much helpful. Very basic foundation to for balancing. Then liabilities and income. Liabilities and revenue are all debit balances. Liabilities and revenues are all credit balances. So what are liabilities? Liabilities are something we owe, right? So liabilities can be internal as well as external. So internal is capital. So external are like loans, accounts payable, all those are liabilities. So payables, all payables are liabilities. So these are all external liabilities, these are internal liabilities. So whether they are internal or external, they are always credit balances, revenue or income are all credit balances. They always authorize on the credit. So simple. So unnecessarily don't exaggerate, learn a lot of things, nonsense and all. Just remember this. You can do. You have to just identify whether the given particular item is debit or credit. So sales, sales is a revenue. So it is an income. It is a credit balance. So sales return is a debit balance. So purchases is a debit balance. Purchase return is again credit balance. Wages is again debit balance. Heating and lighting expense debit balance. Rent payable expense debit balance, rent receivable income revenue debit balance, advertising expense debit balance, postage and telephone expense debit balance, discount allowed expense debit balance, discount received income revenue credit balance, plant and machinery asset debit balance, delivery van asset debit balance, bank balance asset debit balance, trade receivables asset debit balance, trade payables liability credit balance, drawings opposite of capital, that is always debit balance, drawings by default credit balance, but it is balancing figure. So you have to put accordingly. You just put it on the debit side and credit side, and then you can you total it up. You'll get the value. So we'll just do it. So we can prepare the trial balance. So seeing the question. So here you can see this is the question which is available. So you can note down or take a screenshot or whatever. Or if you have the textbook, you can use it. Or take the screenshot and then we will just finish that. So now sales. Sales is an income. Sales return is an expense. Purchases is an expense. Purchase return is a reverse of purchases. Wages is an expense. Heating and lighting is an expense. Rent payable is an expense. Rent receivable is an income. So it should come on credit side. We'll rectify it. Post and telephone is an expense. Discount allowed is an expense. Discount received. So see rent receivable. So rent receivable is an income. So discount received is an income. Plant and machinery is an expense. Is an asset. So always a debit balance. So then delivery van is an asset. Always a debit balance. Bank is an asset. debit balance. Trade receivables is an asset, debit balance. Trade payables is a liability. Drawings always a debit balance. So then, so when we total it, we get these values 210,000 and 175,000. So capital will be the balancing figure. So what you can do is 2 lakh 10,000, 210,000 minus 174,000. So see, when you put this will both tally. So this is balancing figure, simple. So it's very simple. Just you need to know this concept. So just remember, all assets and expenses are all debit balances, all liabilities and revenues are all credit balances. Just remember this simple funda. It's very simple, very easy. So easy marks if it comes into question, and any question based on this either MCQs or it's easy mark. So don't miss out. So lot of questions are based on this balances, concept of balances. We'll be often using this technique in solving lot of problems. So be prepared. So we'll just finish this and we'll just see the next problem. So next problem is an inexperienced bookkeeper has extracted the trial balance as at 31st December from RB's books. It contains some errors and does not balance. Premises, this is correct. Of land and equity, this is correct. Office equipment, etc. correct. Wages is correct. Rent payable is an expense, so it should not come here. So it should not come here. It should come here. So heat and lighting correct. Other operating expenses correct. Sales is correct. Purchases is correct. Discount allowed is an expense. It should come here, not here. So discount received is an income. It should not come here. It should come here. Bank account is a debit balance, correct. Trade receivables is a debit balance, correct. Trade payables is a liability, it's correct. So purchase returns. Purchase returns are opposite of purchases. It should come on the right side. So it should not come here. It should come this side. So sales returns. Sales returns are reverse of sales. They should be debit balance. It should come here. Rent receivable is an income. It should come this side. Capital is a liability. Drawings should not come here. Drawings should come here. So that's all. So you can do this as a assignment. So it's very simple, very easy. So this chapter is done, and this is the end of bookkeeping. So we'll see. We'll start financial accounting in the next class. Till then, bye bye. So dear friends, welcome to Shasha's virtual classroom. So we'll be doing exam practice questions. This is again from David Hopkins. Similar questions are being asked in base level examinations. So this is from statement of financial position. Okay. So statement of financial position.
So purchase ledger. So even though it is purchase ledger, for the accounts of suppliers, it is not for the account of purchasers, it is for suppliers. So general
Now,
ledger for assets,
multiple choice question. The purchase of an office computer has been debited to office expenses. So where should that be debited? Office should be debited to non-current asset, right? Because it is office computer, so it is non-current asset. So it should go to non-current asset. Whereas they are debited to office expenses. So what has happened? The profit has come down. So the profit has come down. The profit is understated. The profit is understated.
So very important. So again,
the profit is understated.
So very important.
And even net current assets is also understated because it has not been shown as a part of non-current assets. When you don't show, then the asset is understated, right? So this is the answer. Simple. Okay. Then next one. So the owner of a business has taken goods for her own use, but no entry has been made in the books to record this. Oh, so it has not been made. So what happens? What row will show the effect of this
on the statement of financial position. So what happens? Oh, inventory will be showing higher. Inventory will be showing higher because your inventory has not been recorded. Drawings has not been recorded. So it will be showing. It will be overstated. What will be overstated? Inventory will be overstated. So then what happens? And even obviously the double effect, to complete the entry, you would not have debited to capital account. So the capital also will be overstated. So this is the right. Okay.
So activity 5.3, complete the following sentences by inserting the correct word from the following list. So the following list. So dash method contains the accounts of suppliers from the business based on credit.
So the following information has been extracted from a statement of financial position as of 31st December 2015. Non-current assets are 310,000. Working capital is 30,000. Long-term loan is 20,000. Profit per year is 35,000. Drawings is 25,000. So non-current assets, working capital. So what are the steps? You have to add non-current assets and working capital, right? So you have to add the non-current assets and working capital. So that will be 3,40,000. 340,000. So long-term loan we have to subtract because it is non-current liability. Non-current liability you have to subtract. So that should be 320,000. So 320,000 is net assets. So we have done the problem already. So net assets should always be equal to capital. So what is the net assets? Net assets is 3,20,000. 3,20,000. So what was the balance on the capital account on 31st December 2015? So this has no relevance. This has no relevance. So if the concept is clear, you will not even think about these two items. You will just straight away see this and you will select this. So that's why the concepts are very, very important. You have to clearly understand the concept. If you have not understood the concept, then you will get this wrong and you will mess up. So don't be in a hurry when solving MCQs. Be careful. Carefully you solve the MCQs. Explore all the options. Be conceptually perfect. Be conceptually strong to secure A plus in A levels. Okay. So don't be in a hurry. Never be in a hurry. So which of the statements is not correct? Assets is equal to liabilities plus capital. Correct? No, liabilities, assets is equal to liabilities plus capital because assets is equal to liabilities. So capital is also internal liability. So this is correct. Okay. So capital is equal to assets minus liabilities. This is also correct. Just now we did assets minus liabilities is equal to capital. This is also correct. Then capital minus liability. Capital is also liability. This is also liability. They cannot be equal to asset. This is wrong. So this is the correct answer. So liabilities is equal to assets minus capital. Correct. Assets minus capital will always be equal to liabilities. So you can do this using the formula. So by substituting here and there this one. So you know that, right? So assets is equal to liabilities. So you might have already learned this in basic accounting, like accounting equation. So you might have done a lot of problems also based on this. So if this is the first lesson that is taught in accounting, so you must be knowing this. So when you just crisscross this, when this comes this side, it becomes minus. When minus comes this side, it becomes plus. So all these things, you know, if you know this basic simple math, then you can do this. So simply, so this is the answer. So this is over. So we have covered statement of financial position. One simple problem also we have done. We have done MCQs also. So we have understood the concept very clearly. So please share. Please spread the knowledge. Please share so that others also get the benefit of my classes. Okay. Thank you. Have a good day. Good night. Dear friends, welcome to Shasha's virtual classroom. So today we will be discussing statement of financial position. So we will be, this is very important class. So
Please have patience and focus on this. It's very important. Okay. So, statement of financial position. Financial position. So first step is non-current assets by default. Okay. So non-current assets. First, you should understand what are non-current assets. So you have to make a list of non-current assets. The trial balance should have been given. So from that you have to make a list of non-current assets. So what are the non-current assets? Non-current assets are those assets which are intended to use in the business for a period of more than 12 months. For a period more than 12 months from the date of financial statement. So very important. Okay. So non-current assets are those assets which are meant to be used in the business for more than 12 months from the date of financial statements. So what are financial statements? Income statement, statement of financial position, and cash flow statement are known as financial statements. So basically here, what all is included? So you have to include, you have to prepare the list in such a way that most permanent ones are written down first. For example, land and building. Land and building. How many years do you use land and building? Maybe forever. So land you will never intend to sell. Normally you will never intend to sell, and building maybe you may again you may change it after maybe 15 years or 20 years, or maybe after 25 years or 30 years or something like that. But land will never be. It's not intended. So it is more permanent. It is most permanent. Then what is the next one? Next one is machinery. Okay, so plant and machinery. So plant and machinery, maybe you can use it for at least 10 to 15 years, unless there is any technical changes. So the next one. So then comes vehicles, motor vehicles or vehicles. So because you'll be using them for a longer period. Then comes furniture. So non-current assets are those assets which are intended to be used in the business for more than 12 months from the date of financial statement, and they should be written down in the order of permanency. So first land and building, then plant and machinery, vehicles. So based on whatever the items the business has, based on that you have to use your common sense and you have to prepare the list. So that is the first step. You have to prepare, you have to write down the list of non-current assets. Then second one is current assets. So what are current assets? Current assets are those assets which may vary. So immediately after 12 months, if they say in the very next day, they may change. So what are inventories? Inventories are merchandise which are lying in the business after the on the date of preparing the financial statement. So inventory. So that is one thing. Then trade receivables. So what is trade receivables? Trade receivables are credit customers. Credit customers from whom we have to receive money. So to whom we have sold on credit and we are supposed to receive money. And the third one is cash and cash equivalents. Cash and cash equivalents. What are cash and cash equivalents? Cash and cash equivalents means it can be cash in hand, cash at bank. So maybe those fixed deposits which are immediately which can be immediately materialized, like very short-term cash deposits. So all those are cash and cash equivalents, particularly cash and bank balances. So we have this order is important. So it is recommended that the order of these assets should be in this particular order. So again, the items are based on the question. So whatever details have been given in the question, based on the items that have been given in the question, so the current assets, list of current assets should be. Then third one. Then third one is current liabilities. So remember, this is with regard to financial statement of sole traders. Okay, these are with regard to financial statement of sole traders. Because when you are preparing financial statements of company, the format is entirely different. The format is entirely different. The items are same, but the headings are same, but they have to be shown that the form of presentation is entirely different in case of companies and other entities. So be careful. So this is meant only for sole traders, and you have to learn this. You have to learn this how to go ahead with this preparation of statement of financial position, current liabilities. So what are current liabilities? What are current assets? Current assets are those which change within a period of 12 months. Inventories today, inventories may be something else. Tomorrow there may be something else. You keep buying and selling the goods. So similarly, trade receivables. So you keep selling, you keep receiving the money, so they will not be same. Cash also, cash will be received in pain, so that's why this will not be same. So because of this, all these are, what do you say, they are dynamic in nature. They are dynamic in nature, means they keep changing. So this is another way you can remember. You can just use your common sense to identify and make a list of current assets. What are current liabilities? Current liabilities are, say, trade payables. Okay, so what are trade payables? So credit suppliers. So you have purchased goods on credit, you have to pay them after some time. So maybe after 30 days, after 35 days, 40 days, 45, whatever. So you have to pay immediately. It is payable within a period of 12 months. So this also within 12 months. Okay, so trade payables. So again, what is the bank overdraft may be there? What is bank overdraft? You might have made arrangement with the bank to take money for a shorter period. So that is what is bank overdraft. So then what you have to do when you are preparing the financial statement? So remember, first you have to write non-current assets. Non-current assets you have to write. Then you have to write current assets. Then current assets. The figure total. So then this one again current liabilities total. So what you have to do is you have to find out current assets minus current liabilities. You have to calculate current assets minus current liabilities. So that is called working capital. So what is current assets minus current liabilities? So 2 minus 3. So you are not required to write what is working capital. You don't have to write this. This is just for you to remember so that you don't mess up when you are working out the answer. So always remember 1 2, 3, 2 minus 3. So whatever amount comes, you have to write here.
So before this, let us have a recap of what type of
Then
errors
fourth one.
and what are the different types.
So non-current liabilities.
So basically there are 6 types of errors that we occur when even when debit and credit totals in the trial balance.
So what are non-current liabilities? Liabilities that are payable after a period of 12 months from the date of balance sheet. Okay. So more than or after
Commission is nothing but
12 months from the date of balance sheet. For example, bank loan. So bank loan normally when you will pay after a period of maybe you pay after 2 years, 3 years, or maybe even 10 or 15 years also. So that's why it has payable after a period of 12 months. So what is the example, best example for this? Maybe you have taken a bank loan.
so not entered in the book of priority. So the entry itself is not recorded. You have purchased, but
So maybe you have taken long-term loan for many years. So which has to be repaid after a period of 12 months from the date of statement of financial position. Okay. So then even that you have to add. You have to add this. You have to add all this. So you have to add bank loan, long-term loan. So you will get one figure. This item you have to subtract. You have to subtract from this, and this is called net assets. Net assets. What are net assets? All working capital minus working capital. So net assets are nothing but non-current assets.
So what you have done, you have posted, but you have posted it to the correct side of the wrong
Plus
but the
working capital
account is in the center. So the payment for stationery is
minus non-current liabilities.
Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both class.
What is working capital? Working capital is nothing but current assets.
So expense or revenue or
Minus
or liability, whatever. So it is the same class.
Current.
But instead of posting to one account, you have posted to some other.
So very important. Don't get confused. Don't confuse yourself. Very important. So first we have to find out non-current assets. To that we have to add working capital. So what is working capital? Current assets minus current liabilities. Current. Okay. Current assets minus current liabilities will give working capital. So from that again you have to subtract non-current liabilities. So that gives net assets. So then the fifth item. The fifth item. What is the fifth item? Fifth item is owner's equity. Fifth item is owner's equity. Okay. So what is owner's equity? Capital at the beginning.
Revenue has been treated as capital expenditure and capital expenditure has been treated as revenue expenditure. Instead of the motor vehicles running expense amount, motor vehicle expenses are classified as expenses by the motor vehicles are non-current.
Add.
Okay, so it is wrong.
Net profit.
So what has happened? The person doesn't know where to record. Instead of recording in fuel per vehicle, he has recorded as motor vehicle.
So
that is wrong.
less
So ignore. Means he is not following the accounting principle. Does not follow the
drawings.
accounting rules.
So the net amount will be the capital. Owner's equity. Okay. So that net amount will be owner's equity. That is the capital. So ultimately, finally, net assets is equal to owner's.
So there itself you have written it wrong. So wrong amount is entered in the book of primarily for a financial transaction.
You have to follow these steps particularly in this particular order, specific order. Just follow this. You can do any exam problem in statement of financial position as far as sole traders are concerned. So you will just work out another problem, one simple problem to demonstrate this. How to find out how to prepare statement of financial position. Till then, have a good day. Goodbye. Good night. Dear students, dear friends, welcome to Shasha's lecture classroom. Today we will focus on important points in income statement. So they are very important in the sense that most of the students they commit mistakes. Often they think whether we have to how to treat a particular item. So to start with, important considerations in preparing income statement. So income statements are offered to be prepared in vertical form. Since it makes them easier to read, you should study and learn the vertical form carefully until you are quite familiar. So there are various forms. There is a horizontal form also and there is vertical form also. But 99% of the cases you will be doing vertical form. So you will be preparing income statement in vertical form. So it is very essential for you to study and learn the vertical form carefully until you are quite familiar with it, so that you can work out the problems with ease. Do not prepare journal entries for the income statements unless you are specifically asked to do. They might have been shown in the chapter simply to help you understand how entries are made. Okay, so there are so many entries. If you look into the chapter, income statement chapter, you will find a couple of entries. They are not important. In the essence, they are not important. So you don't have to prepare unless otherwise they are asked for. So you can just know it. So in the examination, unless otherwise they are asking you to pass journal entries, you are not supposed to. The heading is important. Okay, so the heading, when we start any problem, the first thing, the heading is very important. The fact that is the income statement for the year or month ended. So we have to write it as income statement for the year ended. The statement covers a period of time, so it is necessary to state the period. Okay. Goods taken by trader for personal use. Some goods, sometimes the trader may take out some goods for his personal use. So what we have to do, deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So they would have given selling price also. So you should not get confused. You have to always deduct at cost price. You have to deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So the adjustments will be reflected two places. Carriage inwards. Carriage inward is taken as part of cost of sales, not an expense. Okay. So carriage inward is what is carriage inward? Carriage inward is the amount spent on getting the goods inside the premises where goods are being traded. So that is why they are called carriage inward. So to bring in the goods inside for the trading purpose. So that's why they should be added with cost of sales. To sell the good, those are the expenses incurred to sell the good. That's why they are added to cost of sales. We should not treat it as an expense, like expense in the sense which we have to show below the line. So it should be considered as part of cost of sales. Carriage outward. The cost of delivering goods to a customer is carriage outwards and is debited in the expense statement as an overhead expense. Okay. So it is debited as an overhead expense. Double check the treatment of carriage inwards and carriage outwards. So carriage inward will be reflected in cost of goods sold and carriage outward will be reflected in overhead expenses. Wages treated at the cost of sales. Goods purchased may not be in a suitable condition for selling to customers. Sometimes what happens, they may buy the goods and they may do some work on it. So further work may be required to them before they are sold. So maybe some rectifications may be there or some final touches will be remaining. Some work is pending. So on that you may spend some money. So the wages paid to employees for performing this work. Which work? the additional work on the goods. Okay, so this work should be debited as part of cost of sales. So those that particular part of expenses, the cost which are incurred to improve the product, this should be treated as part of cost of sales. Gross profit. The gross profit is the profit earned on selling goods before any other expenses are taken into account. So, sales minus sales returns will give you net sales or net revenue. So, to that you have to from that you have to subtract all cost of goods sold. So, what is cost of goods sold? Cost of goods sold is nothing but opening inventory. To that we add purchases less purchase return. So, to that we add carriage inwards, and from that again we subtract the closing inventory. So what we get is cost of goods sold. So what you have to do from that once from net revenue we have to take out cost of goods sold. Then what we get is profit. So gross profit. So what is gross profit? Gross profit is the profit earned on selling goods. Okay, the profit earned on selling goods before any other expenses are taken into account. When there is no trading account, when there is no trading, there is no gross profit. It's very important. Okay. Some cases you may be asked to prepare a statement, income statement, where they would not give any opening inventory, closing inventory, even purchases may not be there, sales may not be there. For example, in case of service industry, service people who are rendering services, service business, they may not have any inventory. So then in that case, gross profit, the question of gross profit doesn't arise. The words cost of sales and gross profit are important and should always be shown. Okay, so never miss out. In a hurry, what most of the students they do, they forget to write cost of sales as a heading. They forget to write gross profit. So that should be avoided. So you should be very careful. So you have to write it. So the words cost of sales and gross profit are important and should always be shown. Should means it is mandatory. Always include the words cost of sales and gross profit in full. So avoid using short forms. So you cannot write COS, GP or something like that. So you should not use short forms. You have to use full form. You have to use full words. Include the words, full words. Okay. So you cannot use the short words. Any other income. You should add any other income to gross profit. So suppose you have got other than sales, if you have got any other income, you have to add it to the gross profit. Never treat it as a negative expense. Negative expense means don't deduct it from expense. Never do that. So you should not show it as negative expense in the expenses column. You have to just add it to gross profit. So because that is also income, but it is not from trading, it is other income. So that's why it should be added to gross profit. Overhead expenses. So we have to after you add up other expenses, there are overhead expenses which you have to uh, you have to show. So there is no particular order in which overhead should be shown in the income statement of sole trader. But it is often best to place the larger amounts before the smaller. So there is no particular order, which is not mandatory that you have to show it in particular order. But it is often it is a best practice to place the larger amount before the smaller. So that you show the bigger amounts first, then you show the smaller amounts. It is also a good plan to group together similar kinds of expenses. For example, property expenses, rent, heating and lighting, and insurance. So you can club up the similar type of expenses and you can show. There is no such prohibition that you have to, and this is not compulsory. So this is what is it is an option. So it is better if you do it. So the examiner will be impressed. Profit for the year figure. The profit for the year figure is important. You will need to use it when you prepare the next document, the statement of financial position. So for the year, you have to show. The profit for the year is important. You have to show after the end result is profit for the year. You will need to use it again when you prepare the next document. So the next, the chapter after this is the statement of financial position. There you will be using the net profit whatever you calculate. Other chapters where income statements is prepared. See, income statement is very important. So it's very important in the sense again when you study accruals and prepayment, this is another lesson. So another chapter, the matching concept. So in this also, we incorporating this, you have to prepare income statement. So again, there is one more chapter, provision for depreciation of non-current asset. Again, there also you have to incorporate the depreciation and you have to prepare an income statement. Irrecoverable and doubtful debts. Again, there is another lesson, another chapter called irrecoverable and doubtful debts. There also you have to incorporate these things and you have to prepare income statement. So this is the income statement is the base. So to that you have to make lot of other adjustments. So incomplete records. Even in case of incomplete records, you may be required to prepare income statement. Not for profit organizations. See, not for profit organizations means clubs and societies. So there may be a bar or cafe or something like that. So there they may be doing some sort of business. They may buy some inventory, they may sell something. So all those things. So even there you need to prepare income statement and you have to show it as income. There also you need to. So it is very important lesson. So very important. So but this is the base, and you have to learn all this as a comprehensive. So that is where a lot of students commit mistake. So you have to be very careful. You have to be very attentive. You learn each and every aspect. Learn every lesson carefully. Learn every chapter carefully. Work out all the problem before attempting the main examination questions. You have to be double sure. You have to be thorough in these particular aspects. Income statement is prepared in different forms. See, there are partnership accounts. There also you have to prepare income statement, but the profit is shared between the partners. So that is one difference. An introduction to the accounts of limited companies. There also you have to prepare income statement, but the format is entirely different. The form is entirely different. Manufacturing accounts, where manufacturing account, there are so many other aspects. There are a lot of details given about manufacturing entity. So there also you have to show a lot of other aspects, and there also you have to prepare income statement. So income statement is overall it's very important, and lot of questions are asked from income statement. So you have to be, it's very important topic. Okay. Income statement of service business. See, people who sell their services such as accountants, lawyers, dentists only require income statements. So they don't need trading accounts. So there is no question of preparing finding out gross profit because there is no trading. So if the business is a service business, one which does not buy and sell goods, then there will be no cost of sales. Okay, there is no cost of sales. You will need to show the income which will be the fees received less the expenses to leave profit for the expenses. So it's very simple thing. Okay, so keep these points in mind. This is very important. So then in the next lesson we will start with working out the problems. Okay. Dear friends, coming to income statement for sole traders, the following trial balance have been extracted from Hadley books as at 31st December 2015. So this is from David Hopkins. The following trial balance has been attracted from Hadley's books as of 31st December 2015. Plant and machinery 25,000, office furniture 6,000, inventory 1st Jan 11,000, trade receivables 4,740, trade payables 1,976, bank 3,327, loan receivable 5,000, sales 72,800, purchase returns to 144, wages 3,100, rent 4,000, heating and lighting 5,120, advertising 2,400, other operating expenses 2,010, loan interest 250, drawings 4,833. Capital 20,000, inventory at 31st December 2015 cost 9,000. Prepare Hadley's income statement for the ended 31st December 2015. income statement for the year ended 31st December 2015. So we have to prepare income statement. So based on this information, so it is add this income statement. So
it is credit balance. So what has happened? So it has been debited, has been posted to the of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance?
yes,
So too little debit.
31st December
No, this is wrong.
2015.
And 100 too much credit.
So
This is wrong. 100 too much debit. Correct. So it can be 100 too much debit. Let us see 100 too much debit and 100 too little credit. Correct. So this.
So heading is very important. So we have to write particulars and dollars, and date is also very important. So name of the trader also should come. Add this income statement for the year 31st December 2015.
Too much debit because you have debited.
So
Received is a credit.
what are the 5 steps? First we have to record sales and sales return. So sales minus sales return. So first
So you
step,
have not done this.
sales
So it is too less credit.
minus
So this is correct.
sales
Next.
return. So what are the sales and what are the sales return? Sales are
Check that the total of debit balances
72,800,
to find
1600.
to help find errors in the account,
72,800.
which is not a reason. Okay. So this is the reason. This is the reason to increase the sales of a business. That's all. So it's not a reason.
So
Okay. To prevent monthly
it will
reports.
be
So this is not a
71,200.
that has nothing to do. Trial balance cannot help increase the sales of a business.
71,200. So now
So the following balances have been extracted from these books. So
less
you can try working on this question.
cost of goods sold,
So
cost of sales, cost of sales. So in this,
prepare trial balance.
what will be there? So by default, first one is inventory as at first Jan.
Cross check.
Inventory
So sales is the credit.
as
So it will go to credit column. Sales return
first
is debit
Jan.
because it is reverse of sales.
So how much?
Sales is debit. Purchase returns is credit.
11,000.
Purchases. Wages and
So
salaries.
first Jan 2015.
Heating and lighting is debit.
11,000.
Rent payable is a debit because it is
Purchases.
receivable is a credit because it is revenue. Traveling expenses is debit.
So how much are purchases?
Expenses is debit. Discount allowed is a
Purchases are 28,440.
So plant and machinery is debit. Cash is debit. Bank
540.
is also debit.
Then
Anyways, it's a debit balance itself, so it is debit.
purchase returns are 2144.
Again, it is an asset debit. So trade payables, liability credit. Loan from TIG, liability credit.
214.
Drawings
Four.
is a debit. So balancing figure is so capital. So basically it should be credit.
So what else? Let us check.
It can be debit.
So carriage inward is there?
Cross check.
No, carriage inward is not there.
Check and put the balancing.
So purchases is over, purchase returns is over. So inventory at 31st December is 9,000.
So different.
Inventory at 31st December.
So that's all.
So even that we have to subtract. So
Accounting system.
if we add this, so it will be
We have
11,000
next lesson.
plus
From the next session, we have
28,543
final account.
minus
Financial accounting.
2144 3739. 37396. So minus inventory as it
Dear friends, welcome back.
at 31st December
Today we will be doing practice exercises
2015.
from credit transactions.
9,000. So 37,396 minus 9,000, 28,396. 28,000.
This
3 minus 6. So this minus this will give you gross profit.
So if it has, write down the names. These are names, okay? So write down the names.
So what is the gross profit?
Should debit or
Minus
before you start posting the transactions to them.
42,000.
Some trade and cash discounts before you post them their correct amounts. So first let us
this is the gross profit. So to
this
this we have to add other income. So let us see if there is any other income with that. So okay, so there is no other income. So other income will not come. So if you want, you can just write and leave it blank. Add other income. So when you are learning, you can just write so that you don't forget in the exams. So you miss out and again you have to scratch and again you have to go. There will be a lot of waste of power. From that side, it's better you make a practice of writing this and you write it as zero because there is no other income. So now less overhead expenses. What are the overhead expenses? So let us see. Wages, rent, heating and lighting, advertising. Wages, rent, heating, lighting, advertising. Wages, rent, heating, and lighting, advertising. So our wages is 3100, 4000. 3100, 4000. So 5120, 2400. Other operating expenses 2010.
There is a mistake, printing mistake. So if that is the case, then yes, because everywhere it's 10% discount.
2010. Loan interest.
So here we line item which cost 200. So minus 10% will be.
So totally up 8100 plus 4000 plus 5120 plus 2400 plus 2010 plus is equal to 16,080. 16,000. So these are all overhead expenses. So minus 42,804. 42,804. So 25,924. 25,924. So what is this? This is nothing but profit for the okay. So this is how you. So very simple. This was very simple. Very simple topic. But going forward, you will have a lot of adjustments. You have to. This will not be simple. But if you remember the steps, you can just increase the learning speed. So incremental learning. So you can learn, add more content to So prepare Hadley's income statement for there. Keep your answer. It will be needed again in chapter 8. So the answer you need. So answer whatever you have got is required because next lesson is statement of financial position. So in statement of financial position, we need to add the profit whatever we have. So profit whatever we have got, we need to add. So that's why that's very much important. So in the balance sheet, we have to reflect it. So that's why it is followed. So next, let us see. This is finished. We have completed one question. So let us see the second question. So the trial balance extracted from Piccolo results at 31st March 2016 is as follows. Sales 24,000, sales returns 3,600, purchases 1,20,000, 120,000, purchase returns 4,400, purchase returns 4,400, inventory 18,000, carriage inwards 5,000, carriage outwards 3,724, discount received, this is other income 3,060, discount allowed 5,020, wages 36,800, rent 8,000, heating and lighting 6,450, other operating expenses 1,143, fixture and fittings 9,000, office furniture 2,000, trade receivables 1,970, trade credits 2,130, bank balance 4,920, 2,496, drawings 20,427, capital 30,000. So during the Tekla had taken goods costing 2,000 for his own use. So this will come as a deduction from cost of goods sold. These are not been recorded in the books of in the books. Inventory at 31st December 2016 cost 20,000. Prepare Ticola's income statement for the year ended 31st March 2016. Keep your answer. It will be I needed again in chapter 8. So hopefully I think you can do this problem on your own. So if possible, take the screenshot of this question. Take the screenshot of this question and put efforts. Try to do it on your own. And if you don't get this, please let me know in the comment. I will do it. We will do it in the class. So otherwise, it will be assumed that you have understood. Then we have got, we have completed. So then we'll proceed to the next part. So I will give some time. Just take a screenshot of this question. So next class we'll do exam practice questions. So please let me know if you have any doubt in this question as a comment. So we'll have a separate class or I will just explain to you whatever doubts you have. So till then, bye bye, have a good day, good night. So dear friends, welcome back. Welcome back to Shasha's virtual classroom. So today we will discuss exam practice questions from income statement. So this is income statement. These are the questions from income statement. So we will discuss similar questions might have come or expected to come in AS level question papers. This question paper. So what you can do is you can take the screenshot of this, take a picture or try to answer yourself. So then we can continue and just check whether everything has been done correctly or not. So Which of the following does not appear in an income statement? So which does not appear? Carriage outward expense will appear. Carriage allowed, discount allowed will appear. Discount received will appear. So motor vehicles will not appear. So motor vehicles is an asset. So this will not appear. So the following information has been extracted from the trial balance of business. Sales 1 lakh, purchases sales 100,000, purchases 60,000, wages 21,000. Closing inventory was 3,000 more than opening inventory. So if closing inventory was 3,000 more than opening inventory. So one third of the wages was charged to cost of sales. One third of this 21,000 into one third is nothing but 3 7 27. So, a cost of sales in the trading section of income statement. What was the gross profit? So, they are given sales. So, let us do sales 100,000 less. So, this is just working. So, we can do here. We don't have to follow the rules like cost of sales or different enough. So, this is just to calculate. So, if you want, you can just write cost of sales. So opening inventory minus closing inventory is 3,000. It is more, right? So first is opening inventory. So we don't know. So we'll keep it in pending. So purchases 60,000. Purchases 60,000. Wages 7,000 to go in trading account. So that is cost of sale. So wages 7,000. So then what to do here? Opening stock is not given, closing stock is not given, but difference is given. So if you recollect, opening stock, opening inventory will be added and closing inventory will be subtracted. So since the closing inventory is more, so we have to subtract the closing inventory. So closing inventory. So 3,000. So please don't get confused. The concept is not clear. So just know this cost of sales is nothing but opening inventory, purchases less purchase returns.
Okay, so purchase goods from car, which cost
less wages,
less trade discount. So we are purchasing from car
minus.
So Gerard is purchasing from car. So purchases.
Okay. So purchases is given. Purchase returns are not there. So wages is given. So then opening inventory they are not given. Closing inventory was 3,000 more. So that's why we are subtracting. Okay. So very simple. So since we have to subtract, since it is more, so this is positive, this is negative. So apply plus minus. So whichever is greater, this is greater. So that's why we are taking 3,000. So it is 67,000 minus 3,000 is 64,000. 64,000 is cost of sales. So therefore the gross profit will be 36,000.
So now sold goods to lie.
Okay. So next.
So 540. So sold goods. So sales account. Sales and income always. And
the carriage inwards of business amounted to 6,000. Outward was 7,000. The carriage outward was charged in trading account. So this is a mistake. So it cannot come in trading account. Not come in trading account of the income statement in error, and the carriage outward was debited in the income statement. Carriage inward was debited in the income statement. Okay, so what is carriage inward? Carriage inward is 6,000. Carriage outward is 7,000. The carriage inward was charged to trading section in the income statement and the error. So what has happened? Cost of sales.
So how much it is written?
Dear friends, the third one, the carriage inward of a business amounted to $6,000 and the carriage outward was 7,000. The carriage outward was charged in trading section of the income statement in error, and then carriage inwards was debited in the income statement. What has been the effect of these errors? So the carriage inward. So okay, see here. The carriage inward 6,000. Carriage outward is 7,000. So what is the rule? The rule is carriage inward should be considered as part of trading section. So that is called part of cost of sales. But here what has happened? The carriage output was charged in trading section. This should not come. Carriage output was charged in trading section. So carriage output was how much? Carriage output is 7,000. So this is 1,000 more. So what has happened? So if it is 1,000 more, then gross profit will be understated or overstated. So I want you to be clear in this. So see whether it is carriage inward or outward, there won't be any effect. So for the profit for there won't be any effect. So this is correct, and this is correct. But we have to see among this which one is correct. So don't try to answer the question with the trial and error method. So try to understand the question. So work out. Take some minutes. So it's small time, a bit of time. So just to understand this one. So third one. So let's assume sales. Let's assume revenue as 90,000. Let's assume this is just assumption, okay? So less cost of sales. So assume purchases as 40,000. So now what you have to do? Carriage inward is 6,000. Okay, carriage inward is 6,000.
So it is discount received. So it's an income.
So this is the actual treatment. So what should be the profit? So 90 minus 46 is, so 90 minus 40 is 50, 50 minus 6 is 44, 44,000. The gross profit should be 44,000 if the actual treatment is done. Now, this is the correct one. The correct one. So now the wrong. So what has happened? So revenue is 90,000 itself. Cost of sales purchases is also 40,000. What they have done? Carriage inward. Instead of taking carriage inward, they have taken carriage outward. Carriage outward they have taken the 7,000. So what has happened? So this is carriage outward. So 90 minus 40, 50 minus 7 is 43. The gross profit is showing more or less because of the wrong error. Gross profit is showing less because of the wrong treatment. The gross profit is understated. Gross profit is understated by 1000. See, this is how you have to confirm yourself. See what happens, most of the students, because of hurry in the examination, they hurry, and because of this they commit mistakes. So they try to answer it in a trial and error way, and easily they will lose marks. So never do that. So hardly it will take 1 minute to confirm yourself. So it is understated. So the correct answer is understated by 1000. So now we are double sure. So we have checked the figures and we are double sure. So this is the answer. So this is how we have to do this type of problems when there is a bit of confusion. So you have to confirm yourself whatever you are doing is right or wrong. So next one. So what I suggest you is, always when you are doing the MCQs and whenever exercises are given, always you have to try solving on your own. Just see the question, try, stop the class. I mean, stop the video, pause the video, just try to work out the answer on your own, and then you compare with the actual solution, so that you are then only the learning will be more effective. Otherwise, the learning will not be effective, and ultimate result will not, you will not get the ultimate result. Okay, so never do that. So please follow my instructions, so that the purpose should be served. Don't waste time unnecessarily by trial and error methods and all. Okay. So now come to the next one. So let us see this one. Discount received amount to 10,500. Okay, discount received 10,500. Discount allowed 13,000. So the discount received has been debited. Discount received have been debited. So what we have to do? Discount received should be credited, right? But they have been debited. Okay, and the discounts allowed have been created. Discounts allowed should be debited because it's in loss, it's an expense, so it should be debited. So this is wrong. This treatment is wrong. This treatment is wrong. Okay, in the income statement, what has been the effect of errors on the profit for the year? So was understated, overstated, understated, overstated. So don't try to answer this the hinky panky way. So let us see. Let us assume, and we will do the problem. So then the concept will be clear. So fourth one. So fourth. So profit before discount. Okay. This is the correct profit before discount. So let's assume it is 40,000. 40,000, 40,000 in both the cases. Then we'll do the actual treatment. Okay. So we'll do the actual treatment. So we'll deduct discount allowed. Because discount allowed should be deducted, right, from the profit, because it is an expense, so it should deduct. So what is discount allowed? Discount allowed is 13,000. Discount allowed is 13,000. So what we have to do with the discount received? Discount received we have to add, because it is an income. Discount received we have to add. Because it is an income, what is the discount received? The discount received is 10,500. So this should be subtracted and this should be added. So what will be the net profit? So what should be the net profit? 37,500. Okay, so we are assuming that this is the profit before discount. So this type of problems we have to do this way, so that the understanding is clear, so that we are sure what has happened and what is the effect, net effect. Otherwise, don't try to do some wrong methods, wrong calculations, and try to ultimately. So whatever method you do, ultimately you have to get the correct answer. So that is what it is. So what has been done? They have actually this is the right one. So this is the right one, and this is the wrong one. So what has happened? Wrong one. What they have done? They have deducted 10,500 and they have added 13,000. So then, what will be the profit in this case? So because of the wrong profit, 40,000 minus 10,500 plus 13,000. The profit will be 42,500. 42,500. So it is more. The profit is more. Okay. So it is overstated. It is overstated. Overstated by how much? 42,500 minus 37,500 is 5,000. It is overstated by 5,000. See the concept. You are double sure now. It is double sure. It is certain. There is no hinky panky. Like no, you are not trying to guess and write the answer. Never do that. Never do that. Okay. So never do that. So the answer is overstated by 5,000. Overstated by 5,000. Okay, so this is how you have to do. What a lot of the students they do because of hurry, because of the exam stress, they will just try to guess and they will ultimately put either of this one and ultimately they will lose marks. What is the purpose? The entire year you have put efforts and because of some small mistake you will lose marks. So please don't do that. So please be careful. So please learn the ways and methods how to actually get the answer. Now, carriage inwards in a trial balance is 2300. Carriage inward in a trial balance is 2300. It has been entered in trading section of the income statement. Again, trading section as 3200. In addition, motor expenses of 600 has been posted to the motor vans account. What effect has this on the income statement? So again, we'll not just do it. We'll not just try to do blindly. We'll just try to analyze by understanding the question carefully. So we'll just do it again here. So again, income statement. So let's assume profit before these frequencies again 90,000. This is right. This is wrong. Okay. So what has been done? Carriage inward in the trial balance is 2300. Carriage inward is 2300. But it has entered in trading section of income statement as 3200. Wrong treatment. What we have done? We have taken it as 3200. Okay. Then next one. Motor expenses of 600 has been posted to the motor vans account. So motor expenses. Motor expense is a expense. So it should go to reduce the profit. So motor expenses. Motor expenses 600. But what they have done? Motor expenses. Motor expenses have been posted to the motor vans account. It has gone to motor vans account means it has not been shown in. It has not been shown in income statement. So now let us see. So what is the right thing? After if you do the right one, so it will be 90,000 minus 2900. 2900 87,100. 87,100. So 90,000 minus 3,200. 86,800. 86,800. So the profit is understated. So what has happened? The profit is understated. It is understated. It is less now. So it should be more. The profit should be more. But the profit is less. The profit is understated. So what is the profit? It is understated. Understated by how much? 87,100 minus this one is 300. Understated by 300. Understated by carriage in understated by 900. Gross profit, okay. So the profit, okay. So this one, this is overstated by 300. Or understated by 300. Understated by 300. And even gross profit also will be understated by 900. See, gross profit is also understated by here. Gross profit is okay. So we need to find even gross profit also. So my mistake. So we'll just do it again, once again. So please bear with me. So assume profit 90,000. So 90,000. So this is just to find out the gross profit. Okay. So less carriage inward is 2300. 2300. And this has been shown as 3200. So this is just to find gross profit. Okay. So what is the profit? Let us see. So 90,000 minus 2300 is 87,700. So then 90,000 minus 3200, 86,800. So gross profit. So actually gross profit should be more. Here it is showing less. So it is understated again. Understated. Understated by how much? Minus 87,700. 900. Understated by 900. So this one is correct. Understated by 900. This one is correct. This one is correct. So please be double sure. So don't try to guess. Don't try to do the problem without understanding. Never do that. Okay, please never do any problem without understanding. Have a clear-cut understanding of the concept, and please do it, so that each and every mark is very, very important. So please do it. Use my classes very carefully. So please share and subscribe. Let others also grow. So let others also get help from this. So be generous. So we'll catch up in the next class. Basically, I will be starting the next one, that is statement of financial position, in the next class. Till then, have a good day, good night, goodbye. Hello. Welcome to Shasa's virtual classroom. So today we will do a recap of whatever we have learned till now. So basically this is a recap session. So in this lesson we will discuss what all we have done till now. So the first lesson was cash transactions. So in this lesson we learned how to record cash transactions when payments are made and amounts are received. When amounts are received in received and paid. So that is what is cash transaction. Cash transaction means money is paid to someone and money is received from someone. So how to pass those entries? So that's all we have learned. So here in this we have learned all about personal transactions, like when we receive money from accounts, personal accounts, how to record them. So when someone gives money and someone receives money, how to record it. And we have even learned how to record expenses, how to record when payment is being made or received. So all these things we have learned in cash transaction. In lesson number 2, we learned credit transactions. So what are credit transactions? Credit transactions are those where amounts are not paid, where amounts are not paid or not paid. So or not paid. So that is why it's called credit transactions. The payment is not made instantly, or amount is also not received instantly. So again, how to record when amount is not received, and again when there is a transaction with personal account, when there is a transaction with expense account, income account, and all other stuff. So we have learned in credit transactions. How to record credit transactions we have learned in second lesson. So we have done couple of questions. So here also we have done couple of questions. In this also we have done couple of questions. We have discussed a couple of questions. Please go through that. And then again, third, we have learned books of time entry. We have learned about books of time entry. So what are the books of time entry? Sales journal, sales journal, purchase journal, sales return journal, purchase return journal, cash book, general journal, or just journal. Okay, so what is recorded in sales journal? All sales, all particularly all details of sales, particularly credit sales, are entered in sales journal. Purchase journal, all credit purchases are recorded. Sales return journal returns when customer returns the goods, then whatever entries we make, so that is made in sales return journal. Purchase return journal, we record the purchases, we reject the material and when it is given back. So that is what is purchase return journal. So that is written in purchase return journal. So in cash books we record amounts received and paid, whether cash or check. Okay. So cash or check. And even discount column also we have learned. Discount column, how to write discount column. So we have learned how to record entries in sales journal, purchase journal, sales return journal, sales return journal, purchase return journal, cash book, general journal or journal. So what is we entered in general journal? Adjustment entries like outstanding expenses, prepaid expenses. So purchase of non-current assets, purchase of machinery, purchase of how to rectify entries. So for a non-current assets, entries related to non-current assets, rectification entries. So basically, what all doesn't come, what doesn't come in sales journal, purchase journal, sales return journal, purchase return journal, cash book. So that will be reflected in general journal or journal. So that is how it is. So we have learned how to write these and all. So then how to post it to the ledger also we have learned how to post to ledger. And again we have learned division of classification of accounts, division or classification of ledger accounts. Ledgers also we have learned. And so in ledger we have learned how to post, how to prepare, all these things we have learned in ledger accounts. So then division or classification of ledgers. So what is the purpose? How many different classifications are there? So all those things we have learned. And we have learned the balancing of ledger accounts. Balancing of ledger account. So that is how to do the balancing of ledger accounts. And we have done one comprehensive problem also. Comprehensive problem to cover up all these aspects, and we have prepared, ultimately we have prepared trial balance. So how to prepare trial balance? Prepare trial balance. What is trial balance? How to prepare trial balance? The format of trial balance, the procedure, the structure or the design of trial balance. All these things we have learned. All this, whatever is there, whatever we have learned, all this is known as bookkeeping. So all this is known as bookkeeping. So till the preparation of trial balance, the work is done by bookkeeper. Or clerk. So after this, the next step starts. So the next step is known as financial accounting. So the accountant does the financial accounting job. So he starts with financial accounting. So next lesson. So here onwards we will be doing financial accounting lessons, like how to prepare income statement, how to prepare balance sheet, what are the difference. So the main accounts here till here was all basic, but very important for you to get understanding of accountancy. So now from the next lesson onwards, we will start financial accounting. Till then, bye bye.
Dear friends, welcome to Shasha's virtual classroom. So today we'll be discussing books of prime entry. Prime means first, initially. So as soon as the transaction happens, we record it someplace. So what are the different types of transactions that happen? So we sell goods. So they are known, and when goods are returned, when sold goods are returned, they are known as sales return. We purchase goods, it's known as purchases. If the goods are not of good quality, we may return the goods, purchase return. business even receives and pays cash, even that is recorded. So apart from that, there are a lot of other things which are recorded. So when they happen initially, as soon as they happen, we record at one place one books, certain books, okay, certain books, certain books. So we don't write in haphazard way, we write in certain books. All sales, we record in sales day book or sales register or sales day book. It is also known as sales day book. Similarly, some customers may return the goods, so we record them in sales return register. So when purchases are made, all the purchases are recorded in purchase register. Similarly, if the goods are not of good quality, we may return the goods, so they are recorded in purchase return register. So when amounts are received and paid, receives and pays, when business receives and pays, so it is recorded. So they are recorded in cash. So summary of receipts and payments, whether cash and bank. It is if you receive by check. So all those will be recorded in cash. So a lot of other entries like purchase of non-current assets, because purchase of non-current assets are not purchases, right? So it will not come. So purchase of non-current assets. Adjustment entries. All these entries are recorded in a book called General Journal. General Journal or Journal. So we have to write the specific transactions in specific book itself. We cannot mess up. So the entries cannot be messed up. Okay, so this is the fundamental rule. So in this lesson, we will learn how to record the entries in the books of prime entry. So how will be the books of prime entry? So you can see the books of prime entry will be like this. So the dates will be there, particulars will be there. So date means date, particulars means party's name will be there, from whom to whom we have sold. So obviously customers, name, date will be there, customer's name will be there. Everything will be entered in sales return. So sales return journal, again customer's name will be recorded. So again date, particulars. So particulars, customer's name will be recorded, and amount also will be recorded. Similarly, in purchases journal, we record supplier's name. Supplier's name and details of what is the amount of transaction of this. So again, purchase return journal also we record suppliers. So obviously date will be there, all those things will be mentioned. So this is how the entries we have to enter. So in this specific format, specific, what do we say? Order itself you have to write. So we have to write specifically like this. So this is a list. Actually, these are the lists: sales journal, sales return journal, purchase return journal, and purchase journal. These are all lists. Okay, so these are all lists. Lists of lists of sales return, list of sales purchases, list of purchase return. So everything will be there. So from here, once we write here, so what happens next? So sales return, sales. What happens? There are two things. One is sales and one is customers names. Customers ledger. So sales, what we have to do is we have to add all this, whatever the amount comes, we have to enter into sales count. We have to enter in sales. Sales account. So sales journal is different. Sales account is very important. Similarly, sales return journal, whatever the total amount, we have to enter in sales returns account. Total, this total. Total amount. Recorded sales account. Total amount. Recorded sales returns. So then. So purchases. So purchases. Total purchases will be entered in purchases account. So purchases account. So again here this total amount. Will be entered in purchase returns account. So this total will be entered. So the supplier's names. So the details of, suppose this is Mr. A, Mr. B, Mr. C. It will be posted to the respective ledger accounts. Let us say here customer say Z, Y, X. So suppose these are the customers. So we have to transfer, we have to make the entries, corresponding entries in Z's ledger account, Y's ledger account, X's ledger account, V's ledger account, respectively. So separately we have to record. But total of sales we have to record to sales account. Only one. So aggregate. So aggregate will be recorded in so no individual. Okay, no individual. Should not record individual entries again in sales account. The total of sales journal will be recorded in sales account, whereas customers accounts will be independently recorded in the customers respective customers. The same rule applies for even for sales returns, purchases, So remember, sales journal is different, sales account is different, and total amount of sales or sales return, purchases return, only total is recorded in either sales account or sales returns account or purchases account or purchase returns account. Aggregate will be recorded and individual entries will be posted to individual accounts. So then sales register versus sales accounts. So remember, this is very important point. So often asked in MCQs, so you have to be very clear with this. So then similarly, sales register, sales return register versus sales returns account. So both are different. So then cash. So we have discussed the sales register, sales return register, purchases register, purchases return register. So when we receive and pay, we record in cash book. Cash and bank columns will be there. So cash book. So the format is see, cash book we have to record in this way. So cash book will be usually divided into two parts. So debit part and credit part. So in debit part, date, particulars, from whom the cash has been received, folio, ledger folio, number, discount. So there is one column for discount also. So when we receive money, we may allow some discount. So that discount will be recorded here. When we receive cash, we record here. And when we receive checks, we record in bank. Similarly, date, particulars, folio, discount. So when we make the payment, we may receive some discount. So we record the discount here. When we pay by cash, if we pay by cash, we record here. If we pay by check, we write it in bank column. So very important, this particular format. So very important question. So often asked in AS level exams. IGCSE also this question is often asked. So cash book very easy marks. So just you have to remember the format and just plug in the figures. So very simple, very easy, but format is very important. You have to write this in this particular way. So it's very important. So format oriented. So format is very strictly how to follow the format. Then last, general journal or journal proper adjustment entries. So journal. So the format of journal is like this: date, particulars, folio, debit, and credit. So whatever is debited, we write here. Whatever is credited, here. So this is also from here we just write it as a for reference. From here we are recording for respective ledger accounts, and cash book also we record the entries, and from here we post it to respective ledger. So remember this. So it's a very simple chapter, very simple lesson, and but basically to understand accounts you have to do all this. You have to understand all this, otherwise understanding will be incomplete. So we'll wind up. Next class we'll work out one problem based on this. So we'll work out one practice exercise based on this. So 1 or 2 questions will be more than sufficient, because we just need to know how to record it and how to post it. So until then, bye bye. So we have to take after discount and we have to record it after discount. So return purchase return we have to record after discount. So it's not 400. So it is $320 and further is 1 more. So we have to record it net of discount.
So now last time to receive from check. Receive checks. So we have to consider the discount also. The discount part, everything we have to consider. So let us make the working. So here it is. So Simon, we have sold the so Simon, what the this one? These are the returns total. Again we have purchased. Again we have sold this one. So total amount is 2500. So totally 2500. We have given a discount of. We have already discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving. So I made all the amounts, list of amounts. So these are all sales or purchases. So these are all sales. These are also sales. These are all sales return. These are all purchases. These are all purchase returns. Again, these are purchases. These are the cash discount. This is cash discount. This is cash discount. So after this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming. So we have to do like this. So first we calculate. So this is the amount, net amount. These are the amounts that are received, and these are the amounts that are discount. So we have to write it. So where do we write? So all these three guys have paid. Three guys have paid. So how much they have paid and what is the discount? We have allowed them a discount. This is the discount we have allowed. So rules to remember. So a business normally deals with persons, whether natural, artificial, or representative. So when we deal with any person, then they are called personal accounts. So either we receive from them, or we pay, or the business will either receive or pay or give to the other business. So the rule is debit the account that receives or debit the receiver. Debit the receiver. So some authors they write this way. So debit the account that receives or debit the receiver. Like David Hopkins and all, they use the first rule, that is debit the account that receives. They write it that way. So some other authors they write debit the receiver. Similarly, for credit items, they write credit the account that use or credit the give. So some authors write one way or the other. So the rule is ultimately the same. I mean, the concept is ultimately the same. Real account, debit what is being received. So in case of real account, when we receive or pay something, when business receives or pay something, so then debit what is being received or debit what comes in. So credit what is being given away or credit what goes out. So this is the rule for real accounts. So you know what is real accounts. So when we deal with cash or bank or something. So nominal account. The rule is debit all expenses and losses, credit all incomes and gains. So nominal accounts are expenses and incomes, right? So accounting equation. So when we are recording accounting equation from the accounting point of view, when we see from accounting equation point of view, Assets normally have debit balances, liabilities and capital normally have credit balances. So remember, assets and expenses normally are debit balances. Okay, so liabilities and incomes are normally credit balances. So even you should know, it is noteworthy that capital is also a liability. So it means capital, liabilities and incomes are normally credit balances.
Hey, remember, I'm a trainer, not a tutor. I train you to pass, to succeed, to clear your exams, to get better marks, to excel in your studies, so that you understand and do better and best, the best. It's okay. I've been taking on classes. I'm aware of difficulties faced by various students, below average, above average. I analyze and understand what they don't really understand and how the students suffer. I feel their pulse and try to understand their difficulties, making the student understand the subject and making interesting for them to learn so that they excel in their studies is my core perspective. These days, a lot of students have various difficulties. They won't understand anything in the class. A lot of students who are pursuing online classes. A lot of students who are taken up distance learning classes face various difficulties in understanding the core concepts. So they try to understand, but most of the teachers have different methodologies to explain, and few students are unable to understand. It's a hard time for the students. Myself, not being just learned, but having understood the subject as a common sense, I'm a professional tutor, professional trainer, and educator, having on-job experience and theoretical knowledge in various subjects, such as direct taxes, indirect taxes, accounting, be it financial accounting, advanced financial accounting, cost accounting, advanced cost accounting, managerial accounting, advanced managerial accounting, management accounting, advanced management accounting, financial management, operations research, quantitative techniques, business mathematics, business statistics, business economics, business studies, and various other business management subjects. I even have on-hand experience in ERP, SAP, Tally, QuickBooks, and all. So I'm in a better position to explain the real logistical issues, the logistical problems, the core concepts in a better way. So a lot of students approach me near the exams for exam-oriented crash courses and exam-oriented coaching so that they pass their exams. I have a record 100% of my students clear my exams, clear their exams with ease. 100% they succeed. So I explain them as if they are novice, ignorant novice. Even the ignorant novice understands the subject easily. So I teach them as a common sense, because any subject is more a common sense than a subject. So a student should be capable of understanding the concepts so as to make their life easier. So learning becomes pleasure and enjoy. Anyone who is interested, who wants to clear their exams with ease, without any difficulties, may please get in touch with me. I am available anytime for them. 24/7, I am available for them. Thank you. Sharing is caring. So please subscribe, share to my channel, because Spreading knowledge only increases your knowledge. So, dear friends, welcome back. Let us continue with activity 7.2. So, Vikram is a sole trader who buys and sells goods, the trial balance. So, this is a question from statement of profit or loss. So, we need to prepare a statement of profit or loss. This is David Hopkins' latest book. So, applicable for 2025-26. So, we'll continue. Okay. So, let us just check out the items whatever are there. So before starting this, so let's have a recap of how the statement of profit or loss is prepared. So first, what are the line items? So statement heading, always we have tried the heading. So always, but sometimes it is given in the question paper itself. So anyways, we will just write down statement of profit or loss, whatever the trader's name and the period and all, or year or whatever. So what are the line items? So first one, it is revenue. So revenue is nothing but sales minus sales returns. So minus cost of sales. So cost of sales. So you know what is cost of sales? So opening inventory plus purchases minus purchase returns plus carriage inwards minus closing inventory. So that will give cost of sales. So when we subtract revenue, cost of sales from revenue, we get gross profit. To that gross profit, we add other income. So other income is like discount received, interest received, so rent receivable. So all other income which is not other than operating income will come here. So from that we subtract expenses. What are the expenses? Like expenses incurred, which are like salaries, wages, rent, postage and telephone, all those expenses are taken out. So that will give profit or loss. Profit or loss. So in just 5 steps, so very important. So learn this because often the questions are asked in AS level. Lot of questions are asked on income statements. So that's why we have been repeating this concept again and again. Like what are the steps and what are the contents. So it's very important. Okay. So now let us just have a look at the question. So carriage inwards. So this is forming cost of sales. This is forming part of cost of sales. So carriage outwards is expenses. So discount allowed is also expense. Discount received is other income. Heat and light expenses. Insurance expenses. Inventory at 1st April 2019. So this is cost of sales. Motor expenses. Purchases cost of sales. Purchase returns cost of sales. We have to subtract. So rent and rates expenses. Sales revenue. Sales returns revenue. Wages and salaries expenses. Was valued at 29,143. So this is also cost of sales. So this is how we have to do. Okay. So first, as soon as you see the question, you should visualize where these items will come. So you should visualize where these items will come, so that when you're doing the problem, you should be doing it like a bullet train. So very fast. You should be very fast because the questions will be very tricky sometimes. they will be very somewhat lengthy. If not one question, some other questions may be very tricky. So that's why you have to be very active. Okay, hyperactive. Otherwise, getting very good grades is not at all possible. Okay, so that is remember this. It's very important. So now let us continue to just so what is there? First, revenue. There are two items. So sales and sales returns. So that is what is in revenue. Revenue, it is sales and sales returns. So how much it is? Sales and sales returns is 354,987. Three nine eight five. So you need to write this. What is so it is sales. So this is sales returns. So that will give you 354,987.
So this is how the each and every account. So you have to do the posting. So then accordingly you have to prepare all the ledgers. So now we'll prepare ledger account.
351002.
See the transaction and then accordingly we have to prepare. So pick a row. We have purchased.
Okay. So okay. So let us do it in a proper way so that I don't want you to follow the same thing when you're writing. So let me just write it again in a proper format. So see, accounting as a subject is a presentation, more concerned about presentation. So all the steps should be as it is. All the steps should be very formal, very neat and clean, so that each and every concept is explained to the examiner. So first of all, we have to write the heading statement of profit or loss. So in the exams they would have given this actually. So it is not so important. Even then, if they are not given, so I am just writing here for your convenience. That's all. So if it is written, you don't have to write it. So first, we have to start with revenue. So revenue, under revenue, we'll have sales minus sales returns.
We have received discount and we have paid cash also. So the discount we have received is 360 and cash we have paid is 6,840. So we can see from the cash book. Then again burger also we have purchased from burger. So 5,550. So they are purchased.
So this is.
So we have we have paid cash to burger.
Okay. Next, always write the dollars currency in. Always you have to write. Don't forget to write this. So revenue. So on the top, if you write, it is applicable for all. So you don't have to write everywhere again. So minus cost of sales.
So then
what all is coming in cost of sales? Purchases. So below that, you need to write opening inventory. Okay, don't forget to write opening inventory. Follow, understand, remember, by heart, whatever. So always you have to write it in a proper sequence. Okay, so always. What they have given you, inventory at 1st April 2019. Inventory at 1st April 2019. Write the same line item, whatever they have written. See, what I advise you is as soon as you see the question, you can try answering the question on your own, and then you can cross check with the solution here, so that you can answer, you can be sure that whatever you have done is right, so that it will increase your confidence, it will boost your confidence, and it will help you prepare for examination with lot of comforts. Okay, so first you try on your own, then only you check this. Don't see this as a movie or as a video or something like that. So please try to work out the question on your own, and then you have to uh, have a look at this. This will be more effective. So learning should be more effective. So it should be with fun also, but it should be more effective as well. So try to answer the question on your own, and then you cross check with this solution whether you understood every concept, everything is clear or what. Okay, so inventory at 1st April 2019, 34096. 34096. Okay, then purchases. To that we need to add purchases. What are the purchases? Purchases 245110. So from this we need to subtract purchase returns. What is the purchase returns? Purchase returns are exactly reverse of purchases. So 5620. So to this we need to add carriage inwards, because when we purchase we get the goods inside. So by default carriage inwards 2305. Normally these are the line items normally. Okay, purchases minus purchase returns, carriage inwards. So from that we need to subtract inventory on 31st March. Inventory on 31st March 2020, which is given in adjustments. Always closing inventory is given in adjustments 29143. Always. So put it in bracket so that you don't mess up again. Lot of students, they mess up doing calculations. If they don't, if you don't put the numbers minus or something like this, you will just make wrong calculations. Ultimately, the figure will go wrong. So you lose marks. So very important. 34096. 34096 plus 2450 minus 562050 plus 2305 minus 29143. 246748. So the expenses total amount is 246748. So cost of sales are subtracted, so you put it in bracket again. This minus is for these items. Okay, so don't get confused again. So 104254. 104. I4. So this is, what do we call this? This is gross profit, correct? So gross profit. So this is gross profit. This is gross profit. So this is how it is. So to this we need to add other income. So this is a comprehensive question. So all items have again. This is a very good question for practice. Okay. So this is very good question for practice. Try to practice this. to learn the line items, so that all the line items are included in this, so it will be easier for you. So you kindly mark it as important and practice these questions. Often you practice this at least 3 to 4 times you practice, so that the concept is clear, and so that you don't miss out any line item. So yes, obviously there will be adjustments, lot of adjustments also will be there. So that is another thing, another part. But this is the starting point. So always you have to start with this. Then you have to incorporate the adjustments, whatever. So the format will be the same. So only you have to incorporate the adjustments. Okay. So practice this question. This is very good question, because lot of line items are there. Discount allowed. So exhaustive line items are there. So discount received. So this is other income. So this is other income. Discount received. 2067. Discount received. So you add this. So this will give you one amount. So we don't know the name of that amount. 067 106321. So from this we need to take out expenses. What are the expenses? Carriage outward 1, 2, 3, 4. Discount allowed 1888. Heat and light 3765. Insurance 4760. Motor expenses 5269. Rent and rates 14,400. So that's all. So these are the expenses. Okay. So these are the only expenses, nothing else. So how many line items are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15. Let us just check if you have taken everything. So 1, 2, 3, 4, 5, 6, 7. 8, 9, 10, 11, 12, 13, 14. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 line items. Is it correct? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So what we have left? Rent and rates carriage inward, carriage outward, discount allowed, discount received, return light, return light. This is
dated 7th March
return light.
and
And it is here taken.
so delivery van purchased
Motor expenses 5269.
delivery van purchased on credit.
Here taken motor expenses also. So let us cross check. So let us check line by line item. So how to cross check? Sales. Sales. Sales return. Sales return. So you need to learn even how to cross check sometimes. Okay. So we have to cross check. Otherwise, simply just for a matter of 1 minute, you will lose a lot of marks. Even 1 mark is very is of high importance. So don't be in a hurry. Don't try to mess up. So wages and salaries we have taken 67109. Let us just check 67109 wages and salaries. See, we have not taken wages and salaries. Okay. So like this, we may get it. So we don't have to. Now we don't have to. Okay. So now we don't have to verify because we have already done it. So we found out wages and salaries. There are 15 line items, right? So we have got all the 15 line items. 67109. 67109. So we have taken all the 15 items. So that is how we have to check. Okay. So when we have to cross check, we have to put the ticks like that, and then we have to cross check. So be careful. So 1, 2, 3, 4 plus 1 triple 8 plus 3, 7, 6, 5 plus 4, 7, 6. Nine eight four two five. 98 So when we subtract this from this, 7896. 7, 8, 9, 6. Profit. Okay, this is the answer 7896. This is how it is. So we have finished activity 7.2. So you can just have a recap like statement of profit was I always write the heading. So revenue sales minus sales returns. So write the items like this: cost of sales, inventory, purchases, purchase returns, carriage inwards, inventory at the end. So write down everything, then you get one figure. So this minus this will get gross profit. To that you add other income, you will get one value. From that you subtract all the other expenses, all the expenses. So you take out all the expenses, you add all this, I put it here. So because it is minus, you have put it in bracket. This minus this will give profit. This is done. Okay. So this is how it is. So now we can. So this is the end of activity question 7.2. It is 7.2. We will catch up in the next class. Till then, have a good day. Goodbye. Dear friends, welcome back to Shasha's virtual classroom. So, activity 7.3. Produce a statement of profit or loss for Samara. that shows the gross profit and profit and loss for the year. Samara, who is this Samara? Just let us have a look. It must be somewhere here. So a trial balance has been prepared for Samara. So see, okay. So this is the one. So a seller of women's clothing at 30th April 2020.
It has been posted to Gita.
Yeah.
It is entered in purchases.
So rent and rates is given. So here in the question they have given everything like this is an expense, this is asset. Asset will go to statement of financial position. Revenue is given. This is other revenue, discount received. Okay. So this is other income. So this will go to other income. So then carriage outwards expense, sales revenue, inventory. 1st April 2019, 1st May 2019. So is there anything new in this? So inventory at 1st May 2019, electricity, sales return, commission received, purchase returns. Discount allowed, purchases, trade receivables, wages, drawings will not come. So that will go to statement of financial position. So motor expenses, bank. So no much unique items. So I think you can try this question on your own. So even then, let me be just quick. Let me just finish it fast, so that you can cross check with the solutions. So this is very important topic. That's why I am doing this. So let us continue. Okay. So we'll start with income statement, statement of profit or loss. So first revenue, and that sales. What is sales?
So this is how you have to find the rectification.
40,800.
So here you will it should be debit column. It should be credit. Machine account debit, Utah account credit, sales account debit, finance account credit, delivery man account debit,
40,800.
sales returns account
Sales returns.
debit, Utah account debit, Sandra account. What is the amount? So
320.
amount is 1300.
So this one is this.
So all these are rectification entries. So if you observe, all these are rectification entries. None of these entries will come either in the neither of the books of primary, either in sales register, sales this one journal, nor in purchase journal, nor in sales return journal, nor in purchase return journal, nor in cash book.
Less.
Neither
Cost.
the books that will come in the residual credit journal. So carefully you have to do this. So
Opening inventory.
this is how we have to go. So this
On.
very entire chapter is based on this suspense account, rectification, suspense account. Lot of questions are asked in AS level, IGCSE
2100.
So you have to be very thorough in this aspect.
Purchases.
Very. So we'll catch up
22,600.
Yes, ma'am. These are exam practice questions from
Receive there are purchase returns.
primarily. So this is again from David Hopkins.
Yes, purchase returns are also there.
Exam practice question. So this is the number one.
How much? Pattern.
Volume purchase goods for 1,000 less 25% trade. So trade discount is never recorded, but should be considered. So that is
Carriage inwards.
1,000 minus 25% is 250. She was allowed a tax discount of 10%.
Inventory also you have taken.
Tax discount will be considered as an amount payment. So FU will also be passed. What amount she entered in as purchase? Purchase invoice you have
Let's check if carriage inward is there. Carriage inward.
discount is never recorded.
Carriage inward is there. Yes.
Trade discount is recorded. Trade discount is recorded, but cash discount is not recorded.
Carefully you have to see. Don't miss out any item.
Next. Lara purchase goods costing 1,800 less trade discount of 20%. So 1,800 minus. So this is equal to
Inventory at 30th April. Closing inventory we have to subtract. So 3760.
1,260. 1,260. Okay, so she was allowed a tax discount of 5%. She was allowed a tax discount of 5%. She has to pay less. So how much does she pay less? She has to pay 63. 5% of 5% of this. So 63 less. So this is 63. How much should Lara have to pay for the goods? This one more. So we will subtract this one.
20650. So that will give
Okay, there are exam style questions. So similar questions have been asked.
19830.
So these are not A-level exams, A-level questions. So but IGCSE also they have been asked.
Yes.
Coming to this
So this will give you, this is
overall
gross profit.
and invoice to Maria for 2,000.
What if it is gross profit? This is gross profit.
So okay, so 20,000.
This we add other income. So what is other income?
Trade discount will be considered, but
Commission received.
1,600 it should be avoided. Cora has opted to enter. She has omitted. Cora.
Discount received.
So as sent an invoice, she has to
Discount received.
enter in.
Commission received.
Not enter. So obviously what will happen? Sales amount will be understated by 1,600, not 2,000, because the trade discount will be recorded. So even RS amount also will be understated. 1,600.
How much is discount received?
She only has received a check of
50.
whether 15.
Commission received. Discount received.
How should this be
Commission
recorded?
received.
So what has happened? She has received a check. She has received a check of 1540. From that is
50. 4 is 0. Commission received 2340. Commission received 2340. Okay, correct. So this place, this is 2390. So you have to add here 2390. So this will give this plus this. 220 to 220. So this is profit plus gross profit plus other income. So there is no name for this particular line item. So forget it. Then expenses. You have to take out expenses. What are the expenses? So let us write all the expenses one by one. From the beginning, rent and rates 480. 480. Carriage out for 310. 310. Electricity 1180. 1180 electricity. Discount allowed 60. Wages 9700.
So this is a question from David Hopkins. So basically, it's a very small question. So, but in this lesson, we will go
Motor expenses 660.
how to balance. So balancing is nothing but totaling of all the values and then finding the difference and bring it at the right place.
So now you add all these expenses.
So this is the
480 plus
before preparation of
310
after this
plus
this is the next balance.
1
Before that we should know how to balance the ledger amount.
plus
First, value balance is prepared on the basis of balances of
9700 plus
so in this
6
question, this is small question. So first,
12390.
make a list of debits and credit so that
12390.
our writing the ledger entries will become easier. So let's classify
So
and write
20 to 20 to 20.
So trade notes savings,
Minus 12390 will give 9830. This is profit. This is profit. So remember, so this is that's all. So very simple question. So let us take a picture of the profit because we need it in the next activity. They have asked for the same activity. They have asked you to prepare statement of financial position. So take down the number 9830. You keep it securely. Safely means just remember it. And anyways, if you are doing it in a notebook, then it will always be there. So you can have just check and you can use it. So okay. So this is how it is. So just let's once again you can just cross check with the solution. So before attempting any of the questions, so my request is that you try answering the question on your own, then you cross check with the solution. So the same way we will be even doing the question papers also, like you will have to try on your own and then you have to cross check. So possibly we may discuss lot of concepts. We will if you have a look at all of my if you attend all my virtual classrooms, obviously you will be it will be full fledged discussion on various topics, including question papers, whether it is A levels, AS levels, even IGCSE also. So please refer my channel to your friends and relatives who are studying in A levels, IGCSE, so that it will be helpful for you, and vis-a-vis it will be motivation for me as well. So thank you. So you can just finish this, just have a look. So let me know if you have any concerns, if you have any doubts or anything like that in the comment section of this video, so that if there are any errors also, please let me know, because even I am a human, and there are chances that you human beings only commit mistakes, so that I can rectify my mistakes, and it will help other your fellow students also. So this is my humble request to you, all of my friends, my students. So this is the end of activity 7.3. So activity 7.3. So see you in the next class. Till then, have a good day, good night, all the best. Dear friends, welcome back to Shasha's virtual classroom. So this is a statement of profit or loss. This is David Hopkins' latest book. So today we'll discuss exam style questions. So similar questions are asked in AS level MCQ paper. So exam style questions. Which of the following should not be recorded? So just let us just have a look. So which of the following should not be recorded as an expense? Not be recorded as an expense in the statement of profit or loss. Yeah, delivery cost is an expense, discount allowed is an expense, insurance is an expense, drawings is not an expense. So which of the following is included in the calculation of cost of sales? Carriage inwards is included, yes. Carriage outward is not included, discount allowed is not included, discount received is not included. So the initial profit for the year in the statement of profit or loss was 17,500. However, a number of items have been omitted. So these all items have been omitted. So 1800 is this carriage inward. So discount received is 6200. Sales return is 4100. So which are the minus items? So carriage inward will, so loss, the initial profit. Okay, so initial profit. So there is a profit. So profit is 17,500. 17,500 is the profit. So carriage inward is 1800. So it is an expense. Whether it is a forming cost of sales or expenses, it is always an expense. So that will go to reduce the profit. So it will reduce the profit 1800. So discount received. Discount received is other income. So which increases. So increases the profit. Sales returns. Sales return is reverse of revenue, that is minus sales. So this will decrease the profit. So just let us just calculate. 17,500. 17,500 minus 1800 plus 6200 minus 4100. So 17,800. 17,800, yes. Yeah, this is the answer. So then after this, you have a trial balance. I mean, the trial balance extracted from week's 31st March. So let us just discuss this. So I'm not going to work out this I think you can work out this on your own. What is it asked here? So during the taken goods costing 2775 for his own use. So this one you have to subtract from purchases minus this. This has not been recorded in the books. Okay, inventory at 31st March was 19,830. Okay, so this you have to subtract. Then let us see what are the other items. Bank, this will go to statement of financial position. Bank loan will go to statement of financial position. Capital will go to statement of financial position. Carriage inwards, it is cost of sales. Carriage outwards, expenses. Discount allowed, expenses. Discount received, other income. So drawings, statement of financial position. Fixtures and fittings, statement of financial position. Heating and lighting, expenses. Inventory, so this is cost of sales. The land and building, statement of financial position. Expenses, office expenses, expenses. Office furniture will go to statement of financial position. Trade payables will go to statement of financial position. Trade purchases will go to cost of sales. Purchase returns, cost of sales. So trade receivables. Trade receivables will go to statement of financial position. Revenue, sales is nothing but sales minus sales returns. So this is nothing but revenue. So this should be subtracted from revenue. Wages is expenses. Again, closing inventory will go to cost of sales. So that's all. So now you can try this question on your own. So if you have any doubts, you can please let me know in the comment section. So it's very simple, you can do, because we have to do a lot of other stuff. So I'm not wasting time on doing this, because it is a very simple question. I think you can do this on your own. Okay, so this is the end of lesson statement of profit or loss. So we will be continuing statement of financial position in the next class. Till then, have a good day, good night, take care.
For international curriculum like IGCSE, O levels, AS levels, and A levels, clear understanding of the concepts. Remember, correlate application skills is a must. Proper practice and training is very prerequisite for scoring a plus.
I don't ever slow up, no, I don't take shit. I got no love for the fakeness. If you wanna play tough, you wanna hate this, I don't show up. I don't ever slow up, no, I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I wanna show up. In this statement, I don't ever slow up, no, I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up. And in this statement, everything I do, so instinctive is passionate. Every word I move, so restricted like an adjective. I got a bad better against people who got it. Negative, straight getting after it. I got facts over tracks, and that's getting slow, skinny fast. I can roast, I can class, think I'm okay at that, but I don't know if that can erase all the past and the pettiness. A reflection of the emptiness, hilarious. You're worth my time, you're delirious, mysterious, because you are behind the fake exterior, inferior. You.
Dear friends, welcome back. So today we'll be discussing accounting concepts. So this is lesson number 9 in David Hopkins. Lesson number 9 in David Hopkins. Okay. So you can read the book and you can understand most of it. But let me just explain to you in layman terms, like how you need to understand the concepts. So you need to understand the concepts. You can just read the book and you can understand, but let me have a brief overview, that's all. So the need for rules. What is the need for rules? So rules must be followed because accounts are used everywhere in the world. So different people should be able to understand what one person is telling about their financial position, financial results. So everyone in the world should be able to understand the statements prepared by any part of the country or any part of the world. So that is why we have to follow certain rules. So the rules are followed uniformly. So accounting concepts. So accounting concepts are again the same thing. Like some criteria is mandatory to be followed in preparation of books of accounts. So that is what is accounting concepts. What is duality? Duality means, duality says, according to duality, every debit has a credit. So it acts like a check. It acts like a check on the arithmetical accuracy and try to be more authentic and clean. Okay. So business entity concept. What is business entity concept? According to business entity concept, even though the owner of the business is the person who is running the business, he is considered as an outsider. So that is why the concept of capital and drawings come. Capital and drawings. That is why the concept of capital and drawings come. So similarly, all the transactions from the recorded from the business point of view. So that is what business entity concept says. Money measurement concepts. What is money measurement concept? According to money measurement concept, everything should be measurable in terms of money. All the business transactions should be measurable in terms of money. It cannot be recorded in kind. It cannot be recorded. No transaction can be recorded in quantitative or qualitative terms. It should be always measured in terms of money. So money means either in dollars or pounds or whatever. So historic cost. So normally the transactions are recorded at historic cost. So suppose one item has been purchased some 10 years back, it will be recorded at that price itself and that will be carried over. So we cannot assume and presume, we should not apply the current cost, the realizable value or whatever. So normally everything should be recorded at historic cost and that should be shown in the books of accounts. What does realization concept say? Realization concept says as soon as a sale is made and once an invoice is raised, it should be recorded as revenue. It should be recorded as revenue. But in case of goods sold on approval, goods on sale or approval, so what happens is it should be recorded as, the goods must be recorded as sale only when. So what is goods on sale or approval? What is goods on sale or approval? So what happens is a person sends goods to another person on the condition that if the person, the customer agrees, yes, the goods are of proper value, I have accepted, then it becomes a sale. So what happens in case of goods on sale or approval? So the goods are sent to the customer, the goods go out and he will receive the goods. Entries are made in stock book, but it will not be recorded as sale. So it should be recorded as sale only when the customer gives his consent, approval. Customer gives his consent or approval. So then only it will be considered as sale. Otherwise, it will not be considered as sale. It will be considered as goods in transit. Okay. So it should not be considered as sale itself. Goods on sale or approval. Consistency. What is consistency? See, there are certain rules, certain principles which the accountant follows. Suppose, let us say there are two methods of providing depreciation. One is straight line method and in one is written down value method. So What does the rule say? If one person follows, if the company follows straight line method, he should be following straight line method several years, throughout the years. He cannot shift from straight line method to return down value method, or from return down value method to straight line method. Or if you, when you come to management and cost and management, there you will come something across FIFO, AVCO, method of valuation of material. So if one company is following FIFO method, he should be following FIFO method. He cannot interchange to AVCO or vice versa. So they should be consistent in following the accounting principles. If they are following FIFO method in valuing inventory, they should follow FIFO method in valuing inventory. Suppose if they are following AVCO method, they will be following AVCO method of valuation of inventory. So it should be consistently followed. The rules must be consistently followed. Rules or methods. Methods must be consistently followed. So what is materiality? Materiality is dependent from person to person and from business to business. Suppose if it is a large company, small items may be written off as an expense. Small items may be written off. But because if it is a small company, then small items are also can be recorded as assets. So based on what type of business it is and what is the magnitude of the importance of that particular item, the items are recorded. So that is why it's called materiality, how material the particular item is. Based on that, the transactions should be recorded. Matching principle. So this is also known as an accrual principle. So matching principle means all the assets and liabilities, all incomes and expenses must be belonging to one specific period. So you cannot postpone or prepone any expenses or incomes or assets or liabilities from one period to another period. In recording one from one period to another period, they should match specific period. Specific period is very important. So periodicity. So a specific period, they should match all assets, liabilities, expenses and incomes should match for the specific period. If they are not belonging to that period, they should be taken out. That's all. So that is what is matching principle. What does prudence principle say? Prudence principle says that all probable losses should be accounted. All probable or prospective losses should be accounted, whereas all probable or prospective income should never be accounted unless they are realized. So prudence concept. So it is also known as conservatism concept. So it is known as prudential concept. So according to that, all probable or prospective items, if there are expenses or losses, they should be accounted. They should be considered and recorded in the books of accounts. Whereas if the items are incomes, all probable incomes, they should never be recorded unless otherwise they are realized. Going concern. What does going concern concept say? According to going concern concept, it is normally assumed that business will be continued forever. Business will be considered as running forever. Suppose if you say you will run the business for only 1 year, who will come and buy goods from you? Who will sell goods to you? No one will trade with you. So they will hesitate. What if you run away the other day? So that is why all businesses are going concern, means they are intended, they have been started with an intention to continue forever. Okay, very important concept. So often asked in the exams. So all these concepts are theory based concepts, but they are often asked. So you have to understand in layman terms, because when they ask in case studies or MCQs, you should be able to tell the answer. Substance over form. So what is substance over form? Like where you can say hire purchase. What happens in hire purchase? Unless you pay the last installment, the buyer will not become the owner. But in our accounts, what we do, from the day one, we consider them as assets, and we record, and we even charge the depreciation. So here, the legal form is that, legal substance is that the asset has not been transferred from the buyer to the seller. But in the form, it has become an asset to the of the seller. So the seller record them, and they even charge depreciation, and they show it as an asset in their books of accounts. But substance is that, but form is actually something else. So that is what it is. So then objectivity. What is objectivity? All transactions must be evidence. There should not be any bias. There should not be any bias. So there should be proof for every business transaction. There should be evidence, proof or evidence for every business transaction. So it's very important. So that is how it is. So understand. So you can read the book. You can read the text based on this. So try to understand in layman terms how it is, what it is. So a lot of questions are often asked regularly on these concepts, so that particularly MCQs, case studies. So they are asked. So you should be aware of these basic concepts. They are very important. Theory, but very important. Please go through. So in the next class, we'll discuss exam style questions from this lesson. So the concept will be more clearer to you. So till then, have a good day. Dear friends, exam style questions from accounting concepts. Okay, so let's discuss exam sales to questions from accounting concepts. The owner of a business paid for some repairs made on his wife's car out of the business bank account. The amount was debited to his drawings account. Which concept was applied? Obviously, business entity concept. So according to business entity concept, the owner is considered as an outsider. That's why whatever money is taken out from the business is considered as his drawings. It is recorded from there. So not matching, not proving, not this. So this is the right answer. So business entity concept. A trader paid $700 for business insurance, but 100 out of this related to first 2 months of next year. Which accounting concept has been applied? So obviously matching concept. Why matching concept? Because we have to, the expenses and incomes of that period should match. It should be related to that specific period. So if next year, 2 months of the next year should never be accounted. So you should account only the expenses of that particular period. So this is correct. So matching principle has been applied. Matching concept has been applied. So next. In sales ledger, total 24,000. A customer who owes $1,500 is known to be in severe financial difficulties and may go out of business. The figure of trade receivables shown in the statement of financial position is 22,500. So you have recorded probable loss, prospective loss. So you have applied prudence concept. Because you have prudential, So you are conservative, so you are prudential. You have accepted, you have followed prudence concept. Okay. So a trader sends goods on sale or return to a customer. When the trader prepares her statement of financial position, the customer has still not indicated that she has accepted the goods. Which concept should be a trader while she prepares her account? So realization concept. So realization concept is applicable because realization concept says that when the goods are sent on return on approval, it should not be recorded as sales unless the person to whom the goods have been sent indicates his assent to buy. So assent. To buy. So that is why it is called realization concept. So realization concept is applied. So this is the end of see it's how so simple, so easy concept, but very important. The questions are often asked in AS level, so very important topic. So very easy also. So easily it's scoring. So please get a hold of this. Try to answer more and more questions and get a hold of this. Okay. So let's catch up in the next class. Till then, have a good day. Good night. So dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing exam style questions from Statement of Financial Position, David Hopkins' latest book. So you can just answer yourself and then cross check with the solutions here. So the owner of a business has taken goods for her own use. She has withdrawn, but no entry has been made in the books to record this. Which row will show the effect of this? Which row will show effect of this on the statement of financial position? So she has taken drawings, she has taken goods, but it has not been entered. So what will happen? So inventory will be showing more. So it is not possible. This cannot be, this cannot be, this cannot be, this can be, and this can be. So because you have taken out the inventory and you have not shown, so it will be showing more. So what will happen on the credit side? I mean, the other effect, the capital you should have credited the capital. You should have taken out from the capital. So it is impossible that it cannot have any effect on capital. It will be too large. So obviously, yes, capital will be too large because it would not have been debited. So this is the option. D is the answer. The following information has been extracted from a statement of financial position at 31st March 2020. So what was the balance on the capital account at 31st March 2020? So they are given non-current assets, current assets. So what is the total assets? Add up this. So any other assets are there? Current liability is a liability, long-term loan is a liability, profit so will come in the capital. So drawings also will come in the capital. Profit will obviously credit itself. Drawings will be obviously minus figure, right? So it would have been subtracted. So this you add both 1275 plus 54,275 plus 54. So the total assets is 3,29,000. So the total liability should be equal to this. So this should be the so assets will be equal to liability. So you know in accounting equation, assets is equal to liabilities plus capital. So you know assets. So assets are 329,000. So 329,000 is equal to liabilities plus capital. Liabilities is what? This and these are liabilities. 28,000 plus 67,000. 28,000 plus 67. So 95,000. So 90,000. So plus capital. Capital is not given. So it is balancing figure. But they have given other items. So they have given, this is eliminated, only these two are given. So 31,000 minus 42,000. So it is 9,000. 11,000 minus 11,000. So here it is minus 11,000. So minus 11,000 plus x, some amount. Okay, so there is some amount which is x. So you need to simplify. So what you will do? You take this side. So 3,29,000 minus 95,000 is 3,29,000 minus 95 is 234,000. 234,000. So this you can take out this also. This side minus 11,000. This is already minus, so it will become plus. This is already minus, no? Minus 11,000, right? Because it is drawings. Minus 11,000. You put it in bracket, right? So this will become plus when this comes this side. So basic maths, if you are bad in basic maths, so I can just show you here. Assets is equal to liabilities plus capital. So assets is 329,000. 329,000 is equal to liabilities. Liabilities is this plus this 95,000. 95,000 plus capital. We don't know, so we can keep it as it is capital. We write it as capital itself. So now 3,329,000 minus 95,000 is equal to capital. So 329,000 minus 95,000 is 234,000. 234,000 is equal to capital. But in capital, this includes one figure. This is what all is here. This side 31,000 minus 42,000. See, opening capital plus profit minus drawings. Correct? So this is what is capital, right? So capital is profit drawings. Opening capital plus profit minus drawings. So now you do one thing. So you keep opening capital this side. You just take out profit also this side. You take out you take drawings also this side. So what will happen? 334,000. So plus profit will become minus profit. So you know this is basic maths. So when plus comes this side, it becomes minus. So minus becomes plus. So minus drawings will become plus drawings is equal to opening capital. Opening capital, you keep as opening capital here itself as it is. So now opening 234,000 minus what is profit? Profit is 31,000. What is drawings? 44,000, 42,000. Drawings is 42,000. Is equal to opening capital. So now subtract all this. Let us see. Calculate 234 minus 31 plus 42 is 245 is equal to opening capital. So this is what we want, right? So this is what we want. So 245,000 is the answer. So the answer is 245,000. So it is simple. If you know basic maths, then it's very simple. Otherwise, it's a bit complicated. But by understanding this, by doing this in these particular steps, you can do it easily. Okay. So this is done. Then the next one, let us see what is there in the next question. Which of the following is not correct? Assets is equal to liabilities plus capital. This is correct. Capital is equal to assets minus liabilities. So capital you keep here. Assets minus liabilities. This is also correct. Capital minus liabilities is equal to assets. This is wrong. So this have to be both the sides. This is wrong. So liabilities is equal to liabilities you keep here. Assets will come here, or you keep this side. Assets minus capital. This is correct. So this is wrong. So this is the answer. Which of the following is not correct? So C is not correct. That's it. Okay. Next. Fourth one. The following trial balance have been extracted from Exxon books at 31st December 2019. So advertising, bank, capital, all these things they are given. So expenses all is given. So inventory at 31st December, profit for the year was 50,756. Okay. So prepare X and S's statement of financial position for the year ended December 31st December 2019. So very simple question. I think you should be able to do it in a quicker time. So let's have a competition. Let's check who can do it faster. So whether you or me. So and we will see who will be right. Okay. So you can just start working out, and you can just visit this solution once again after you have finished it. So so let's start.
Liabilities and revenues are all trade balance. So what are liabilities? Liabilities are something we owe, right? So liabilities can be
Non-current assets.
So external is capital.
What are non-current assets?
So external are like loans, accounts payable, all these are so all payables are
Equipment, picture.
So whether they are internal or external, they are always trade balances, revenue or income, all trade balances, always. So unnecessarily
What is equipment? How much is equipment? Equipment is 42,190.
we can do. We have to just identify whether
Picture is 29,234. So that's all. Non-current. Motor vehicles is 17,459. So that's all. So no other correct. So this is non-current assets. Now come to current assets. Just total this and put it 42,190 plus 29,234 29,234 plus 17,459 double eight 883 double eight 3. Current assets. So let us see what are the current assets. So bank balance is there. So first let us make a list.
So what is required? Rank is required. This 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 is not required. This is required. This is required. This is not required. This is required. This is not required. This is not required. This is required. This and this is not required. Okay. So in this, what all we have taken? So now come to current assets. What are the current assets? Inventory. Inventory is given here. In the question 35331 inventory. Remember ITC? Inventory. Always write it. Remember it. ITC. Remember ITC. Inventory should come first. Inventories. 35331. 35331. T trade receivables. Trade receivables. How much is trade receivables? 26043. 043 trade receivables. Then ITC cash. Cash in hand is there? No cash. Bank balance is there. Bank balance is there. 8802. Add and write. 35331. 35331 plus 26043 plus 8802 70176. 70176. Add this. 159059. 159059. Total assets. Okay, so now capital on the liability side, capital. So opening capital. What is opening capital? Opening capital is given here. 71,400 less drawings 51,500 less profit. What is the profit? Five 0756. So just calculate 71,400 plus 50756 minus 51,500 229. Done. How is it possible?
So dear friends, so we have to show the virtual classroom. So we'll be
Not be wait. There is some mistake.
practice questions. So this is again from David Hopkins. Similar
71,400 minus 51,500 plus 50,756, right?
Yes, 50,756. 50,756. 70656.
Multiple choice. The purchase of an office computer has been debited to
70656. 70656. So this is open or capital. So now comes current, non-current liabilities. Non-current liabilities. So bank loan. So repayable by 2023. So how much? 46006.
and even net current assets is also
46006. So current liabilities.
non-current. When you don't show,
Current liabilities. What all is included in current liabilities?
okay,
Current liabilities.
so the
Trade payables 42397.
that no entry has been made in the so the fact is so it has not been made. So what happens? How that row will show the effect of this on the statement of
42397.
so
Now we add
inventory will be showing higher.
S
Inventory will be showing higher
46006.
because inventory has not been recorded. Balance has not been recorded. So it will be showing it will be overstated. What will be overstated? Inventory will be
159059.
so then
159059. So this is total liabilities.
so the capital asset will be overstated. So this is
159059. So total assets 159059. So this is statement of financial position, non-current assets. This one, non-current liability, non-current assets, current assets, total assets, capital, non-current liabilities, current liabilities, total 159059. So we're done. So this is the end of statement of financial position lesson. So practice more and more questions because questions are often asked from statement of financial position, and you have to be very fast. And along with this, you may have to do a lot of adjustment questions also. So which we will be continuing from the next class. So the next class is based on theory, so but very important. So I have observed a lot of students, they ignore theory, they focus only on practical question thinking they are more important, and theory is less important. So they don't do that. So everything is important, everything is scoring. So please try to learn everything. Okay, so don't skip anything at all. So have a good day, good night, take care, bye.
you just straight away see this and you will see so that's why the concept are very
Dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing statement of financial statements, statement of financial position. Okay, so today
be conceptually better, be conceptually strong to secure A plus in A levels. Okay, so don't be
so this is David Hopkins' latest book. We'll discuss activity 8.1. So before having looking into this, I would request you to try answering the question on your own. So from whatever you have learned in school, from your teacher, from wherever, so then you can cross check with the solution so that you can confirm your understanding. Okay, so activity 8.1. Chennai, a sole trader, had a capital account balance of 89,350 on 1st April 2019. During the year Jana made drawings of 22,720. Prepare the capital account. Okay, so capital account. If the profit for their of $26,390 had been made. So close the closing capital. Next one, B. This is part A. This is part B. Calculate the closing capital using the listing approach. If a profit for the year of 26,390 had been made. So
So we have statement of financial position, one simple problem also we had an MCQ also. So we have understood the concept very clearly. So please share, please spread the knowledge, please share so that others also get the benefit of my classes. Okay, so please share. Thank you. Have a good day. Good night.